So, we'll start with PGBP right now. So friends, listen. Whenever we are discussing PGBP, the first thing that you should know how to compute an income under PGBP, okay? So we will start with the computational format in PGBP. So please listen. How to compute an income under PGBP. In examination, if there is a question in relation to the PGBP, then what are the things, where should you start? That is the first thing that we are saying. So the charging section under PGBP, or we can say the income under PGBP. Section 28 is the income from business or profession. This is the first thing that you should know. Which all are the main incomes that are coming under PGBP. Then from section 30 to 37, it is deductions. It is deductions from the taxable income. So section 30 to 37 is all about what, friends? Deductions. Then after this, there are certain things that is called as disallowances. Disallowances under section 40 and 40A. Two set of disallowances we have. What is disallowance? What is disallowance? Expenses you have incurred but not allowed as deduction. You have incurred some expenses in some nature or in certain circumstances. It is not allowed as deduction. That is called as what? Disallowances. Thereafter, after the disallowance, there is a restriction that is called as, or we can say one more disallowance. 40 and 40A, we completed that. And there is other administrative sections. Other administrative sections. Under that, we will be discussing section 43B only. Okay. Because I am not covering 44AA, AB, AD, ADA, AE, etc. Presumptive taxation, books of accounts, then tax audit and all I am not covering because they are administrative sections. So in the administrative section, we will be covering only 43B. And what is 43B? Certain expenses are allowed as a deduction on actual payment basis. That is said to be 43B that I will be covering. So these are the things that we are about to discuss in section, in this chapter, PGBP. But this will take a lot of time, okay? Because compared to salary, we have to focus more on PGBP because every attempt in the history of ICAI, there will be one question, both in inter as well as in final. Both in inter and final, there will be one question from PGBP. Without that, there is no attempt at all in the history of our CA examination. Both inter and final, there will be one question. Or I can say that question will be not exclusively from PGBP. It will be a computation of total income question, but 90% of the adjustment will be from this particular chapter. So we will start with the section 28. That means the income chargeable under PGBP. So section 28, can you read the heading? Income chargeable under PGBP. First of all, you tell me what you mean by business. I'm doing some trade, commerce or a manufacture and that activity is recurring. And that activity is recurring. Again and again and again, I'm doing that and generating income. That will become as my business activity. So that recurrence is an important factor to determine whether an income is taxable under PGBP or not. Are you with me? Second one, what do you mean by professional income? Out of my skill, experience, expertise, knowledge, etc. If I'm able to generate some income, that income is said to be what? Professional income. It is not necessary that I should have a degree certificate from a recognized university. It is not necessary. Say I am an artist, an actor. Whether I have studied in some film institute or not, if I'm able to generate income out of my acting, then definitely that income will be professional income. Are you with me? Say I am a painter. Okay, I'm a painter, natural talent. Okay, I haven't studied any painting or drawing anything from anywhere. But if I'm getting some income, that income will be under PGBP, professional income, because it is not necessary that you should have a degree certificate to earn a professional income. From your experience, expertise, knowledge, etc. If you're able to generate some income, then definitely that can be called as a professional income. Are you with me? Are you with me? So this is what is called as the PGBP, that is professional or business income. So the first item under here is, can you read the first item? Income arising to any person by way of profits and gains from business or profession or vocation. That means any activity similar to profession. Say I am a personality developer. I am doing the personality development, or a motivator or a skill trainer. Always all the incomes will come under PGBP. Nowadays these kinds of activities are there. Skill trainers, what do you say? Motivational speakers. They are also generating income. And most of the corporates are calling them because they want to make people more oriented. Okay, come again. For the communication skill also, mostly they used to hire certain people, and they will bring and they will try to boost the confidence of the listeners. Yeah. So this is what happens right now. And for students also, a kind of an orientation classes by ICAI. And it is called as what right now? MCT. No, orientation only. But there is something called MCT. That's only in final right now. That is GMCS. Okay, GMCS is still there in the new syllabus. MCS it is. Oh, MCS. Yeah. So at our time it was orientation is there, ITT was there, GMCS was there. That's it, 3 programs. Right now ITT, advanced ITT, then GMCS, MCS maybe, then orientation, advanced orientation. No. It's Bora. ITT Bore. ITT Bore, okay. Then tell that, write a letter to the institute to show Indian 2 in ITT. Okay, then it will be even more boring. All right. So, yeah. So coming back to the point, friends, income arising to a person by way of profits and gains from business or profession or any vocation will be taxable under PGBP. Now friends, listen. Along with this, there are certain other items also have to be taxed under PGBP. Are you with me? Apart from your direct business or professional income, there should be some other items also that should be mandatorily taxed under PGBP, and I have selected a few items. Number 1, any interest, salary, bonus, commission or remuneration due to or received by a partner of a partnership firm. The firm means partnership firm. Listen, I am a partner of a partnership firm. I am what? A partner of a partnership firm. I am getting interest on capital. I am getting what? Interest on capital. Or I am getting remuneration. Say I am a working partner, I am getting remuneration. You tell me, is that remuneration taxable under salary? No, that remuneration is not taxable under salary. Rather, you have to tax it under PGBP. Are you with me? Are you with me? Similarly, if I am getting interest on loan from a partnership firm, that interest on loan also have to be taxed under PGBP in the hands of partner. Because for the partner, both are income. For the partnership firm, both are expense. For the partnership firm, both are expense, and for the partner, both are income. Are you with me? Now, since we have discussed this point, let me straight away jump into a disallowance. Okay, let me straight away jump into a disallowance and come back. 40B. You might have studied that 40B in your regular classes. We will complete 40B and we'll come back. Okay. So listen, because it has a connection. It has a connection. So if I explain it right now, you will understand it in a better manner. So straight away jump into page number 29. Straight away jump into page number 29 of our revision material. In page number 29, this is actually very important. I think in May 23, if I'm not wrong, they have asked the question, compute the total income of a partner. Compute the total income of a partner, and they have adjusted the thing which I'm about to discuss right now. Are you all with me? So listen. Section 40B, what they are saying is, it's a ceiling limit on interest on capital and remuneration to the partners. So I'll draw a chart over here. So I want all of you to be super attentive here. Okay. So this chart is a combined interpretation of section 40B, section 28 and section 10 subsection 2A. 3 things we are about to discuss right now. So please listen. So say this chart contains section 28, then section 40B and section 10 2A. Listen, say you are a partnership firm. You are what? A partnership firm. And there is a partner. There is a partner. Now listen, say this partnership firm is paying interest on capital to that particular partner, or they are paying a remuneration to working partner. Remuneration to working partner. So listen, there is a partnership firm, PF, and there are certain partners, and to the partners, this partnership firm is paying what? Interest on capital and remuneration to the working partners. Now you tell me, these two expenses or these two items are actually expenses for the partnership firm. These two items are actually expenses for the partnership firm. The partnership firm is actually doing some business and they are making some profits out of it. From that profit, they can claim this interest on capital as well as the remuneration to partners as what? A deduction, but subjected to certain ceiling limits. That's what we are about to discuss right now. Are you with me? Are you with me? Now let's understand what is the ceiling limit. That means deduction for interest and remuneration is subjected to section 40B. Deduction for interest and remuneration is actually subjected to section 40B. Now listen friends, listen. What is the deduction? That's what we are about to discuss right now. Let's complete the deduction and come back to the chart. Okay, let's complete 40B, then 28 and 10-2A, then we will complete the chart as well. So going back to section 40B, can you read the first box under that? Interest on capital to partners. What is interest on capital? Every partner will infuse money to that partnership firm as what? Capital. And the partnership firm has to pay interest to that particular partner. It's not mandatory, okay? It's the wish of partnership firm. If they are paying interest on capital, then that is an expense for the partnership firm. And the partnership firm can claim that interest as a deduction. But there is a ceiling limit. And can you tell me how much is the ceiling limit? Maximum deduction shall be 12% on the capital. The firm can claim a deduction of how much? Only 12% on the capital. Are you with me? Are you with me? What if the firm is paying 10% interest on capital? Then what will happen? Can they claim 12% as deduction? No. Maximum is 12. That is always subjected to the actual interest. If the firm is paying an interest of 10% on the capital, then they can claim only that 10% as deduction. If the firm is paying 14% as interest, then they can only claim 12% as capital. Sorry, 12% as deduction. So listen, we'll create an example. Say the capital, forget about remuneration, okay? Forget about remuneration for the time being. Say the capital invested by the partner is say 10 lakh. 10 lakh is the capital invested by the partner. $10 lakh is the capital invested by the partner, and the partnership firm used to give interest at 14%. Interest at what rate, friends? 14%. So can you tell me how much will be the interest? How much will be the interest on capital paid by the partnership firm to the partner? Actual interest. Actual interest will be 1,40,000. This is the actual interest. Are you with me? But partnership firm can claim only how much? 12%. That is 1,20,000. So maximum deduction under section 40B will be at 12% on the capital. That is 1,20,000. So how much is the disallowance? 20,000 is the disallowance for partnership firm. Are you with me? Are you with me? So when you compute the total income of a partnership firm, and the partnership firm is paying an interest which is more than 12% to the partner on the capital, then maximum deduction shall be how much? Only 12%. Are you all with me? Now there is a thing. What is the actual money paid by the partnership firm to the partner? They paid actually 1 lakh 40. But in the books of accounts, partnership firm can claim only 12% as deduction. Then what will happen to that 20,000 rupees? What will happen to that 20,000 rupees in the hands of partnership firm? It will add back to the profits. Yes or no? But this 20,000 money is with the partner right now because they paid 1 lakh 40. Only 1 lakh 20 is deductible. So that 20,000 rupees is with the partner. Now you need to understand one thing. The partner has received how much? 1 lakh 40,000 received in total. The partner has received how much? 1 lakh 40,000 rupees as interest in total. Are you all with me? Out of this 1 lakh 40, only 1 lakh 20 have to be treated as interest on capital. Only 1 lakh 20 will be treated as interest on capital and taxable under section 28. Are you with me? Only 1 lakh 20,000 shall be interest on capital and that 1 lakh 20 only will be taxable under section 28. So my question is, what will happen to the 20,000? What will be happen to the 20,000? It is added back with the profits of the partnership firm, no doubt. But right now the 20,000 money is with the partner. Partner is not required to pay back that to the partnership firm. What will happen to the 20,000? That 20,000 will be treated as a share of profit given by the partnership firm to the partner. It is not interest, it is because income tax department only added back that 20,000 to the profits. But that 20,000 is now with the partner. So that 20 will be treated as what? Share of profit distributed by the partnership firm to the partner. Are you with me? To be treated as share of profit distributed by partnership firm to partner. Now there is an interesting thing. Under section 10(2)(a), the share of profit is fully exempted. Is exempted in the hands of partner. Share of profits are fully exempted in the hands of partner. Are you all with me? Is that point clear? So very simple, friends. See, imagine a situation. Income tax department only told that only 1 lakh 20 out of 140, only 1 lakh 20 is the deductible interest. Yes or no? They told this to the partnership firm. But the partnership firm have given 1 lakh 40 to the partner. So out of that 1 lakh 40, only 1 lakh 20 will become what? Interest on capital received by the partner. The rest 20,000 have to be treated as share of profit distributed by the partnership firm to the partner. Even though it is called as interest, that will be treated as share of profit received by the partner, and that 20 shall be fully exempted in the hands of the partner. This has been tested in, I think, May 23, if I'm not wrong. Okay, May 23, if I'm not wrong, this has been tested. Are you all with me? Is that point clear? Online friends, please respond. Are you all here? So when we say interest on capital taxable under section 28, one thing you should understand, the same amount should be deductible in the hands of the partnership firm as well. Only those amount which is deductible in the hands of partnership firm will be treated as taxable income in the hands of partner. Are you all with me? Are you with me? It should be two-way. It should be two-way. You have to go to there and you have to come back. It is like that. It should be always a two-way. So what they are saying is, if the partnership firm is, they can deduct that interest, that deducted amount will be taxable in the hands of the partner. The rest will be treated as share of profit distribution. I hope it is clear. Moving on. Moving on. Interest on partner's hand. Okay. That's what I've written. Interest on partner's hand, 1 lakh 20. The rest 20,000 shall be exempted. Okay. Not assume. Question in May 23. Right now, if I explain that question, you will run away. Because first of all, we have to complete the 5 heads. That question is computation of total income question. Okay, one of the adjustment is this. I think I have taken that question. I'm not sure whether I have taken that question. Yes, I think this is the one. May 22, sorry, it's May 22. 14 mark question. This is the one. Interest received amounting to 2 lakh and all. This is there. But first let us complete the 5 heads. Then we will discuss this question, okay? It is there. 14 mark question, May 22. I've selected this question, okay? Yeah. So, yes. I hope you understood this. So, have you written this? I mean, have you taken a copy of this? And one interesting factor is it has an amendment this time. In this budget, the budget announced today, it has been amended. Rates have been changed. That don't worry. For you, it's not applicable. Okay, just said out of that to share that information. That's it. Okay, so either take a picture and share it to the respective group, or that's better rather than wasting time on copying. Just click a picture. Then what will happen to the old RAIM and default RAIM? Means what? We haven't discussed anything related to default RAIM, okay? So please wait. Sir, anyone have the question which is sir show in the... Don't worry, that question is there in your question sheet, okay? That I'll make you solve when you compute the total income chapter, not right now. Yeah. So friends, listen. Listen. Shh. Likewise, there is one more thing that they are saying. Can you read the next heading? Deduction on remuneration to the working partner. So let's understand. No, I meant the question PDF. Oh, you didn't get the question PDF yet. I think it is there in the group, okay? It is. Can someone pin that in the group? Pin that. Only admin can pin. Different? There are 2 groups actually. One for online and one for face-to-face. Okay. I don't have any access to any of the groups. Okay. So, yeah. So somebody pin that particular, question sheet in the meeting. Sorry, not meeting group. Okay. Yeah. So coming back to the point, friends, listen. Shh. Deduction on remuneration to working partner. What do you mean by remuneration to working partner? Keep quiet. What do you mean by remuneration to working partner? Come again? Say for example, if you are a working partner and the company is paying you remuneration, then the partnership firm is paying you remuneration, then the partnership firm can claim that remuneration paid to a partner as a deduction. The partnership firm can claim remuneration paid to the partner as a deduction, provided that partner should be a working partner. There are different types of partner in a partnership firm. Sleeping partner, nominal partner, minor as a partner, partner by estoppel or holding out, and working partner. Only working partner salary paid by the firm to the partner shall be deductible. The rest you cannot deduct. Are you with me? Are you with me? So, there is a ceiling limit for that particular deduction, and let's understand what exactly is the ceiling limit. So can you read the heading? Book profit and quantum of deduction. That simply means book profit, based on a percentage of book profit, you have to compute that particular ceiling limit. What is book profit? I'll tell you later. So please be attentive. So can you read the first limit? On the first 3 lakh of book profit, or in the case of loss, the quantum of deduction shall be either 1,50,000 or 90% of the book profit, whichever is higher. Are you with me? Are you with me? And on the balance book profit, how much is the limit? 60% of the book profit. So I'll give you an example too for a better understanding of this provision. Say a partnership firm's book profit is 10 lakhs. A partnership firm's book profit is say 10 lakhs. What is book profit? I'll tell you later, okay? How do you compute the ceiling limit? for remuneration under section 40B, out of this 10, first you take 3 lakh book profit. Then how much is the maximum? Either rupees 1,50,000 standard figure or 90% of 3 lakh, whichever is higher. How much is 90% of 3 lakh? 2,70,000. So you have to pick the 2,70,000. On the balance book profit, how much is the balance book profit? 7 lakh, because it was total 10 and the balance will be 7. 7 lakh into 60%, and how much is 60%? 4,20,000. So altogether, how much is the maximum remuneration? 6,90,000 is the maximum remuneration payable by the partnership firm. This is always subjected to actuals. If the actual remuneration paid by a firm to a partner is 5, you will only get deduction for 5. This is not to one partner. This is not in a month. This is to all partners aggregate in a year. A partnership firm shall not pay more than 4,90,000. Not more than 4,90,000. Are you all here? Are you all here? Now you tell me, what if the partnership firm is paying 7 lakh as remuneration to a partner? Maximum limit is 70. There is only one working partner in a partnership firm. The other partners are, say, sleeping. And the partnership firm is paying 7 lakh as remuneration. Then the partnership firm will get a deduction only for 690. Yes or no? But the partner got 7. What will happen to the 10? That 10 again will be treated as share of profit. That will be disallowed in the hands of partnership firm, but that will be treated as share of profit in the hands of partner, that working partner, and it will be fully exempted. And what will happen to the 6,90,000? That will be taxable in the hands of partner under section 28. Even though it is remuneration, since there is no employer-employee relationship between a partner and a partnership firm, this remuneration have to be taxed under section 28. Have you understood the connection between 28, 40B and 10 subsection 2A? Have you understood? So 3 sections, it's in one league. 40B, that is deduction for the partnership firm. Section 28, that deducted amount will become income in the hands of partner. And 10-2A, apart from that, whatever given by the partnership firm to the partner shall be fully exempted. These 3 are under 3, places. These 3 are under 3 places. You should identify these kinds of things. Are you with me? They will mix it up. They will definitely mix it up, such things in exam. Laita the confuser. There is nothing. Okay. You remember this example, that's it. So I will make you understand, don't worry. Another say crystal clear. Okay. I am getting confused right now. Sir, we have 3 working partners in a firm. Each partner get 5 lakh per annum. In this case, what is this? Okay. In this case, also the limit is 6.9. Yes. Altogether 6.9. In between the partners, that you adjust. Okay. In between the partners, you adjust. Total 15 lakh you paid, only 6.9 you will get a deduction. The rest have to be treated as share of profit. That proportionately you can claim. 6.9 divided by 3 to each partner will be the remuneration received by each partner. Yes. Are you all with me? Now friends, there is one interesting thing, that is what is book profit. Let's understand what is book profit. So book profit, very simple book profit. So can you read the definition for book profit? Book profit simply means current year profits as per Pgbp before adjusting remuneration and brought forward business loss. Very simple. To compute book profit, you consider everything from 28 to 44C. All the expenses, deductions, all the income, everything under Pgbp you adjust. Except brought forward business loss. What is brought forward business loss? Last year's business loss. That is current year income only you have to consider as book profit. Don't adjust remuneration. Why? That's what we are about to compute. Are you with me? Except remuneration and last year's business loss, you adjust everything under Pgbp, you will get one figure. That figure is said to be what? Book profit. On that figure's percentage, you have to compute the ceiling limit, and that is the deductible expenditure under 40B. Is that clear? Is that clear? Everything under Pgbp includes interest. Okay, interest is also under 40B. Everything under Pgbp includes what? Interest on capital as well. Have you understood what I said? If not, don't worry, I'll make you solve a small question to get a better clarity over this provision. So, I'll make you solve a small question, okay? Oh, that question is actually in 2 pages. Yeah, but I hope you can manage. It's actually in 2 pages, but just go through this question number 11 and give me the answer. Just go through this question number 11 and give me the answer. So, shall we solve it together? Listen. Keep quiet and listen. Rao and Jane, a partnership firm consisting of 2 partners, reports a net profit of 7 lakh before deduction of the following items. So, their partnership firm have already computed a net profit. Okay, how much is the net profit computed? 7 lakhs. And this net profit is before adjusting the following items. What is item number 1? Salary of 20,000 each per month payable to working partner of the firm as authorized by the deed of partnership. So they paid some salary. Don't deduct that. Why? They paid some salary to some working partners. Don't deduct that. Why? Because we need to compute the book profit and check whether that amount paid is within the ceiling limit. Yes or no? Yes or no? Not already deducted. Reports a net profit before a deduction of the following items. That's what they are saying. Okay. Now, what is item number 2? Depreciation on plant and machinery under section 32. Computed 1,50,000. So you tell me what to do. What to do? That is depreciation. Depreciation is an allowable deduction. Tomorrow we will study about depreciation, section 32. So, depreciation section 32 is definitely a deductible expenditure. How much is that? 1,50,000 you can claim as a deduction. Now, how about the next one? Interest on capital 15% per annum as per the deed of partnership. The amount of capital eligible for interest is 5 lakh. So they have actually paid 5 lakh into 15% as interest. And how much will be the amount? 75,000. But you cannot claim that entire 75 paid as a deduction. Why? Only 12% is allowed as deduction. That means how much 12%? 60,000. So 60,000 is only allowed as deduction for the partnership firm. So you have to take that 60,000 interest on capital. We are computing the total income of partnership firm. Okay. So only 60,000 is allowed as deduction. Now you tell me what is the next one. This is it. Compute the book profit of the firm under 40B of Income Tax Act 1961. So can you help me? How much is the book profit? Book profit. Book profit means you adjust everything under Pgbp, but don't adjust the remuneration as well as don't adjust brought forward business loss. That's what we have learned. Are you with me? So we have adjusted everything apart from remuneration, and there is no brought forward business loss in this question. So can you help me with the figure? How much is the book profit? 4,90,000 is the book profit. Are you with me? Now, if 4,90,000 is the book profit, how do you compute the ceiling limit? Ceiling limit. So, what to do? Ceiling limit, that what they are saying is, out of 4,90,000, you take 3 lakh first into 90% or rupees 1,50,000, whichever is higher. 3,90,000 will be the higher here. How much is that? 2,70,000. How much is the balance? 1,90,000. Out of 490, 3 lakh we have taken, the balance is 190 into 60%. And can you help me with the math? 14,000. So how much will be the total? You can claim up to 384. Can you tell me how much is the actual amount paid? Actual amount paid is, let's understand, they are saying 20,000 per month into 2 working partners into 12 months. And how much is actual? 4 lakh 80,000. But you can claim only 384 as a deduction. So maximum deduction for the partnership firm is 3 lakh 84. Are you with me? And how much is the taxable profit for the partnership firm? Taxable profit for the partnership firm, 96,000. Are you all with me? Now the question is not asking anything in relation to the partner. Imagine they are asking you to compute the total income of a partner. Say there is one partner, Mr. A. Imagine that the firm is telling you, not firm, so the question ICA is telling you to compute the total income of that particular partner. Then what would have been the total income of that partner? Compute and tell me. Imagine there is Mr. A who is a partner. There are two partners, Mr. A and Mr. B. Equal partners. You need to compute the total income of taxable total income of Mr. A. Compute the taxable total income of Mr. A. Both are equal partners. Both are equal partners and compute the taxable income of partner A and exempted income also. Compute the taxable as well as exempted income. Equal partner, equal profit sharing ratio, equal investment, everything equal. Okay, let's understand. Listen. Shh. So according to the improvisation, keep quiet and listen. According to the improvisation, how many partners are there? Two partners. So listen. This partnership firm have paid actually 75,000 rupees as interest on capital. Are you with me? Are you with me? This interest is to Mr. A as well as to Mr. B. So how much amount Mr. A will get? Out of the 75,000, how much amount Mr. A will get? 75,000 divided by 2. 37,500. Mr. A will get 37,500. Are you with me? In the hands of partnership firm, only 60,000 is deductible. Yes or no? In the hands of partnership firm, only 60,000 is deductible. So how much is the deduction for one partner? 30,000 is the proportionate deduction. One partner 30, other partner 30. Yes or no? So out of this 37,500, only 30,000 shall be taxable in the hands of Mr. A under section 28. The remaining 7,500 will be treated as what? Share of profit under section 10(2)(a), and that is fully exempted. So out of interest, only 30,000 will be taxable in the hands of Mr. A. Are you with me? And how about remuneration? How about remuneration? The partnership firm has paid 4,80,000 as total remuneration. Yes or no? And how much will be Mr. A is getting? 4,80,000 divided by 2. So it will be 2,40,000. Mr. A will get how much? 2,40,000. And how much is allowable deduction? 384. And how much is half of 384? 384 is both. I told you that there are two partners. Everything is equal. Do you remember? So based on that assumption only we are solving this answer. Okay, there are two partners and everything is equal. So out of 384, how much will be the amount of partner A? 1,92,000. And how much is the actual amount received? 2,40,000. And how much will be? This 192 will be taxable under 28. Why? Because firm got that 192 into 2 as a deduction. So how much is the remaining? And the 48,000 shall be exempted under section 10(2)(a). Are you all with me? Are you all with me? I've solved it twice. One as an example and another by improvising this question. Yes. Which 96,000? Book profit is 490. 384. 96. Who told me 196? I don't know. This is you guys only telling me the answer, okay? I don't have a calculator, madam. I am only writing the answer that you are saying. I don't know who told me 96. Most of them told me 96 and I've written 96. If you told me 2,70,000, I'll write 2,70,000. Okay, yeah. What is the sum? 490 minus 384. What should be the taxable profit? 1,06,000. Who told me 96 then? So it shall be 1,06,000. Okay. So I hope you understood what I have written over here. Is that clear? Online friends, I hope for you also it is clear. Yes. In this level you have to expect an exam, okay? They will mix it up like anything and they will try to confuse you in different manner. Yes. So moving on friends, moving on. Let's move on to the next thing. So we were discussing about 40B. Now we'll come back to 28. So can you read this box again? Any interest, salary, bonus, commission or remuneration due to received by a partner of a firm. We can also say provided the partnership firm got a deduction under 40B. Yes or no? That amount that the partnership firm claimed as a deduction under 40B will be the taxable income in the hands of partner under section 28. Are you with me? Are you with me? Now, what is the second item taxable under section 28? If you are a businessman doing some business and you got some export incentives or similar receipts, received or receivable, that also will be taxable under section 28. What is export incentive? What do you mean by export incentive? You are exporting and the government is giving you some kind of grant. Okay, so if they are giving you some kind of grant, that is not your direct business profit, but still you have to tax it under section 28 because it is incidental to your business activity, so you have to tax it under section 28. Are you with me? Are you with me? Moving on to the third item. Can you read the third item? The value of any benefit or perquisite, whether convertible into money or not, that is in kind or cash. Value of perquisite or benefit. Perquisite will be taxable under the head salary, right? Then why we have written it under Pgbp? If it is connected to your business or profession, you have to tax it under Pgbp. I'll give you an example for a better understanding. Say for example, I am a manufacturer. And you are my distributor. I've given you an offer. If you are able to distribute 10,000 bottles of water this month, I'll get you a gold ring. I'll get you what? A gold ring worth say 40,000. If you distribute 20,000 of this kind of bottle, I will get you a gold ring worth 40,000. This was the offer. And say she achieved the target. She achieved that particular target. She is a distributor, okay. So I have given her a gold ring. That gold ring is on account of business, because I have set a business target and she have achieved that particular business target, and I have given her a gold ring. That is a benefit received for her in her business, and that benefit shall be taxable for her under section 28. Are you with me? For the manufacturer it's an expenditure. For the distributor it is her income. Why? Because it is a benefit or perquisite received in relation to business, whether converted into money or not. Is that point clear? Is that point clear? Can you read the next item? Fair market value. FMV means fair market value on conversion of stock in trade to capital asset. Can you tell me what do you mean by conversion of stock in trade into capital asset? What do you mean by conversion of stock in trade into capital asset? Very simple. Say I am an AC trader. Air conditioning. Okay. I'm selling air conditioners. Say due to the hot weather in Chennai, I took 1 or 2 ACs from my stockyard and I installed it in my office. That is called as conversion of stock in trade into capital asset. Till yesterday it was my stock. Today I fixed it in my office and it will become my capital asset. It will become my official plant and machinery. Are you with me? Are you with me? When I'm converting that capital asset into stock in trade, what department say? I'm actually not getting anything. I'm not getting any income because I'm not selling that particular stock. Are you with me? But there is a problem. What is the problem? That item is not a stock anymore. That item is not a stock anymore. I have to remove it from the warehouse. Number two, that item become my capital asset. If that item become my capital asset, then I should be given with depreciation. Yes or no? Yes or no? So to solve two problems, they have a single solution. And what is the single solution? Do one thing. Whenever you convert that particular AC into capital asset, whenever you convert that AC into what? Capital asset. On the date of conversion, you find out the fair market value of that particular AC. On the date of conversion, you find out what? The fair market value of that particular AC. That fair market value shall be a deemed income under section 28. It's not your actual income. It's a notional income only. What is notional income? Not real, but department say consider it as your income. We know it is not your real income, but consider it as your income. So it is considered as a notional income only, and you have to tax that fair market value as an income under 28. Are you with me? Are you with me? And the same fair market value you can show as your actual cost of capital asset, and you can claim depreciation afterwards. On that same FMV, you can claim depreciation from today onwards. Are you all with me? Is that point clear? So, whenever I'm converting my stock in trade into capital asset, on the date of conversion, whatever the fair market value, I have to treat that fair market value as an income taxable under Pgbp. The same fair market value I can show as my actual cost of the plant and machinery, and I can claim depreciation on that particular value. Is that point clear for everyone? Now, next item under 28. What is the next item? Income from speculative transaction. What is speculative transaction? Intraday trading is the best example for speculative transaction. Say for example, I'm doing some intraday trading. I'm doing what? Some intraday trading. Are you all with me? I'm doing some intraday trading. Say I've done it only once in my lifetime. I've done it only once in my lifetime. So if I've done it only once in my lifetime, then people will say you have to put it under capital gain, because there is no frequency of occurrence of the transaction. I'm only done it only once in my lifetime. Yes or no? But income tax department say it is not like that. Whether it is 1 time, 2 time, 3 time, 4 time, doesn't matter. If you're doing a speculative transaction, that have to be assessed under Pgbp, that too as a separate business you have to maintain. Are you with me? Are you with me? Say I'm a practicing chartered accountant. Okay, I'll be having income from my profession. And I have done 1 or 2 speculative transactions, like I have done 1 or 2 intraday trading. Have you heard about intraday trading? Yes or no? Don't tell me to teach what is intraday trading, okay? That is another subject. That means you are buying something in the morning and selling something that day itself. That means a transaction that is happening between a day. A transaction that is happening between a day is said to be what? Intraday trading. Are you all with me? Just a second. Yeah. So friends, listen. What is basically speculative transaction? That means you are buying something and you are selling something in between a day. That is called as what? Speculative intraday transaction. All the intraday transactions have to be treated as speculative transaction. Are you with me? I'll make you write some exceptions over here. So whenever there is a question in relation to this speculative transaction, always you should know this. Please write this to your revision note. Trading in intraday trading. Intraday. Trading in intraday, speculative. Speculative transaction. If you are dealing with intraday trading, or if you are doing some intraday trading, that will be treated as a speculative transaction. And trading commodities, derivative. like currency, gold, crude, etc., not speculative. Treated as normal business. If you are trading commodity derivatives like currency, gold, crude, etc., it is not speculative. Treated as normal business only. Then, trading options and futures. Or rather, we'll make it simple. Okay, trading derivatives. You write simply derivatives. Derivatives, again, not speculative. Treated as normal business only. So the point is, in exam, if they are saying intraday trading, that is speculative. They are saying commodity derivatives like gold, crude, etc., silver, etc., that is normal business only. You have to treat it as a business activity, but normal business activity. If they are saying derivatives like futures, options, etc., and what is derivative? An asset that derives its value from some underlyings is said to be what? Derivatives. Okay, like options and futures. I think you have to study this in your FM. Not fully, but some part of it is there in your financial management. AFM it is there fully. But in FM also somewhere the reference is coming. Okay, yes. So listen. So under Pgbp, the first thing that should know is section 28. Can you please explain about derivatives? No, Alinivas, no. Because we'll go out of topic if I start explaining about derivatives. It is not at all direct tax, so no. Example is options, futures. That you should learn it in your final first of all. Okay. So if I try to explain it, we will lose at least 1 or 2 hours for that. So I don't want that thing to happen because first I should teach you what is equities. Then based on equity, how this trading happens, then how you are deriving value and what is option writing and what is option selling and what is spot market and what is future market and what is this arbitrage, everything I have to teach you. So no ways. I'm really sorry. That is not first of all income tax, so no. Yes. So coming back to the point, friends, stick on to the syllabus, that will be always better, okay? Yeah. Then moving on, friends, section 28 is all about the income chargeable under Pgbp. So let's revise the items coming under section 28. Can you read the first item? Income arising to any person by way of profits and gains from business, profession or vocation. Second one, any interest, salary, bonus, commission or remuneration due to or received by a partner of a firm. Third one, export incentives or similar receipts received or receivable. Fourth one, any benefit or perquisite, whether convertible into money or not, in kind or in cash. Fifth one, fair market value on conversion of stock in trade to the capital asset. And the last one, income from speculative transactions to be treated as separate business. That too, intraday trading is considered as a speculative activity. Commodity derivatives and normal derivative trading is not considered as a speculative activity. You have to treat it as your normal business. That's it. Okay. Yes. So moving on with the deductions. We will complete 1 or 2 deductions and I'll leave you after that. Okay. Because section 32, I have no plans to start today. If we start section 32, we require some time. Because that is comparatively a lengthier section, depreciation, section 32. I should teach you 32, 43 subsection 1 and section 50. 3 things together we will deal. Being evening, that too, it's somewhere near to 6. I'll complete 30 and 31 and I'll let you go. Okay. So can you read the next heading, section 30? Deduction on rent, rates, repairs and insurance for building. So hope you remember. Section 28 was the income. 30 to 37 is? 30 to 37. deductions. And how about section 40 series, disallowances? So we are about to start the deductions, which is under section 30 to 37. So first deduction is deduction on rent, rates, repairs and insurance for building. Listen, imagine, say I own a building. Okay, say this building is owned by me. Are you all with me? This building is owned by me. I'm running a business in this building. I'm running a business. Say I'm the owner of this academy. I'm the owner of this academy and I'm running this particular academy in this particular building owned by me. Are you with me? Are you with me? So this building is actually treated as a capital asset of my business. So 4 related costs in relation to, or 4 associated costs in relation to this building, I can claim as a deduction under section 30. 4 types of cost which is incurred for this building is allowed as a deduction under section 30. Which are the 4 items? Number 1. Read. Number 1, rent of building. Number 2, current repair, not nature of capital expense. Number 3, rates and taxes. Number 4, insurance premium. Building used for either business or profession, either as owner or tenant. Imagine I own this particular building. I own this particular building. If I'm the owner, I don't have to pay rent. If I'm the owner, I don't have to pay rent. But I have to incur current repair. What is current repair? Revenue nature expenditures. What is revenue nature expenditures? Those day-to-day expenditure to maintain this particular building is said to be what? Revenue nature expenditure. Are you with me? Are you with me? Say there was a problem with the lights, I repaired it. That is a revenue expenditure. There is a problem with the camera, I repaired it. Revenue expenditure. There is a problem with the ceiling, I repaired it. Revenue expenditure. There is a problem with the window glass, I repaired it. Revenue expenditure. I expanded the class or extended the class. Extended means not the type. I've expanded this class. Then what will happen? That is a capital nature expenditure and you are not supposed to claim it as a deduction under section 30. Capital nature expenditure have to be capitalized and you have to claim depreciation. Are you with me? Are you with me? So the second point is current repair. That's why I've written not in the nature of capital. It should be in the nature of revenue, day-to-day expenses. I can definitely claim as a deduction under section 30. What is next? Rates and taxes. You tell me, if I am the owner of this building, I should pay something to the municipality. Property taxes, sewerage taxes, etc. will come. That I can claim under Pgbp. You don't count it under house property. Why? Because I'm not getting any rental income from this property. Are you with me? I have a property and I'm using that property to run my business. Am I getting any rental income? No. If I'm getting rental income, then it will be under house property. I'm not getting any rental income, I'm running my business, then you have to consider it under Pgbp. And all the expenses in relation to this building have to be deducted under Pgbp. Is that point clear? So, rates and taxes means all the municipal taxes, property taxes, sewerage taxes, whatever I pay to the local authority, I can claim as a deduction under section 3030. I hope it is clear. And what is next? Insurance premium. Say for example, I have taken an insurance on this particular building. I have taken what? Insurance on this particular building. Say earthquake insurance or natural calamity insurance, tsunami insurance, something like that. For that I have to pay what? Premium. If I am paying premium, that premium is again allowed as a deduction under section 30. Are you all here? Are you all here? 4 types of cost which are associated with the building allowed as a deduction. Which all are the 4 types of cost? Number 1, rent of building. Number 2, current repair in the nature of current repair, not in the nature of capital. Number 3, rates and taxes. Number 4, insurance premium. This building either owned by me or taken on rent. If it is on rent, the rental expenses, current repair will come. Rates and taxes normally will not come. Because only normally the owner is supposed to pay the rates and taxes. Am I clear? Is that point clear for everyone? Yes, sir. And online friends, please respond. It should not increase the efficiency of the asset. Yes. Yes, excellent. So capital expenditure means any expenditure that increases the volume, capacity, value, life, usage, etc. will be considered as capital expenditure. Expansion will increase the volume and value. Are you with me? So it should be day-to-day expenditure. Yes, very good. Now friends, listen. Section 31. And friends, deduction is from 30 to 37. Hope you remember that. That's the first thing that I've written. Deduction is from 30 to 37. But there is a speciality. Deductions from section 30 to 36 is specific. What is specific? Example, what exactly can be claimed as deduction is clearly mentioned from 30 to 36. But 37 is general. What is general? Certain expenses which satisfy certain conditions mentioned under 37 is allowed as a deduction under 37. So when it comes to the deduction, apart from the other heads, PGBP has its peculiar nature. 30 to 37 is the total deduction. But out of that, till 36 is specific. 37 is general. That means all the expenses which you are incurring in relation to your business, other than items mentioned under 30 to 36 have to be adjusted under 37. That's what is called as general. Are you with me? We will discuss 30 to 37 in a very detailed manner, don't worry. Before that, we should know what is 31. We have completed 30, the first specific item. Second specific item is 31. Can you read the heading? Repairs and insurance of machinery, plant and furniture. Say you are incurring any repairs as well as insurance for the machinery, plant and furniture. Imagine I'm using a particular machinery, say for example AC. AC is considered as a plant and machinery. I'm using it for my business. I'm the owner of this academy and I've installed AC in the classroom. And this AC is what? A plant and machinery. Two associated costs related to this AC I can claim as a deduction under 31. Are you all here? Two associated costs that I'm incurring in relation to this particular AC I can claim as a deduction. Which are the two associated costs? Number one, current repair. All of a sudden this AC had some problem. It turned off. Are you with me? I've called a mechanic and he fixed it. I called a mechanic and he fixed it. That amount that I've required to pay to the mechanic as well as to the spare parts shop is allowed as a deduction under 31. Are you all here? Second one, insurance expenses. Normally nobody will take insurance for AC and all, but imagine I've taken an insurance. Say for example short circuit. Say the possibility of short circuit is there in Chennai. Imagine there are a lot of short circuits happening in Chennai. So I thought of taking an insurance and I'm paying a premium for this. And that premium is again allowed as a deduction under section 31. Are you all here? When you compare 30 and 31, normally rates and taxes, you are not required to pay any taxes to the municipality for installing an AC in your office. So rate and taxes will not come. But you can take an AC on rent. That is possible. You can take an AC on rent. And the rent that you pay for the AC, you cannot claim it as a deduction under 31. You cannot. Why? 30 to 36 is what? Specific. Only those items mentioned under 30 to 36 is allowed as a deduction there. So what to do with the rental charges of plant and machinery? 37. Not from 30 to 36. You have to adjust it under section 37. Are you with me? Are you with me? All those items that are coming specifically mentioned under 30 to 36 is only allowed as a deduction under there. The other items which are related to your business have to be mandatorily claimed under 37. Are you all with me? Now there is a common note for this. Can you read this note? This is actually section 38. Can you read this common note? Building, plant and machinery, furniture as above are used partly for business and partly for other purposes. Only a proportionate part of expenses attributable to the part of purpose of business will be allowed as a deduction. What do you mean by this? Say this building, this floor I am running my business and the ground floor I am staying over there. I am staying over there. Are you with me? For the entire building there is a repair, insurance expenses I have incurred. 1 lakh rupees is the insurance premium that I paid. Are you with me? For the entire building, I took an insurance, and the total insurance amount was how much? 1 lakh rupees. So it has 2 floors. First floor, self-occupation. Second floor, business. So what to do with that 1 lakh insurance premium? Only 50,000 I can claim as a reduction under section 30. Not 31, 30 because building. It is building, so I can claim it as a reduction under 30. But only 50%. Why? If plant and machinery or building or a furniture that we are mentioned here is not exclusively used for your business purpose, only those proportionate expenses that is incurred for your business is allowed as a deduction under the respective sections. Are you with the common sense? Yes or no? Yes or no? So that's what they are saying under section 31. Is that clear till now? Is that point clear for everyone? Very good. Let's understand what exactly is the concept of depreciation. First of all, you tell me, what do you mean by depreciation? What do you mean by depreciation? Depreciation simply means you are capitalizing the expenditure. Say for example, all the capital nature expenditure you have to capitalize. Then a small portion of that expenditure is claimed as a deduction under section 32. This is what you normally do. So you have to capitalize all the capital nature expenditure. Then a small portion of that percentage of that expenditure is allowed as a deduction. Now the one thing that you have to be very careful is, when you compute depreciation in income tax, the method of computation is totally different from your accounting methodology. Only the name is similar. The computation is entirely different. Are you all with me? First of all, there are 2 methods for computing depreciation in income tax law. Number 1, SLM. Number 2, WDV. SLM means straight line method. And number 2, WDV. WDV means written down value method. Right now, we are only focusing on the written down value method because SLM is actually applicable only for power generators and distributors. That too optional. That means in India, if you are a power generator or a distributor, you may opt for SLM. Are you all with me? You may opt for SLM. You may means what? At your choice, you may opt for SLM. There is nobody mandating you to opt for SLM. It's up to you. Your choice, you may opt for SLM basis. Now, for all other person, WDV is mandatory. So we are actually sticking only on to the WDV method, and let's understand how to compute depreciation on WDV method. So first of all, the one thing that you should understand is, in WDV method, you have to create a block. In WDV method, whenever you compute a depreciation, you have to first compute a block, or we can say create a block. Create a block. What do you mean by block? Block simply means all the assets that is under same category, same rate have to be grouped together, and you have to charge depreciation on that group value. Are you with me? Are you with me? So assets having assets under same block or same category with similar rates have to be put together to create a block. And on this block value, you charge depreciation. This is what is the concept of depreciation. Now you should understand how many category of assets we have in income tax. Tell me, which all are the categories we have in income tax? Any idea? How many categories of assets we have in income tax? How many categories of assets we have? We can say 4 or 5. Both are right. Okay. If we say 5, then it is number 1, it should be building. Building. Number 2, it is plant and machinery. Number 3, furniture and fittings. Number 4, intangibles. And number 5 we can say as ships. Alright, if you check the schedule, we can categorize the categories of assets into 5. But normally we say 4 as well, by considering ship as a part of the plant and machinery. That is also fine. Are you with me? So we can say either 4 by considering ship as a part of the plant and machinery, or we can say 5. So if you check the actual depreciation schedule, it is actually 5 because they have provided ship as a separate item. Okay, so we can say 5 categories of assets are there. Number 1, building. Number 2, plant and machinery. Number 3, furniture and fittings. And number 4, intangible assets. And number 5, ships. Say for example, the normal rate of depreciation for building is 10%. The normal rate of depreciation for building is how much, friends? It is at 10%. Now imagine, say I have 3 buildings. Say building 1, building 2 and building 3. Imagine a case where I have 3 buildings, say building 1, building 2, building 3. Today I started my new business. I started my new business with 3 buildings. Building number 1 having a value of 2 lakhs. Building number 2 having a value of 8 lakhs. Building number 3 having a value of 10 lakhs. Say it is like this. So in a block, when it comes to the income tax, how do you charge depreciation? Depreciation is not charged on the individual values of asset. It is not charged on the individual values of asset. Rather, you have to create a block. Now you tell me how to create a block. Assets under same category with similar rates have to be put together to create a block. So how many categories of assets we have? We have only 1 category of assets, that is said to be building. And how many buildings we have under the same category? 3 buildings. So you have to add these 3 together and you need to create a block, and the block value will be 20 lakhs. On this 20 lakh you have to charge depreciation. This is called as what concept? Block concept. Are you with me? So after 5 or 6 years, whenever there is a new addition, you have to add that respective value to the block. They'll again charge the depreciation on that entire block value. After 15 or 12 or after 5 or 6 years, you won't be able to know what exactly is the individual value of a single asset. That you don't have to. Are you with me? That is the greatest advantage when it comes to the income tax law, because everything is charged on the block value. So to start with, let's understand which all are the categories and what all are the important rates of depreciation that you have to study. Certain rates you have to by heart, because in certain questions they are not giving the rate that you should know. So I'm about to discuss a few rate of depreciation which are actually very important, and you have to remember these rates. So we can start with the rate of depreciation. Can you read the heading? Rate of depreciation. Important ones only. This is not the complete rate chart. We have provided only the important items here. And what is item number 1? Residential building. And under which category it is coming? Under the category building. Say for example KS Academy. For KS Academy, this building is not a residential building, because this building is where the classes are conducted. Say they have a guest house. KS Academy have a faculty guest house. For KS Academy, that faculty guest house is actually what? A residential building which is used for the business. Are you with me? That residential building is not for the purpose of stay of directors of KS Academy. It is actually for the faculties and the other officials. Whoever comes on official purpose can stay in that particular residential house. So if a business is having a residential building, then the rate of depreciation shall be how much, friends? Can you tell me how much is the rate of depreciation? It is 5%. Now moving on to the second one, temporary structure. What is temporary structure? Whenever you visit a construction site, you can see small sheds. Have you seen small sheds in front of the construction site? Those small sheds are normally called as what? Temporary structure. And what is the rate of depreciation for that small structure? 40%. The rate of depreciation for that small structure is how much? 40%. So moving on to the other building. Other building means for KS Academy, this building will come under the other building, because this is not temporary structure, this is not a residential building. For other building, what is the rate of depreciation? 10%. So tell me, friends, these 3 are under the same category. Which category? Building. And we have 3 rates under building. Which are the 3 rates? 5, 40 and 10. So whatever assets that comes under one category with same rates. Say KS Academy have 2 residential building and 3 commercial building. What to do? 3 commercial building, 1 block. 2 residential building, another block. Because residential building rate is 5 and commercial building the rate is 10. Are you all with me? Superb. Moving on with the next item, that is furniture and fittings. That itself is a category. Furniture and fittings. And can you tell me what is the rate? 10%. Furniture and fittings. You know what is furniture? What is fittings? What do you mean by fittings? What is fittings? Say for example, the fan, light point, switch, sockets, windows, etc. are normally called as what? Fittings. This false ceiling, etc. are normally called as what? Fittings. AC is not a fitting. Even though it is fitted in the building, AC is not a fitting, it is a plant and machinery. Okay. Fans, lights, etc. are fittings. Are you with me? Because when income tax department drafted this, AC was not a necessity. Okay, AC was not a basic thing. It was considered as a luxurious thing at that time. So those buildings at that time having AC was very less. Right now, I think in Chennai and all, if you sit in a building, that to a multi-story building, especially on the top floor, it will be like a micro oven. Okay, you can make omelets and bullseyes without turning on your stove. It's like that much hot it is. So right now, even though every building have an AC, it is considered as a plant and machinery only, not as a part of fitting. Yeah. Moving on, friends. Moving on. Yes. Decrease in intrinsic value of an asset owing to wear and tear. Lapse of time. Excellent. That is depreciation. Yes. So moving on, friends. So furniture and fittings. The rate of depreciation will be how much, friends? Hello, I want you to respond. What is the rate of depreciation for furniture and fittings? The rate of depreciation shall be at 10%. Moving on with the next item. What is the next item? It's under the category plant and machinery, motor car. If you have a motor car for the purpose of your business, then what is the rate of depreciation? 15%. Next one, motor vehicle running on hire. What do you mean by motor vehicle running on hire? I'm running a rent-a-car business. For me, that motor vehicle is running on hire. Are you with me? I am a goods transporter. For me, that lorry is also a motor vehicle. Okay, that lorry or the bus, whatever it is, that is renting on hire or running on hire. For that case, I can claim a depreciation of 30%. So for KS Academy, if they use a car for the official purpose, the rate will be 15%. If KS Academy is a rent-a-car business, then for the same car, they can claim depreciation at 30%. Now, moving to the next item under the category plant and machinery, that is computer, including computer software. So friends, whatever the computer, laptop, etc. that you are using, the rate of depreciation will be 40%. And plant and machinery general rate is how much? 15%. Then pollution control equipment also comes under the category of plant and machinery and the rate is 40%. Windmill comes under the category of plant and machinery and the rate is again 40%. Books comes under the plant and machinery category and the rate is 40%. What is books? Books. Say for example, for a chartered accountant, taxman books or the accounting standard related books or the company law related books. For an advocate, Bharatiya Nyaya Samhita books. That is a new law. We don't have IPC anymore. Bharatiya Nyaya Samhita is the new law. They have replaced IPC. Indian Penal Code have been replaced with Bharatiya Nyaya Samhita. And civil laws have been replaced with Bharatiya Nagrik Samhita, if I'm not wrong. Bharatiya Nagrik Samhita is the new law for IPC and the other civil laws. So they have replaced everything and new laws is there. So new books will be there. You are buying new books. That book is your asset. Under which category? Plant and machinery. What is the rate? 40%. Are you all with me? Whether the book is an annual publication or not, the rate will be 40%. What is annual publication? Income tax book is an annual publication because every year, what will happen? There will be a change. Every financial year, there will be a change. And yes, The income tax books are normally considered as an annual publication. And what is the rate? 40%. Now, if you have intangible assets, what are the intangible assets? Know-how, patent, copyright, trademark, licenses, franchises, or any other business or commercial right of similar nature, not being goodwill of a business or a profession. What do you mean by this? Not being goodwill of a business or a profession. For goodwill, you cannot claim any depreciation. Depreciation is not eligible on goodwill. That's what the department says. Are you all with me? Are you all with me? You can't change, you can't claim depreciation on goodwill. Why? Because according to the department, goodwill is a self-generated asset. That too, it never depreciates due to the normal business. It only appreciates if you do good business. If you do bad business, it will automatically went off. That is not on account of your normal business. Whether you give quality goods, appreciate. Bad goods, depreciate. So goodwill during the normal course of your business never comes down. So don't charge any depreciation on goodwill, whether it is purchased or whether it is self-generated. Are you all with me? Come again? No, not possible. For goodwill, you cannot claim anything. No expenses for goodwill. You cannot amortize, you cannot depreciate, nothing. In income tax. Amortization and depreciation, nothing is available for goodwill, okay? Goodwill, you cannot amortize it in income tax law. Yeah. Moving on to the, moving on to the last item. What is the last item, friends? Ships. Category, ship it is, okay? And what is the rate? Hare, what is the rate? 20%. So the rates provided in this table, you have to mandatorily study. Are you with me? Now friends, there is a note under this. How about mobile phone and EPABX? What is EPABX? You know what is mobile phone, right? What is EPABX? Telecommunication devices, just like walkies, or have you seen these phones where you connect, you click on 3, you will get the next department. So intercoms or walkies is called as EPABX, telecommunication devices. Mobile phones and telecommunication devices are considered as a normal plant and machinery, and the rate of depreciation will be at what rate? 15%. Mobile phone and telecommunication devices are considered as a normal plant and machinery only, and the rate of depreciation that you can charge is only 15%. Now, note it over. How about UPS and printers, scanners, etc.? UPS, printers, scanners, etc. is considered as what? Computer, and the rate of depreciation will be 40%. Are you all with me? Okay, others are making noise. Okay, don't worry. I'll mute everyone. Yeah, I've muted everyone. Don't worry. Okay, I've muted everyone. Don't worry. Okay, yeah. So the point is, listen, for the UPS, printers, scanners, etc., it is regarded as what? Computer only, and the rate of depreciation will be how much, friends? Tell me, how much is the rate of depreciation? 40%. Because UPS, printers, scanners does not have a isolated or independent existence. It is regarded as a part of your computer only, and the rate of depreciation will be 40%. That's what the department says. So moving on. So these are the category of assets that you should know. And friends, you tell me, how do you create a block? First you find out an asset, individual asset, and you check under which category it is coming. If the asset is from same category with the same rate, why? In plant and machinery, we have 2 rates or multiple rates. 15 is there, 40 is there. Then all the assets that are coming under 40, you can categorize it into one block for the purpose of examination. Are you with me? Are you with me? All the assets that are under one category with the same rate have to be considered as part of one block. Then you have to compute depreciation on that particular block. Is that clear till now? Is that clear till now? Now you should know certain other important facts in relation to depreciation. Can you read this? In accountancy we will compare with accountancy and income tax. Okay. In accountancy, tell me, how do you claim depreciation in accountancy? How do you claim depreciation in accountancy? Tell me, how do you claim depreciation in accountancy? individual asset you will take, and the depreciation computation is based on the number of days of use. If an asset is used for 10 days, you will charge 10 days proportionate depreciation on that asset. Are you with me? If an asset is used for the entire 365 days, then you will claim full depreciation. In income tax, it is not like that. And in accountancy, there is one more specialty is there. If you are selling an asset in between, say for example, you are selling an asset after 2 months of usage, then you can claim depreciation up to the date of sale in accountancy. Yes or no? In income tax, these kinds of things are not there. Income tax, these kinds of things are not there. What depreciation in income tax says is, if you want to claim depreciation on a particular asset, please listen, if you want to claim depreciation on a particular asset, you must use that asset for the entire year and the asset should be with you. You are not supposed to sell it. It should be with you till the last day of that particular year. Are you with me? If you are selling an asset in between, the seller cannot claim depreciation for that asset for that year. So if you are selling an asset in between a year, you cannot claim depreciation. The asset should be there. You should keep the asset with you to claim depreciation in income tax. Is that clear? Is that clear? So in between, if you are selling an asset, you cannot charge any depreciation. Point number 2. In income tax, depreciation computation is either full or half. There is a concept called either full or half. What is this either full or half? See, what Act says is, if you are using an asset, you can charge depreciation in full. If you are using an asset in a year without selling it, you can charge depreciation in full, subjected to one exception. What is that exception? In the year of purchase, if an asset is put to use for less than 180 days, listen, in the year of, repeat with me, in the year of purchase, if an asset is put to use for less than 180 days, then you can claim a depreciation of up to how much? Only 50%. If in the year of purchase you are put to use an asset for less than 180 days, then you can charge depreciation only up to 50%. In other case, you can charge depreciation in full. I've used an asset for 190 days in the year of purchase. I can claim full depreciation. Are you with me? What if in the subsequent year, I've used an asset only for 1 day? What is the percentage of depreciation? Full. In the year of purchase, if an asset is put to use for less than 180, it is half. In future, even if you use that asset is there in your office, but you are not using it, don't worry, you can still claim depreciation. Even if you have used it for 1 or 2 days, no problem. The point is, if an asset in the year of purchase, you are put to use that particular asset for less than 180 days, then only this half will come into the picture. Otherwise, it is full. Is that point clear? So can you read this note? This is the note regarding that. If in the year of acquisition, an asset is only used for less than 180 days, depreciation shall be allowed at 50% of the allowable rate. In other cases, it shall be full rate. I hope it is clear. Mute others, I have already muted. More than or equal to, less than 180 means exactly 180 full, or more than 180 full. Yes. Less than 180 means exact 180 full depreciation. More than 180 also full depreciation. If it is 179, half. I hope it is clear. And again, one point is there. It is not the purchase date. It's all about the date of put to use. Are you with me? Are you with me? So, only used. So, it means put to use. Now, friends, there is another thing. Have you seen fire extinguishers in the buildings? Have you seen fire extinguishers in the building? Are every business persons using that fire extinguishers every year? Are they using that particular fire extinguishers every year? No. Passive use is also fine. Active use is not mandatory. Passive use is also fine. What is passive use? Whenever there is a fire, we will use that extinguisher. Okay. That extinguisher is actually kept ready for usage. That is considered as put to use only. If some asset is kept ready for usage, that is regarded as an actual put to use only. You have to install it, make it ready. Whether you are actually turning it on or not is not a concern. Are you all with me? Are you all with me? So, usage, we can say active as well as passive usage. Plant and machinery, plant and machinery. Fire extinguisher is categorized under plant and machinery only. Okay, yes. Yeah, it's around October 4, yes. Yeah, moving on with the next thing, friends. So this is what I've told you. You have two methods of depreciation. Number one, SLM, and number two, WDV. We are focusing only on the WDV because that is where they test questions in examination, because SLM can be claimed only for whom? Only for power generators. If we don't use machinery in subsequent year, even one itself, what is that? I didn't get it. Subsequent year, even one itself can be claimed full year depreciation. One day maybe. Yes. In the year of purchase, less than 180 only, half will come. All in other cases, you can claim full. Yeah, 5th October or 4th October, no problem. Moving on to the next point. So this is the format for computing depreciation. Okay, this is the format for computing depreciation. This is actually a very simple format. So I think everybody knows this format. You always start with read this WDV of the block at the beginning of the previous year. Hello, read and revise WDV of the block at the beginning of the previous year. Are you all here? Are you all here? Yes, you all want to clear in September examinations, right? Yes, this is actually July 24th. How many number of days you have for examination? How many number of days you have for your exams? Around 45, 44, 45 days. 49. We can say something near to 50. Are you with me? Something near to 50. How many subjects you have? 6 subjects. So 6 into 10 is 60. So you don't even have 10 days for a subject. Are you with me? So this is the high time. You have to gear up. I want all of you to repeat and be energetic. Don't say we are tired, because our target is somehow clear the September examination. Are you with me? From today, if you decide to clear, definitely you have time to clear. But if you are like sitting like in a comfort zone, okay, you do the revision, okay. For me, revision is not required. You do. Let me check. If you are in that attitude, you will sit like that. Okay, so you want to clear, you have to be with me. From the day one I was saying, I need your time. That commitment is required from you. Are you all with me? Are you all with me? Excellent. So read this along with me. When you read, you will understand and you will learn it from the class itself. You don't have to spend much time at your home. You learn everything from the class itself. So that's why I'm making you to repeat. Anyways, I'm reading. Whether you repeat or not, that doesn't make any difference for me, but that will make a huge difference for you. That's why I'm telling you to repeat. So read this along with me. WDV of the block at the beginning of the previous year. That is the first thing that you have to note down. Then, always consider additions first. Are you with me? Add assets falling within the block acquired during the previous year. Always consider additions irrespective of the date of addition. Then you add both the opening as well as addition. Are you with me? You add both the opening as well as addition. Then what to do? Less sale proceeds of assets sold during the previous year. Sale proceeds, then whatever sales you have to delete. Then you have to compute the written down value. That is the net value. That is opening plus addition minus sales. You will get the net value. Less you have to charge depreciation on this particular net value, and you will get the closing WDV. This closing WDV will be the opening WDV for the next year. Are you all with me? Are you all with me? Now friends, there is an important thing. Okay, say for example, I'll create an example and you have to tell me the answer. Okay, say for example, our relevant PY is 23-24. Our relevant PY is 23-24. On April 15th, 2023, I sold some asset. Thereafter in July, I purchased some assets. You tell me, with the opening value, first you have to delete sales or add additions. Add additions. Irrespective of the date, always first consider addition. Then only you are supposed to deduct the sales. It is a fixed format. It is not based on the date chronology and all. Always add additions first. From that, you only consider the deletions. Is that clear till now? So I'll give you a small exercise question to make it more clear. So can you solve this Q2? It is not there in your question sheet. It is actually very simple and your study material question, very simple question. So just go through this question, create a block, charge depreciation and compute the closing WDV. I want all of you to create block. Then charge the depreciation and compute the closing WDV. Do it quickly. So shall we do it together? Alright, so I'm getting different answers. Very good. Good participation from online friends. Excellent. Even though you have to type everything, you're doing a very good job, okay? Yes, excellent, very good. Keep up the spirit. Because online friends, they have to type everything, okay? They are giving me very detailed answer. Okay, excellent, very good. Yeah, so tell me, a newly qualified chartered accountant, Mr. Dawal, commenced practice and has acquired the following assets in his office for the financial year 23-24 at a cost shown against each item. Calculate the amount of depreciation that can be claimed from his professional income for assessment year 24-25. Assume that all the assets were purchased by way of account pay check. There are 1, 2, 3, 4, 5, 6. 6 assets are there. So our first duty is to what? Categorize them into different blocks. So which is the first asset? Computer, including computer software. You tell me which is the category? Plant and machinery, depreciable at 40%. So we will write computer. And you tell me what is the amount? 35,000, and it is purchased on 1st October. So we can say more than 180 days. More than or equal to 180 days. And hence full depreciation you will get. Yes or no? So 35,000, it's a new business, so we don't have any opening value, okay? So 35,000 rupees is the amount. Now, how about the next one? In this case, paid in cash, all are disallowed. Yes, because you cannot add that as a part of your actual cost if you make the payment in cash. Yes, it is there. Moving on to the next one, which is the second asset that we have, that is UPS. UPS is also considered as computer. And what is the amount? 8,500. You tell me when is the date of put to use. You tell me whether date of purchase or date of put to use. Which one you have to consider? Date of put to use is on 8th October 23. So it is less than 180 days and hence it is half the rate of depreciation. So while writing 8,500, I am notating that it is less than 180. Then next one, printer. Printer is also considered as computer. So you tell me what is the rate of depreciation for computer? 40% plant and machinery. Put to use is on 1st October more than 180 days. The value is 12,500. Next asset is books. Books, you can also again consider it as plant and machinery. According to the original income tax schedule, book is a separate category. But when you compute it for the examination, because our ICI, whenever they give an official answer, they consider like this. Plant and machinery, same rate under one category. Are you with me? If you go check the original income tax schedule, book is a separate category. Even though it is under plant and machinery, rate is 40, they consider it as a separate plant and machinery. But don't worry, when you do answers in exam, you treat it as a part of the plant and machinery depreciable at 40. So book, what is the rate? 13,000, but they are saying something in the bracket. They are saying other than annual publication, 12,000. So annual publication, 1,000. What to do? Nothing. Don't do anything, because whether it is annual or not annual, you can claim depreciation at 40% for the entire value. Doesn't matter. Now you tell me more than 180, less than 180. More than 180, it is 1st April 23. Now next is office furniture. Furniture and fittings. Is it from the speaker? Okay. Furniture and fittings. And how much is the rate of depreciation for furniture and fittings? 10%. And you tell me how much is the value? Furniture and fittings, the value is 3 lakhs, more than 180. Then laptop, again laptop, what is the value? 43,000. And can you tell me whether it is more than 180 or less than 180? It's on 8th October, that means less than 180 days. So less than 180 days. Now, can you help me with the totals? How much is the total in the first category? 1,12,000 is the total in the first category, and we will claim depreciation. How do you claim depreciation? All those assets which is purchased and put to use for more than 180, you have to select first. That is 12,500 plus 13,000. This is subjected to what rate? Into 40%. And all those assets, that is 8,500 plus 43,000, all these two assets which is less than 180 is subjected to 20% rate. And can you help me with the total depreciation that you can charge? 34,500 is the total depreciation that you can charge. And in relation to the second category, you have only one set, that is 3 lakh. At 10% of 3 lakh, that will be 30,000. And can you help me how much is the closing WDV? Here it will be 2 lakh 70. And what about in the other case, how much will be the closing WDV? 77,500 will be the closing WDV. I hope it is clear. This is how you have to compute the depreciation, by creating a block. Is this clear? All right. So please complete the answer. Yeah. So let's move on, friends. Let's move on with the other theory. Listen, listen, listen. Next is additional depreciation. So once you understood normal depreciation, yeah. So moving on to the next concept, that is said to be what? Additional depreciation. So let's understand how to compute additional depreciation. Listen, listen. Additional depreciation on plant and machinery. So friends, listen. Shh. Keep quiet and listen. Everybody cannot claim the additional depreciation. Only assessee who is a manufacturer or engaged in the business of generation or transmission or distribution of power, who opted for WDV method, can claim additional depreciation. So only manufacturers and power generators. Power generators have an option to claim depreciation according to SLM as well. Okay, but if they opted for WDV only, they are eligible to claim additional depreciation. Are you with me? So only two types of persons can claim additional depreciation: manufacturers and power generators. Now, additional depreciation is allowed on any new plant and machinery acquired and installed by the assessee. So whatever new plant and machinery you have, on the value of the new plant and machinery, you can charge what? Additional depreciation. That also means you cannot claim additional depreciation on the value of other assets like building, intangibles, etc., etc. For furniture, building, intangibles, etc., you cannot charge additional depreciation. Only for new plant and machinery, that too if you are either a manufacturer or a power generator, you can claim what? Additional depreciation. Moving on, additional depreciation can be claimed only in the first year of purchase of an asset. Unlike normal depreciation, you can charge additional depreciation only on the first year of purchase. Normal depreciation you can charge until that asset is completely depreciated. Yes or no? But additional depreciation is a kind of an accelerated depreciation that you can charge only on the first year of purchase of an asset. So, and what is the rate of additional depreciation? 20%. So the rate of additional depreciation is how much, friends? 20%. Now listen, let's summarize that. So unlike additional normal depreciation, you can charge additional depreciation only if you are either a manufacturer or a power generator. Point number 2, you can charge additional depreciation only on the value of eligible plant and machinery. Point number 3, you can charge additional depreciation at what rate? Fixed 20% rate. Point number 4, you can claim additional depreciation only on the first year of purchase. Is that clear till now? Is that clear till now? Now the point is, there are certain restrictions for certain assets. That means, for the following assets, you cannot claim additional depreciation. Apart from these, for all other plant and machinery, you can claim what? Additional depreciation. You can claim additional depreciation on all plant and machinery except the following plant and machineries. Are you all listening? So let's understand which all are the plant and machineries where you cannot charge additional depreciation. Now we are about to discuss which all are the plant and machinery where you cannot charge what? Additional depreciation. What is number one? Ships and aircraft. For the ships and aircraft, you cannot charge any additional depreciation. First of all, ship is not plant and machinery. Okay, but ship is not basically a plant and machinery, but for certain, in certain authors and certain books and all, ship is classified as a plant and machinery. Okay, so don't get confused. Normally for ship, it is not at all a plant and machinery, and hence you cannot claim additional depreciation. I've clearly mentioned that, that's it. Okay, and now aircrafts. Aircrafts you cannot claim what? Additional depreciation. Yes. Ship doesn't come under the plant and machinery. Yes, normally no. Ship is not a plant and machinery. Yeah. So moving on, for ships and aircrafts, you cannot claim any additional depreciation. Number two, second-hand plant and machinery, you cannot claim additional depreciation. You tell me, what is second-hand plant and machinery? What do you mean by second-hand plant and machinery? An asset which is already used, you are purchasing it again. If you are in that category, if you are purchasing that particular asset, you cannot claim additional depreciation. Moving on, office appliances or road transport vehicles. So if you have some office appliances or a road transport vehicle, again you cannot claim any additional depreciation. What is office appliance? What is office appliance? The assets that you normally use in your office. Whatever assets that you normally use in your office can be said to be office appliance. Are you all with me? So office appliance, you cannot claim any additional depreciation, and road transport vehicles also, you cannot claim any additional depreciation. What do you mean by road transport vehicles? Like your car, jeep, lorry, bus, etc. You cannot charge any additional depreciation. Office appliance and road transport vehicle. So listen, the point is, say, for office appliances and road transport vehicle, you cannot charge any additional depreciation. And what is this office appliance? Whatever assets that you use in the office is said to be the office appliance. And what is this road transport vehicle? As I've told you, for your motor car, jeep, lorry, bus, etc., you cannot claim any additional depreciation even if it is a fresh asset. It comes under plant and machinery, but you cannot charge any additional depreciation. It's as simple as that. Are you all with me? Moving on to the next one, friends. What is next item? Any machinery or a plant installed in office premises, residential accommodation, or in a guest house. Say for example, a computer which is installed in office. You cannot claim additional depreciation. A computer installed in factory, you can definitely claim additional depreciation. You can claim additional depreciation if it is installed in factory. If it is installed in office or a residential accommodation, you cannot claim any additional depreciation. Are you with me? So all the assets which is installed in office premises, residential accommodation, or in any guest house, don't even think about claiming what? Additional depreciation. Are you all with me? Then next item, any machinery or a plant where the whole or part of the actual cost is already allowed as a deduction. Similar to scientific research asset, 35 AD asset, etc., that we will discuss today itself. Scientific research and 35 AD we will discuss today itself. So there are certain assets where 100% of the cost itself you can claim as a deduction in the year of purchase itself. So if you are having that kind of an asset, don't claim any additional depreciation because you already got 100% reduction. Are you all with me? So very simple. Which are the assets where you cannot claim additional depreciation? Repeat. Number one, ships and aircraft. No additional depreciation. Number two, second-hand plant and machinery. Don't claim any additional depreciation. Number three, office appliances or road transport vehicles. Don't claim any additional depreciation. Number 4, any machinery or a plant installed in office premises, residential accommodation or in a guest house, no additional depreciation. Then last one, any machinery or a plant where 100% of the cost is already allowed as a deduction also, you cannot claim any additional depreciation. Add depreciation, new plant and machinery more than 180, 20%. If it is less than 180, 10%. 10% carry forward next year. That is only for additional depreciation. Okay, Ragul. Admin office situated in manufacturing building. Okay, in this case, we can claim additional depreciation. Yes, manufacturing building means it is a factory. And all the cubicles inside the factory is definitely yes, you can claim. Give cab, that cab cannot claim additional depreciation. Office, give cab. No, never. If the office have a car, okay, that they cannot claim additional depreciation on that cab. No way, they cannot claim. They can claim normal depreciation, but not additional depreciation. Books inside the factory, no. Books is not at all an item which is used in factory. Okay, so no. Plant and machinery, yes. Like windmill, yes. 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 It's not necessary that it should be directly connected with the manufacturing. Indirect connection is also fine. It's a kind of a manual or something. Yes. Yes. Vehicle used in factory. I'm about to come. Okay, don't worry. Rig modes used in factory. Yes, you can claim. Now, moving on to the next one. Can you read note number 1 under this? Assessee can claim additional depreciation on trucks, dumpers, forklift truck, etc. used inside the factory exclusively. What is that? Say for example, there are certain factories where it is 25 acres, 50 acres and all. Inside the factory there will be what? Lorries and dumpers, which is used to transport the materials. Raw material from one place to another. Finished goods from one place to another. So, it will be like a 25 acre or 100 acre factories are there in India. Okay. It have a premise of around 100 acres and all will be there. So, it is impractical to walk through the premises. So, there will be vehicles like lorries, dumpers, truck, forklift truck, etc. That on that, even though it is a road transport vehicle, you are not using it in the common public road. You are using it exclusively inside the factory. For those assets, you can claim what? Additional depreciation. Are you with me? We normally use the substance over form principle for checking whether an asset is eligible for additional depreciation. What exactly is the actual usage rather than what exactly is the form. That's how we claim additional depreciation. I hope it is clear. Now for the purpose of additional depreciation, printing and publishing shall also be considered as manufacturing. For the purpose of additional depreciation, you have to consider the printing and manufacturing as well as additional, that also as a manufacturing process. Say for example, my publisher, the person who publishes my book, he's a printing guy. He can definitely claim what? Additional depreciation on his printers and other assets inside his printing shop. Are you with me? Good. Now, hope you remember, if an asset is purchased and put to use for less than 180 days, you can claim only half the depreciation. Do you remember this? Likewise, in additional depreciation also, there is a restriction, and what they are saying is, if you are purchasing an asset and put to use that asset for less than 180 days, you can claim only half the rate of normal additional depreciation. So listen, 50% of additional depreciation to be allowed where plant and machinery is put to use for less than 180 days during the PY in which the asset is acquired. So whenever you are acquiring an asset and you are using that asset for your what purpose? For your manufacturing or factory purposes, then you can charge only how much? 50% of the additional depreciation only in that year. But imagine, you can claim additional depreciation only in year 1. But normal depreciation, you can claim it until that asset is fully depreciated. Yes or no? Yes or no? But additional depreciation can be claimed only in the year 1. So what department say? If you are purchasing an asset and put to use an asset for less than 180 days in the year, you can claim only half the rate of additional depreciation. Balance half you can claim in the next year. It's not a crime or it's not a violation that you are purchasing an asset and put to use for less than 180. So we cannot deny complete additional depreciation. So we are saying half claim in year 1 and the remaining half you claim in year 2. Are you with me? So the balance 50% of the additional depreciation shall be allowed in the immediately succeeding PY. So can you read this box again? 50% of additional depreciation to be allowed where the plant and machinery is put to use for less than 180 days during the PY in which such asset is acquired, and balance 50% of the additional depreciation shall be allowed in the immediately succeeding PY. So 50 in the year of purchase and the balance 50 in the subsequent year if it is additional depreciation. Yes. Alright, so this is how you have to compute the additional depreciation, friends. Now listen. Now there is an important thing. Yeah, you can carry forward. You can carry forward unabsorbed depreciation to subsequent future years. Don't worry, we will cover that, okay? Wait. So listen. Now there is one important, and I can say it is a little bit confusing also. There is an important thing and a little bit confusing also is on its way. So I want all of you to be super attentive, otherwise you will not understand this concept, okay? Listen. In accountancy, when you are selling an asset, you have an asset and you were using that asset for your business. Now you are selling that particular asset. Are you all listening? When you are selling that particular asset, how do you compute the profit? In accountancy, I'm talking about accountancy, not the income tax, okay? You check what is the book value. Rather than written down value, we use the word book value in accountancy. You check the book value and you check the sale value. If the sale value exceeds the book value of individual asset, the rest will be book profit. We will show it as a credit of the P&L account. Are you with me? Are you with me? When you compute book value in accountancy, till the date of sale, you can charge the depreciation and you can reduce that book value. Yes or no? You might have done many accounting entries and you might have prepared a lot of ledger accounts, P&L, balance sheet based on this theory. Is that clear? That is in accountancy and that is right also. But when it comes to income tax, it is not like that. Whenever there is a sale of an asset from a respective block, there are certain special treatments in Income Tax Act. Are you all with me? Whenever there is a sale of an asset from a respective block, then there are certain special treatments in Income Tax Act, and that's what we are about to discuss right now. Are you all listening? Let's understand what exactly are the special treatments whenever you are selling an asset from a respective block. For that, first of all, we have a chart. We have a detailed chart. This is actually capital gain. This is actually capital gain, but you have to study it as a part of 32 itself, otherwise you will not understand, okay? So, we have a detailed chart. So, for the time being, forget about the chart. Let me start with an example. Otherwise, if you simply read this chart, you will definitely get confused. So, forget about the chart. Let's stick on with an example. Okay. So, listen. So, I am creating an example where I have plant and machinery A, B, and C. I have 3 plant and machineries. And the written down value of this plant and machinery is say 10 lakh. The written down value of this plant and machinery is 2023-24 is say how much? How much? So how many plant and machineries I have? How many plant and machineries I have? 3 plant and machineries. And what is the closing value of that block right now? 10 lakhs. The closing WDV of that block right now is how much? 10 lakhs. What is the individual value of A? We don't know. What is the individual value of B? We don't know. What is the individual value of C? We don't know, and we don't have to know also. When it comes to the income tax, we don't have to know because it's all about the block. Individual asset have no importance when it comes to the income tax law. Are you with me? So, A, B, C having a combined value of 10 lakh. Say situation 1. Situation 1, I sold plant and machinery A, say for, say 12 lakh. I sold plant and machinery A for what value? 12 lakh. Are you all with me? I sold one asset from that respective block for what value? 12 lakh. Say this 12 lakh is the net sale consideration. What is net sale consideration? Net sale consideration means what? Say in certain sales there will be brokerage or any direct expenses. So the gross value minus that direct expense. This is the net sale value is 12 lakh. Are you with me? When it comes to income tax, how do you compute the capital gain? That's what we are about to discuss right now. Yes, net of brokerage. That's right. How do you compute the capital gain if the situation is like this? First of all, you have to write the WDV value. Can you tell me how much is the WDV value of the block? 10 lakhs. WDV value of the block is how much? 10 lakh. There is no addition. There is no addition. So I am straight away deducting what? Sales. Hope you remember the format. With the opening WDV, always add additions first, then only consider deletions. In this example, since we don't have any addition, I'm not adding anything related to additions. So I'm straight away deleting the sales. How much is the sales value? How much is the sales value? Now you tell me how much is the remaining WDV value. Don't show negative 2 lakh. You have to show 0 because we don't have any remaining value in the block. So show what? 0. Then what to do with the 2 lakhs? That 2 lakhs shall be treated as deemed short-term capital gain. Deemed short-term capital gain under section 50. Are you with me? So the theory is whenever there is a sale from a respective block of asset and if the sale value of an asset exceeds WDV value of the block, not WDV value of the asset. You need to check whether the sale value exceeds WDV value of that respective block. If yes, excess shall be always deemed to be short-term capital gain irrespective of period of holding of that particular asset. Are you with me? Whenever there is a sale from a respective block and the sale value exceeds the WDV value, that excess value shall be deemed to be what value? Tell me friends. Excess value shall be deemed to be short-term capital gain. It will be considered as a short-term capital gains. That's it. Under section 5050. Moving on to the next one. Example number 2. Example number 2. I sold the same plant and machinery A. I sold the same plant and machinery A, say for 6 lakhs. I've sold the same plant and machinery A for what value? 6 lakhs. Then what to do? First you write the opening WDV. How much is the opening WDV? 10 lakh. And how much is the sale value? 6 lakhs. And you tell me how much is the closing value of the block? After the sales, how much is the closing value? 4 lakhs. So we have a value this time. We have a value this time in the block. Now you tell me, is there any assets remaining in the block? Is there any assets remaining in the block? And how many assets are there in the block? We have B and C. We have B and C and we have value. So don't show any capital gain. Don't show any capital gain. Are you with me? Are you with me? So what we have to do in such scenario is, if the sale value of an asset does not exceed the block value, then don't show any capital gain because there won't be any capital gain. Capital gain will come only if the sale value exceeds the total block value of that particular asset. Are you with me? Are you with me? Capital gain will come into the picture only if the sale value exceeds the total block value of the asset. Otherwise, you don't have to worry about the capital gain. So here, there won't be any capital gain and you can charge what? Depreciation on that 4 lakh. You can charge depreciation, say, plant and machinery at 15% on that block value. And how much is 15% of that block value? Can you help me with the math? 60,000. And the closing WDV will be 3 lakh. 40,000. This is how you have to deal. There is no short-term capital gain. This is situation number 2. Moving on to the situation number 3. Say, I've sold plant and machinery A plus B plus C for 7 lakh. I've sold everything on a combined value of how much? 7 lakh. I've sold A as well as B as well as C. And what is the total value? What is the total value? The total value is 7 lakh. Now let's understand, if I'm selling A, B and C all together for a total value of 7 lakh, how do you deal with that? How much is the WDV? How much is the WDV? 10 lakhs. The WDV of that particular asset is what? 10 lakhs. How much is the sales value? Sales value? 7 lakhs. Now you tell me what is the remaining value in the block? You have remaining value 3 lakh. Are you with me? But you don't have assets in the block. No assets remaining in the block because you have sold A as well as B as well as C. So what to do with this 3 lakh? You have to treat it as short-term capital loss under section 50. Are you with me? Are you with me? It's very simple because you see, if we have some assets in the block, any assets in the block, you can charge what? Depreciation. But in this case, even though you have some value, you don't have any assets in the block and hence you cannot charge any depreciation. I hope you got my point. Are you all with me? So section 50 is very simple. What is 50? If there is a sale from a block of asset, short-term capital gain will come into the picture only if the sale value exceeds the block value. Otherwise, there won't be any short-term capital gain. And you tell me when short-term capital loss will come. Short-term capital loss will come if there is value in the block but no assets. In that case, short-term capital loss will come into the picture. Is that clear? Now let's move on to the theory. We haven't discussed the theory. Now let's discuss the theory. Okay. Now, listen. So, in the theory, can you read the first box? Asset is sold from a relevant block. And what is the first part? After sales, if assets remaining in the block, that means you sold some asset from a block. After sales, there are certain assets remaining in the block. If there are certain assets remaining in the block, then how do you consider that? You need to check whether the net sale consideration is more than the entire WDV of the block. You need to check whether the net sale consideration is more than the entire WDV of the block. That means the net sale consideration. That means the sales minus brokerage. If it is exceeding the entire WDV, if it is yes, then excess shall be deemed to be short-term capital gain. This was example number 1. Are you with me? What is point number 2? After sales, assets remaining in the block and net sale consideration is less than or equal to entire WDV of the block, then no short-term capital gain. If that does not exceed the WDV, then you don't have to compute any short-term capital gain. Claim depreciation on the balance value. If there is balance value, you can claim what? Depreciation. Now tell me, what if the sale value is exactly the block value? What if the sales value is exactly the WDV value? No gain, no depreciation. Everything is 0. You cannot claim, you don't have to show short-term capital gain and you cannot claim depreciation as well. Are you with me? Moving on. What is the second possibility? After sales, if no assets are remaining in the block, you don't have any assets in the block after the sales, then also you need to check whether the sale value exceeded the entire WDV value of the block. If yes, excess shall be short-term capital gain. That means plant and machinery A, B and C I sold for 15 lakh. Then what will happen? 5 lakh shall be short-term capital gain. And I cannot claim any depreciation on that respective block in future. Are you with me? Now, what is case number 2? Net sale consideration, if it is less than or equal to the entire WDV of the block, then no short-term capital gain. Hope you remember A, B and C, everything sold for 7 lakh. You have some value, but you don't have any assets. In that case, the balance value, if any, shall be the deemed short-term capital loss. I hope it is clear. Is that clear? Online. If cell B or C again, yes, you're right. Rafiq, you're right. Once you sold that and your block value becomes 0, thereafter when you sell B and C, the entire sale value become your short-term capital gain. Yes. I have a doubt in example 1, you said plant and machinery is sold, but remaining B and C will still exist. Yes, B and C will be there. Terminal depreciation balancing charge is under SLM, which I am not planning to cover. Okay, VV. Terminal depreciation and balancing charge is under SLM, which is not that important, so I am not planning to cover that as a part of our revision classes. Yes, got it. So friends, it is under SLM, not WDV. So don't worry. Terminal depreciation and balancing charge is under SLM. Yep. So friends, let me make you solve a small exercise question so that you will get a better grip over this particular topic. Okay. So I want you guys to take this question number. This is actually from capital gain. No worries. You are capable of solving this. Yeah. So go through this question 8. It's a fantastic question. It's a highly conceptual question. Go through this question 8 and answer those 3 questions. It's a paragraph-based question. Okay. So read the paragraph, answer 1, 2 and 3. Ready with the answer? So yes, I'm getting some answers. Last answer 40,000. Okay. You need to compute the depreciation as well. Okay. You need to compute the, determine the claim of depreciation as well. That is also required. So shall we do it together? How many of you have an answer? Please raise your hands. Okay. At least you have read the question in full. You might have read the question in full at least. Yeah. So let's solve it together. Singhani and Co. Hope you understand, because being revision classes, I cannot give you more time for solving these kinds of questions, because if I give you more time, our total time will get limited. That's why I'm quickly going through the provisions. Okay. So Singhani and Co. a sole proprietorship owns 6 machines put in use for business in March 2023. The depreciation on these machines is charged at what rate? 15%. The written down value of these machines as on 1st April 2023 was 8,50,000. So what you need to do is, let's write down the opening WDV of that particular block. How much is the opening WDV of that particular block? Opening WDV of that particular block is 8,50,000. Yes, that is the opening WDV. Now, what is next? It is depreciable at 15%. 3 of the old machines were sold on 10th June 2023 for 11 lakh. And a second-hand plant and machinery was bought for 8,50,000 on November 2023. So you tell me, friends, how many assets they have initially? 6. They sold how many? 3. And they bought 1. A second-hand, not 2 plant and machinery, a second-hand plant and machinery. Are you with me? Are you with me? So we will write that 6 machines they have. We will always consider additions first. How much is the value of additions? That too less than 180 days. Why less than 180 days? Because it is on November. So can you tell me what is the value of the addition? 8,50,000. And can you tell me how much is opening plus addition? Opening plus addition 17 lakh. And how much is the sale value? Sale value is 11 lakh. And how many assets that you have sold? 3. Now, as you know, how many assets you have in balance? You had 6, bought 1, 7, and sold 3. That means 4 assets you have, and you have value also. Why? Because the sale value is only 11 lakh, which is less than the 17 lakh mark. Are you with me? So how much is the remaining value of the block? 6 lakhs. So there is balance value, and you can charge what? Depreciation. But now there is a problem. What is the problem? If the 6 lakhs is the balance of opening, you can claim full depreciation. If that 6 lakhs is balance of addition, you can claim only 7.5% depreciation. Why? Because the addition is made less than 180 days. What to do in such scenario? What to do in such scenario? Follow FIFO. This is what department say. Follow FIFO method. What is FIFO method? First in, first out. That means when you are selling it, first you have to utilize it from the opening. And the balance will be that of additions. And hence, what to do? The 6 lakhs is subjected to 7.5%. Why? Because FIFO means whenever you are selling an asset from a block, first you have to utilize it from the opening value of that particular block. If there is something balance, that balance will be obviously the balance of addition. That is FIFO. First in, first out. Opening is the first in. So when you sell, it have to be the first out. So tell me how much is 7.5 of 6 lakh? Come again? 45,000. And how much will be the closing WDV? 5 lakh 55,000. This is how you have to compute the answer. Are you all with me? This is option 1, not option. I mean, what is that? Part 1 or whatever it is. Okay. Part 1 of that particular question. Determine the claim of depreciation for assessment year 24-25. And what is number 2? Compute the capital gain liable to tax for assessment year 24-25. You have to compute the capital gain liable for taxes in the AY 24-25. How much is the capital gain liable for taxes? Nothing. Nil. Why? Why no capital gain? Because your sale value does not exceed the block value. Block means opening plus addition. Are you all with me? Block value means opening plus addition value. Your sales value does not exceed that, so don't worry about any capital gain. Now, what is next? If Singhania and Co. sold 3 machines in June 2023 for 21 lakh, will there be any difference in your above workings? Explain. If they are selling it for 21 lakhs, will there be any difference in the above working? Let's see. Opening will be the same, 8 lakh 50. Opening value will be the same, 8 lakh 50. And how about the addition? 8 lakh 50 only. Addition is also 8 lakh 50. And the total will be 17 lakh. If you are selling it for 21 lakh, then the closing WDV after the sale shall have to be written as nil. And how much is the excess? 4 lakhs excess shall be deemed to be what? Short-term capital gain under section 50. That 4 lakhs shall be deemed to be short-term capital gain under section 50. Are you all with me? Are you all with me? Yes, sir. Excellent. This is how you have to compute the answer. So please make a note of the answer or take a picture or whatever it is. Additional depreciation, okay. Additional depreciation can claim only once at the time of purchase of machinery and put use on that year. Yes. FIFO means first in, first out. When you are selling something, you have to utilize the value from the openings first. The balance will be of addition. Yes, yes, Ashwin. In that year itself, you have to depreciate. Okay. Ashwin, you have to depreciate. See, this is similar to example 1. This is similar to example 1. Ashwin, I hope you got my answer. Frequently not claim additional depreciation. I didn't get your question, Ragul, first of all. What is this? I didn't get your question. Yeah, you want the question? I'll show the question. Don't worry. This is the question, okay. Yeah, so moving on, friends, moving on. Shh. Keep quiet and listen. See, shh. Last explanation for FIFO. Don't ask me for more, okay? I'm explaining it for the 3rd time. Listen, what is FIFO? Opening have 8 lakh 50. Addition have 8 lakh 50. Total it is 17. Okay. Now, when you are selling 11, that means it is something is going out. That is what is called as sales. Out of 11, 8.5 will be utilized from the opening because you have to reduce the value. Yes or no? How much is 8.5 minus 11? How much is 8.5 minus 11? 2.5. So only 2.5 will be from the opening. These two together will be 11. So the remaining 6 after this sales will be on account of addition. This is what is called as FIFO. First comes in will go out first. Yeah. Moving on to the next concept, listen. Moving on to, yeah, I hope you got it, about 7.5. That is due to FIFO only, okay. Moving on to the next concept, listen. Carry forward and set off of depreciation. Let's understand how to deal with carry forward and set off of depreciation. Say for example, listen, imagine a situation where you have purchased some assets. Keep quiet. You have purchased some assets, but you are not able to make any sales. No sales. You purchased some assets and kept everything ready, but you are not able to make any sales. Once you purchase the asset, then you can charge claiming depreciation. Are you with me? Say the value of asset you have purchased is 10 lakh and the rate of depreciation is at 15%. So what to do? 1,50,000 will be the depreciation. But the problem is you don't have any income to charge off this depreciation. Because your sales is how much? 0. You don't have any income to charge off this depreciation. So you tell me what to do. If you don't have any income to charge off this depreciation, then department say this depreciation have to be carried forward as it is by calling it as unabsorbed depreciation. Unabsorbed depreciation. Are you with me? Under section 32 subsection 2, this depreciation that is not absorbed with the income have to be treated as unabsorbed depreciation and you have to carry forward it to the next year. And what to do if you carry forward it to the next year? You can adjust with the next year's profit. You can adjust that particular amount, carry forward with the next year's profit. Are you all with me? Are you all with me? Now the question is, how many years can you carry forward this? Unlimited, or we can say indefinite period. There is no restriction for the number of years that you can carry forward. It is not like a normal business loss. A normal business loss can be carried forward only for 8 years. But unabsorbed depreciation you can carry forward for how many years? Unlimited or indefinite subsequent years. Are you with me? Say you have depreciation, you don't have any sale. So that amount of depreciation, you cannot charge it from the income because you don't have any income. So that 1,50,000 you can carry forward it to the unlimited subsequent year. And this concept is said to be what, friends? Unabsorbed depreciation. And you can carry forward unabsorbed depreciation to how many years? Unlimited or indefinite subsequent years. Both are same. But in the next year, if you have profits, then definitely adjust it, okay? Everybody will adjust it, set it off. Why? If you have profit next year, you have to pay the taxes. If you set it off, you are absolved from the liability of taxes. Are you all with me? Are you all with me? Yes, very good. So this is how you have to compute the unabsorbed depreciation. Explain calculation of unabsorbed depreciation once again. My God. Unabsorbed depreciation means you have depreciation, you have no income. Okay, carry forward that because you cannot charge that depreciation if you don't have income. So carry forward that depreciation to the subsequent year. That's it. Moving on. Moving on to the next one. Next is section 35, that is expenditure on scientific research. So listen, we will study this in a table format. Listen, scientific research. Are you all listening? Are you all listening? This have a considerable importance nowadays because this have something to do with the BAC as well. 115 BAC also have something to do with section 35. So this have a considerable importance. This might have a considerable importance in your upcoming examination, September 24. Yes, let's see. Listen. Scientific research, you can divide that scientific research into two. Okay. Scientific research into two means in-house scientific research expenses into two. First of all, what is in-house scientific research? In-house scientific research. You have a research and development department by your own. You are maintaining one. Are you with me? You want to create some technology so that you are maintaining one for yourself. Are you all with me? Say you have a research and development wing by your own. You are maintaining it for what? Not 8 years. That is for, if you keep like this, I don't think that we will be able to finish everything. Okay. You are sticking on to the same point. I have explained that. Only for normal business laws, it is 8 years, not for unabsorbed depreciation. Okay. You don't, if you have profit 2,50,000, depreciation 3 lakh, so unabsorbed depreciation will be 50,000, carry forward of next 8 years. De Ragul, I've told you unabsorbed depreciation, unlimited, indefinite. How many times I've repeated? You guys are not listening. That 50,000 you can carry forward it to indefinite period. Oh, Huma was saying not 8 years in infinite. Yes, Huma, you are right. Regul, I've told this again and again and again. Oh my God. Yeah. Understand. All right. So, where were we? In scientific research expenditure, in-house scientific research expenditure, you can divide that in-house scientific research expenditure into two. Number one, revenue nature, and number two, capital nature. Say you have a scientific research department by your own. Okay, you want to create or innovate or invent something, so that you have a R&D for your own. Inside that R&D, the expenses that you are incurring can be divided into two, revenue nature and capital nature. Can you give me some examples for the revenue nature? Can you give me some examples for the revenue nature scientific research expenses? Salary to scientist, then electricity charges, then purchase of raw materials or components, we can say. Electricity, yes. Then rental expenses, then all other miscellaneous expenses will come. Are you with me? Can you give me an example for a capital nature expenditure for R&D? Purchase of equipments, then purchase of the building, then purchase of patent for something, yes. Then purchase of know-how, all the intangibles. Otherwise you will say know-how, patent, goodwill, everything will come. All the intangibles. These are the examples for capital nature expenditure in in-house scientific research. So revenue nature is there, capital nature is there. This revenue nature can be divided into two, that is pre-commencement and post-commencement. Revenue nature can be divided into two. What is that? Pre-commencement and post-commencement. What is pre-commencement? What is pre-commencement? Let me give you an example for pre-commencement. Say listen. Say listen. Here. What's your name? Anish. Harish. Say Harish. He is about to launch a new mobile phone company. Okay. Harish is about to launch a new mobile phone company. And what about your name? Next one. Rajkumar. Say Raj is the close friend of Harish. Raj and Harish are both very close friends. So Harish is about to start a new company, that is a mobile phone company, H phone, like iPhone. He started a company called H phone, Harish phone. So instead of Apple logo, it's Harish's photo. Okay, it's Harish's photo. It's there as the logo, and the cost is around 1 lakh. The cost for one phone, they say it's a flagship phone. They say it's what? Flagship phone, and the cost is 1 lakh rupees. H phone Ultra Pro Max. Okay, now the cost is 1 lakh. And there is nothing special in that particular phone. There is nothing special in that particular phone. Rajkumar, you tell me, you have 1 lakh rupees and you are planning to buy a phone. Will you buy H phone? No. Why? There is nothing. Why should I buy H phone? This will be the question. Okay. What do you say? Nanpana irundalu. When it comes to the financial matters, definitely we will think. Are you with me? Are you with me? Even Uir Nanpan will not buy what? That particular phone by paying 1 lakh rupees. Are you with me? Yes. Then you tell me, how can you make it more attractive for the customer? If you have something special, we can say core competencies. You might have studied core competencies in your SM. That's the unique advantage that you have in your business. If you have that core competency, especially when it comes to the tech and all, you should have something which is not offered by your competitors. Then you might be able to sell it for rupees 1 lakh. Yes or no? Say, H phone have a inbuilt drone. It have an inbuilt drone. You press a button, it will go automatically go up, take a selfie and come back. Okay, it's free to attract customers. Okay, if you give phone for free, then you will die and your customers will come and take everything. Okay, so free is only for Ambanis and Adanis. Yeah, that free concept, yes, it will work. It will work. Nowadays, the industry is actually driven on free. I think this session is also free. Yeah, all right. So, it's actually run on free. Okay, so the point is, forget about free. Think about this, what was I saying? H phone. Yeah, think about H phone. See, when it comes to H phone, first of all, before launching the phone itself, he should be ready with the technology. Yes or no? Before launching the phone itself, he should be ready with the technology. At the launch, he should say that my phone have a inbuilt what? Drone, which no other phone company in India or overseas have. So you buy this, click a button, it will go to the sky, click a picture and it will come back. Don't buy drones. Okay, this is the offer given by H phone. Then people will come and buy H phone. Yes or no? For saying that, he should start his R&D first, even before commencing the business. Are you with me? So, there can be pre-commencement revenue nature in-house scientific research expenses and pre-commencement capital nature in-house scientific research expenses. But there is a problem. What is the problem? He have an R&D, he haven't started his business. If he haven't started his business, you cannot claim that expenditure under Pgbp. For claiming an expenditure under Pgbp, you should have what? Business. Something similar to what we have discussed yesterday in house property. Pre-commencement interest expense. You have interest but you don't have house property. Likewise, you have scientific research expense but you don't have a business. So what to do? Don't worry. You accumulate everything and claim it as a deduction when you start your business. You accumulate everything and claim it as a deduction, not in 5 equal installment. Okay, that is under house property. Here what they say is, don't worry, you accumulate everything and you charge it as a deduction under Pgbp under section 35 when you actually start your business. Are you with me? Are you with me? So we are about to discuss that particular thing, that is pre-commencement revenue nature scientific research expense. Now next question is, can you claim all the revenue nature pre-commencement expenditures as a deduction while you start your business? The answer is no. There are certain restrictions. That's what we are about to discuss. So listen, what is the first point? Payment of salary to research personnel and purchase of material incurred within 3 years immediately preceding the commencement of business is allowed as deduction in that year, or we can say deduction in the year of commencement. What does that mean? Only 2 types of expenditure that you incur before you start your business is allowed as a deduction. Which all are the 2 types? Number 1, payment of salary to research personnel. That means scientist salary. Number 2, purchase of raw material. These 2 are the revenue allowable items. Other power and fuel and other thing you have to ignore. Only purchase of raw material and payment of salary to research personnel are allowed as a deduction, which is incurred in the pre-commencement era. That too, that have to be incurred within 3 years immediately preceding your date of commencement of business. Are you with me? Are you with me? For example, you commenced your business on 1st April 2023. Then, all the expenditure that you incurred from which date? 21, 22, 23. Say, from 1st April 2021 till 31st or till 1st April 2023. This is the 3-year gap. Yes or no? 22, 23, not 3 year. It should be 20. Yeah, 21, 22, 23. This is the 3-year gap. 21, 22, 23. During these 3 years, all the salary that you are paying to your scientist, as well as purchase of raw materials that you are doing in this 3-year phase is allowed as a deduction in which year? In the year of commencement, then only you will have that Pgbp. If you have Pgbp only, you can claim it as a deduction under section 35. Is that point clear? So you can claim all the expenditure that you incurred within this 3-year period, that too in relation to the payment of salary as well as purchase of raw material in the year of commencement under section 35. I hope that point is clear. Are you with me? Are you with me? Then raw material, yeah. Free to attract more. Sir, Geo give free network for 1 year to catch the market. It's claimed in section 35. No, it's not scientific research and all. It's free. What is that? Free. You cannot claim that. Okay. Yes. But they have started their business. Okay. They are not charging. That is, they started their business. They can claim it as their normal business expenditure. Okay. They've started their business. They have provided everything for free, I think for 1 year or 2 years or something. 1.5 years or something, they have provided everything for free. That means we have start doing something. That is the commencement of business. Okay. So, coming back to the point, friends, revenue nature. How about post commencement? What is post? What is post? From the date of commencement and afterwards. So, in that case, any revenue expenditure incurred on scientific research would be allowed as a deduction in which it is incurred. If you are incurring a post-commencement scientific research expenditure, all types of expenditure that are incurring in the post period is allowed as a deduction in that respective year. All means that includes salary, purchase of raw material, power, fuel, whatever it is you are incurring in relation to that R&D is allowed as a deduction under section 35. Are you all with me? So, listen, the revenue nature, you have to split that into two, pre-commencement phase and post-commencement phase. In pre-commencement phase, only salary as well as one more thing. Salary as well as purchase of raw materials is allowed as a reduction. That too incurred within 3 years immediately preceding the commencement of business is allowed as a deduction. How about post? All the revenue nature, scientific research expenses allowed as a reduction in the post phase. Is that clear? Is that clear? Super. Now moving on to the capital nature expenditure. You tell me what is capital nature? Like purchase of land, purchase of building, purchase of plant and machinery, whatever it is called as capital nature scientific research expenditure. Again, that also can be splitted into two. What are the two splits we have? Pre and post. So in the pre phase, can you read the table under the pre-commencement period? What is that? The aggregate of expenditure so incurred within 3 years immediately preceding the commencement of business is allowed as a deduction in the year of commencement. There is a greatest advantage for you. See, what is the normal treatment for a capital expenditure? What is the normal treatment for a capital expenditure? What do you do with a capital expenditure normally? Capitalize and charge depreciation. Yes or no? Yes or no? But if you are incurring a capital expenditure for your scientific research asset, don't worry about depreciation. Rather, instead of capitalizing it and claim depreciation, you charge that entire cost as an expenditure under section 35. Are you with me? You claim that entire thing as an expenditure under section 35. Forget about claiming depreciation. We are giving you a wonderful offer. If your profit is if you still have a profit after claiming all the capital expenditure, you pay the taxes. That's what the department say, because the department want to promote all the scientific researches happening in India. Are you with me? Are you with me? And what they are saying, aggregate of, read that along with me, aggregate of expenditure so incurred within 3 years immediately preceding the commencement of business is allowed as deduction in the year of commencement. Aggregate of expenditure so incurred within 3 years immediately preceding. There is no restriction for any expenditure. They are saying whatever capital nature expenditure that you have incurred 3 years immediately preceding the commencement is allowed as a deduction in the year of commencement. Under which section? Under which section? 35. How about post? Can you read that? Any expenditure on scientific research carried on by the assessee would be deductible in full in that respective year. So any expenditure of capital nature on scientific research related to the business carried on by the assessee would be deductible in full in that respective year. Means in the post era, whatever the expenditure which are in nature of capital is allowed as a deduction in full under 35 in that respective year itself. Are you all with me? Are you all with me? Whatever expenditure that you are incurring in the post era which is related to your capital nature is fully allowable as a deduction in that respective year. Respective year means what? In the year in which you incur the expenditure. Are you with me? Now. Capital expenditure means expenditure including land. Yes or no? But will you get any deduction for the expenditure incurred on land? No. So there is a note, and can you read the note? Expenditure on land disallowed. Whether it is pre or post, you are not supposed to claim any expenditure that you have incurred on land as a deduction, not allowable. Whether it is pre-phase or post-phase, don't worry. Whatever the expenditure that you're incurring on land is never allowed as a deduction. Why department is not giving any deduction for the land? Whether it is depreciation or whether it is 35, they are not giving any deduction for the land. Why? Land will be land only. Whether you do some capital, scientific research, or whether you should do some business, land will be there only. The value will only appreciate. Are you with me? Say KS Academy is running academy in this land. Will the value of the land go down? That depends upon you. Okay, that depends upon you people. Normally it won't go down. Are you with me? Are you with me? Super. No, normally it will go up only. Because whenever there is an academy starting, what will happen? That area more students will come. Okay, if more students are coming, then what will happen? As the shops, bakery, everything will be, they will be ready, like cafe, bakery, hotels, everything will be ready. Because lunch, students normally don't travel to home. Every student normally don't travel to home. There are classic examples in Kerala for this. Small places, academy started with a branch. Then the very opposite to that, there will be one hotel. There will be one hotel they will start. And that hotel, maybe the hotel are expecting only students. And they give special discounts for the students also. This happens in Kerala. They give special discounts to the student. It's like that. If you show an ID card of that particular institution, you will get a discount. So the students are like that every time they go to that particular hotel only. But what happens if that all of a sudden the academy changes the place? Hotel also is forced to change the place. Yes, it is like that. So, coming back to the point, note number 2. Can you read note number 2? Salary, if paid before the commencement of business, shall specifically excludes perquisites. It's quite a huge blow. What is that? See, in the pre-commencement era, we have discussed salary. Yes or no? What do you mean by salary? Basic salary, DNS allowance, commission, brokerage, whatever it is paid by the employer to the employee, excluding perquisite. Because whenever, for claiming deduction, that employer is not supposed to claim perquisite given as a deduction. If it is a pre-commencement salary, that is for your scientist or your supporting staff. What if post-commencement period? Can you claim deduction for the perquisite? For the employer, the perquisite provided to the employee is a cost. Yes or no? If it is a cost, then he should be allowed it with a deduction. If it is a perquisite provided to your scientist, that too before the commencement of business, then you cannot claim any deduction under 35. If it is a perquisite, we call him. Yeah. If it is a perquisite paid after the commencement of business, then what's the speciality? Then you can claim deduction. You can obviously claim deduction. Are you all with me? So this is how you have to claim deduction for the perquisite thing. Are you all with me? Moving on to the next one. Can you read note number 3? Read that. Carry forward of deficiency, that is capital expenditure incurred on scientific research which cannot be absorbed by the business profits of relevant previous year, can be carried forward for indefinite period. Imagine when you charge your capital nature expenditure all of a sudden to your profits, what will happen? You will not have that much profits, especially in the first year and all. You will not have that much profit to absorb all your capital nature expenditures. Yes or no? Are you all listening? Especially when you start your business, your first year sales will be comparatively less because you are actually a baby to the market. Are you with me? Maybe in 2-3 years you will gain, you will pick up. So especially in the first years and all, will you have that much amount of profits to, to wipe out your complete capital expenditure or to charge off your complete capital expenditure? No. So what to do with that unabsorbed capital nature scientific research expense? Department say, if you have any unabsorbed capital nature scientific research expenditure, you carry forward it to the future. How many years you can carry forward? How many years you can carry forward? Unlimited or indefinite subsequent year you can carry forward. Are you with me? It's something similar to our unabsorbed depreciation. This also can be carried forward to the unlimited subsequent years. Now let me ask you one doubt. What if you have some unabsorbed revenue nature scientific research expense? What if you have some unabsorbed revenue nature scientific research expense? You treat it as your normal business loss only. And ultimately what will happen? The carry forward will be limited to subsequent 8 years only. Are you with me? If it is a normal business, yeah, both for post and pre. Yes, Ashwin, it's both for post and pre. Yes. So if you have any revenue nature, unabsorbed expenditure, then that will be treated as a normal business loss only, and it can be carried forward to 8 years only according to section 72 of income tax. Set off and carry forward. Are you with me? Are you with me? In income tax, don't skip any chapters, okay? You have to study everything because, do you remember the first day I've created a chart? Because everything is every chapter I can bring in one question. Okay, I can bring every chapter in one question. It is easily possible. It's quite easy to create a question where there is adjustment from every chapter, and institute will do that. They are doing it. They will do that also. Are you with me? So don't skip any chapters in income tax. Don't skip any chapters. Yes. Now, so this is how you have to deal with that. Now, can you read note number 4? Once you claim the deduction under section 35, don't come and ask for depreciation. Why? You claimed everything as a deduction. Now you want more depreciation, huh? Maximum 100% reduction. We have already given you 100% reduction. Thereafter, you cannot charge any depreciation. Are you all with me? Now, yes. Capital expenditure both pre and post? Yes, yes. If it is pre or if it is post, if it is capital nature and cannot be absorbed, you can carry forward. Yes. Break I'll give you. Okay, let me complete section 35. Let me complete section 35. I'll give you break after that. Okay, we have a few more things under section 35. That's it. So section 35 have a second phase. The first phase was in-house scientific research expenditure, and we have a second phase. And what is that second phase? Amount contributed or paid to outside agencies. What do you mean by amount contributed or paid to outside agencies? You are given some donations, not outsourcing. You have given some donations to some approved entities. Are you with me? Maybe in future you may have a benefit due to that donation. Maybe in future you may have a benefit. You may or may not have. Are you with me? So you are giving some donations to certain approved entities. That amount donated is allowed as a reduction under section 35. Say for example, Indian government wants to promote the scientific research and all. So you are donating something to an approved scientific research association in India, then it's a good thing because that association will get some fund. They will make use of that fund to create some technology, and as a country we will move on. Are you with me? US and all is actually totally updated and totally tech related, but most of the Indians are in US. They are really creating the tech. Yes, most of the techie company, only they are making use of mostly Indians. I'm not saying only Indians, mostly Indians. That is the problem of not Indians. They are not getting a job opportunity, or they are not getting a salary over here. So they are going outside. We cannot complain. We cannot say that those people who are going out of India does not have any national sentiments and all. Rather than sentiments, certain people prefer better lifestyle. That is a person's choice. So it's not, we can simply post something in Instagram and social media. It's very easy to post something in Instagram and social media. Take the mobile phone and write whatever you feel like. Okay, but it's actually very difficult when you step onto a person's shoes. He might be having certain financial commitments. That's why he is fleeing or going out of India. So we cannot complain that. If that opportunity is here, then I'm sure that that person will not, majority of them, may prefer to stay back in India itself. Yes or no? That we don't know, but we are assuming that yes. Okay, whatever it is. So coming back to the point, amount contributed or paid to outside agencies. You are donating something to an outside agency, then can you claim deduction? The answer is yes. There are 4 types of donations which can be claimed as a deduction. What is item number 1? Section 35 subsection 1 clause number 2. Can you read that paragraph along with me? Sum contributed to notified approved research association, college, university or other institution carrying scientific research. And how much is the deduction? 100% of such contribution is allowed as deduction. 1 second. If unabsorbed revenue expenditure is treated as business loss, means it can carry forward only for 8 years. Yes. Pre-commencement perks are claimed as deduction. In other head, no, you cannot claim. Get a deduction in 35 and another deduction claimed a deduction in chapter 6. No, because chapter 6A deductions, chapter 6 means you meant chapter 6A, right? No, chapter 6A items are different. Like charitable institutions, etc. is covered under chapter 6A. Not 35 items. 35 items are not over there in chapter 6A. Yeah. So for one expenditure, one deduction only. You cannot parallelly claim another chapter 6A deduction. Okay. Yeah. So moving on to the first one, friends. What is the first one? Any contribution to an approved either a research association or a college, university or other institution which does what? Scientific research. Whatever you donated, whatever amount that you donate, you can claim that entire amount as a deduction. Are you all listening? Or are you all thinking about the break time? Don't even think about it, okay? Only think about what? Results. Only think about results so that you will get some energy to move on. Right now, I'm feeling like I'm having exams. I want you to desperately sit so that I will learn everything. And I will clear my exams. I'm feeling like that. Is it like that? Okay. Yeah, I'm feeling like I'm having exam. Oh, I'm getting tensed. I'm getting tensed of completing the topic. And you guys are, come on, sir. Let's go for a break and chill, yaar. All right. So coming back to the point, friends. Listen. See, the first one is very simple. Research association, college, university or other institution or which does scientific research. And how much is the deduction? Whatever you donate, 100% you can claim as a deduction. And what is the second one? Can you read the second one? You are donating to a approved Indian company for scientific research. How much is the deduction? 100% of such contribution. You are contributing something to an Indian company which has an approval and which does approved scientific research. You can claim that entire donated amount as a deduction. And what is next? Sum contributed to approved notified research association, college, university or other institution carrying on research in social science or statistical research. What does that mean? You are donating something to a notified research association or a college, university or other institution which does what? Research in social science, or they are doing some statistical researches. Then again you will get a deduction of how much? The amount that you donated is allowed as a deduction. And finally you are donating to a national laboratory or a university or an Indian Institute of Technology or to a specified person for carrying out approved programs of scientific nature or scientific research, then how much is the reduction? 100% is the reduction. Are you with me? Are you with me? You are donating something to national laboratory, university or IIT or any other specified person for certain approved programs. That donation is also allowed as a deduction. And how much is the reduction? 100% is the deduction. Are you all with me? Now, there is a thing. Imagine, at the time of donating the amount, they had the approval. Soon after your donation, they lost the approval. Okay, say for example, today I donated something to a research association, and today they had an approval. Next week, they lost the approval due to some non-compliances or violations. Now you tell me, can I claim deduction for my donation? Can I claim deduction for my donation? Yes. The only one thing that you have to check, at the time of donation, if they had approval, you can claim the deduction. They have tested this once in exam. And I'm sure that some of the students might have written, in the year end, they don't have donation. Okay, sorry, they don't have approval. So, not allowable as deduction. That's wrong. At the time of donation, you need to check whether they have approval. If yes, they can claim it as a deduction. Otherwise, not. Are you with me? Don't write it. That is the note. Don't write. That is the note given over there. Okay, all the important things have been given in the revision note itself. So these are the things under section 35. Now let's quickly solve one small question. Okay, one small question to make it more clear, and I'll give you a break after that. Okay, small question it is. Come again. Yeah. So one small question. Let's solve and let's go for a break after that. Okay. So where is that small question? This is the one. There's nothing. So can you read question number 7 and tell me the answer? It's very simple it is. Perks are taxable on both scientist and employer. For the scientist it is taxable and it is not deductible for the employer. Yes. Yes, Huma. For the scientist, perk will be anyways a part of his taxable salary. For the company, it cannot be claimed as a deduction as well. That's the treatment, Huma. When you write answers in exam, always put separators, okay? Always put separators. What is separator? My God. Day. The 7,50,000 par. After 7 there is a comma. After 50 there is a comma. That's separator. அது போடணும் இல்லைன்னா ரிசல்ட் வரும்போது அதுக்கு வேறொரு வெர்ஷன் இருக்கு, அதை நான் சொல்ல விரும்பலை. ஓகே, அது ஆயிடும். ஹலோ, yes. So let's solve it quickly and let's go for a break, okay? So listen, it's a very simple thing, okay? It's a simple thing, so let's not waste time. Mr. A furnishes the following particulars for previous year 23-24. Compute the deduction allowable under section 35 for assessment year 24-25 while computing his income under the head Pgbp. He has exercised the option of shifting out of default tax regime provided under section 115 BAC 1A. So he is not opting for BAC. So let's see. Number 1, amount paid to notified approved Indian Institute of Science, Bangalore for scientific research? What to do? What to do? 100% deductible. Are you with me? Then, what is next? Amount paid to IIT Delhi for approved scientific research program. 100% deductible. Third one. Amount paid to X Limited, a company registered in India, which has its main object scientific research and development as is approved by the prescribed authority. 100% deductible. Next one. Expenditure incurred on in-house research and development facility as approved by the prescribed authority. So these are in-houses. Number one, revenue expenditure on scientific research. So 100% deductible because they already said that while computing is income under Pgbp, so they already have started the business. So it is not pre, it is post only. So entire 3 lakh you can claim as a reduction. Capital expenditure including cost of land 5 on scientific research, 7 lakh 50. What to do? Cost of land you cannot claim. So deduct that 5 lakh from that, and how much will be the remaining? 2 lakh 50,000. So altogether, if you add these things, it will be 1, 2, 3, 4, 5. If you add these 5 things, it will be 13 lakhs. And that is the amount that you can claim as a reduction under section 35. Is that point clear? And in exam, it is always better to write the section numbers, but subsections and clauses, it's not necessary that you have to remember and write. But you should remember the main section number. 35, at least you should remember. Are you all with me? All good. So friends, let's continue our discussion. We were discussing about what? Section 35. Now we are about to complete 35 AD. Thereafter we will be completing DDA, 36, 37, disallowances, and we will somehow finish our Pgbp theory. Today anyways we will finish. We will try to finish it as early as possible so that I can give you a question that contains different provisions. Okay, we have lengthy questions in Pgbp, but that I can give you only after completing the theory, deductions as well as disallowances that we will be solving, no worries. So for the time being, let's discuss the remaining deductions. Okay. So friends, moving on to the next one, that is 35 AD. Can you read the heading? Investment linked tax incentives for specified business. So please. So read the heading again. I want all of you to read it together. What is the heading? Investment linked tax incentives. So let's understand what exactly is 35 AD and the other things. Listen. Section 35 AD says that. Are you all listening? Are you all listening? Section 35 AD says that if you are a specified business, if you are what? Specified business, that means a notified business, then you can claim 100% deduction for all your capital expenditure. Then you can claim what? 100% deduction for all the capital expenditure. Don't have to worry about claiming depreciation. Rather, you capitalize everything and charge 100% deduction for the every capitalized assets and claim it as a deduction under 35 AD. It's a wonderful offer. So listen, if you are what? A specified business, then what is your advantage? You can claim 100% deduction for all the capital expenditure that you are incurring. Are you with me? Subjected to limits and conditions. So let's first of all understand who all are the specified businesses. Specified businesses means what? Those notified businesses under 35 AD. But the fact here is you need to remember which all are the specified businesses, because in certain questions they will mix it up. They will give normal business and specified business. You should identify which is normal and which is specified. For that you should learn the specified businesses or the list of specified businesses. Are you all with me? Let's understand which is the first one. Can you read the first one? Setting up and operating cold chain facility. Like a cold storage, if you are running a cold storage, that is considered as a specified business. What is number 2? Setting up and operating warehousing facility for storage of agricultural produce. So you are a warehouse where you store agricultural produces. If you are doing that warehousing activity, that is considered as a specified business. Are you with me? Are you with me? Not agricultural produce and all. What they're saying is warehousing of agricultural produce. You are storing the warehouse, or you are warehousing the agricultural produces, then you will be considered as a specified business. And what is next? Operating a cross-country natural gas or crude or petroleum oil pipeline network for distribution. It's not who manufactures crude or manufacture or extract natural gas. But what they're saying, if you are in the distribution of that too pipeline distribution, that too cross-country. What is cross-country pipeline? From India to Bangladesh, from India to Myanmar, from India to Sri Lanka. India to Pakistan, we don't have. So, I mean, you know that. Even BCCI is thinking whether to go and play Champions Trophy in Pakistan. BCCI is still thinking that. So, Pakistan say, if you don't come, we will call Sri Lanka. Okay, if you don't come, we will call Sri Lanka. But everybody knows that if that trophy has to be successful, then India have to participate, because the major revenue generator is BCCI as well as India. Okay, so if there is India-Pakistan match, then the gallery will be full. It will be like everybody will go over there and watch the match, and especially in viewership and all will be very high. But let's see in what happens. Okay. Yeah, forget about BCCI, think about ICAI. Okay, yes. So, moving on to the third point. What is the third business, friends? Building and operating a hotel of 2-star or above category anywhere in India. So, you are running a 2-star or above category, like a 3-star, 4-star, 5-star, 7-star hotel in India. That also will be considered as a specified business. Now, what is the advantage of specified business? What is the advantage? You can claim 100% deduction for all the capital expenditures that you are incurring. Are you with me? If you are a specified business, you can claim 100% deduction for all the capital expenditure that you incur. So, we are discussing which all are the specified businesses. So, what is number 3? Can you read number 3? Building and operating a hospital anywhere in India with at least 100 beds for patients. That means if you are running a hospital, and it is just like not a small private clinic. If you are a hospital, running a hospital, and that hospital should have a facility to accommodate 100 patients. There should be patient beds. Are you with me? So that is also regarded as a specified business. And what is next? Can you read the next one? Developing and building a housing project under slum rehabilitation. So, slum rehabilitation means, have you heard about Dharavi in Mumbai? Their Kala movie, it's slum redevelopment and rehabilitation. Have you seen that Kala movie? If don't worry. Okay, forgot about that. Slum rehabilitation means, say, what do you say? You are living in a slum, in an old dwelling. Okay, in an old, dangerously looking dwelling. So the local authority over there will take an initiative that they will demolish your old dwelling or old building, and they will construct smaller houses for you. Are you with me? Are you with me? So these are normally called as slum redevelopment or rehabilitation. So if you are in the business of developing and building housing project for slum redevelopment or rehabilitation, then don't worry, that is considered as a specified business. Imagine one thing. Say, I am building normal flat as well as this slum rehabilitation buildings. Then what to do? The normal flat construction is normal business, business 1. And the slum rehabilitation is business number 2, specified business. If I have multiple business, then I have to separately maintain books of accounts. Then only I can claim this 35 AD. Are you with me? If I have multiple business, then always keep separate books of account for specified businesses. Then you can claim the deduction. Otherwise, you will not get the benefit of deduction. Janata Garage movie. Oh, is that so? So, I don't remember. Janata Garage movie, there is a slum rehabilitation happening. I don't know. Yeah, whatever it is. So, listen. Coming back to the next point. Production of fertilizer in India. In VIP also. Okay, forget about movie. Okay. Agreed. And all the movie that you are about to say, agreed. Now think about production of fertilizer. Say, listen, You are a fertilizer manufacturer in India. Say you are what? A fertilizer manufacturer in India. You will be considered as a specified business. If you are in the manufacturing of fertilizer, you will be considered as a specified business. Then what is next? Setting up and operating an inland container depot or a container freight station. What is inland container depot? The place where hero and villain meets. In every movie, inland container depot is a place where hero and villain meets. If they meet, there will be a fight. I think in one of the Vijay movie, Vijay is coming in a Rolls Royce. And whenever he comes out of the car, villain will put a container over his Rolls Royce car. Come again? Virus movie. Yeah, Virusu, whatever it is. Virusu movie. It is like that. Okay. So Vijay then, after some punch dialogue and all, the person who put container over Vijay's car will try to put container over villain's car. Then he will show something like this. And he will show something like this, and the villain, and that the person, the crane operator will understand. Okay. Nobody, other persons were like looking like this, and the crane operator understood. Okay. That communication they have. So it is like that. I watched that movie. It is Varishu, right? Varisu. Yeah. So, yes. Normally I watch Vijay, Rajinikanth, Kamal Hassan movie. Okay. Kamal Hassan. No, I don't watch every Vijay movie. I don't watch every Rajinikanth movie. I don't watch every Kamal Hassan movie as well. Okay. I think that one movie, latest Rajinikanth movie, what was that? Not Jailer. After that, one movie was there. Lal Salam. I didn't watch. I didn't watch Lal Salam. Kochadiyan, I didn't watch. Don't watch. I know. I know the danger. So, Indian 2, I didn't watch. Then, something like that. Don't watch. Okay. Yes. Normally, like, watch Indian 2. Oh, revenge. Okay. No, I don't want to watch Indian 2 because I have that Indian 1 in my mind, and that is a kind of a great movie. I don't want to destroy that by watching Indian 2. I'll be watching Indian 3. Okay, I'll be watching Indian 3. Maybe Indian 3 Tata is 140 years or not out, okay. Indian 2, I think he's some 120 years not out or something. Flashback, then it will be super, okay. I think in Indian 2, Tata's coming up with six-pack and all. Okay, yeah. Annate up. What happened is, one of my friend told me Annate is fantastic, okay. And what I did is I booked a ticket in the theater. I entered the theater, my God, screwed like anything. That is the one movie somehow I want to get out of the theater, but Pasamana Tangachi. Just before 2 minutes of the marriage, she escaped. Pasamana Annan followed the Tangachi, killed every villain. Alright, so forget about the movies and coming back to the inland container depot and container freight station. If you are in the business of maintaining an inland container depot or container freight station, then we can definitely say that you are running a specified business. Inland container depot means the place where the containers are kept. Okay, and what is container freight station? That is the lorry business to transport the containers. If you are maintaining an ICD, that is inland container depot or a container freight station, that is regarded as a specified business only. Moving on to the next one. What is the next one? Beekeeping and production of honey and bee wax. If you are in beekeeping and production of honey and bee wax business, you will be considered as a specified business. And what is next? Setting up and operating a warehousing facility for storage of sugar. Listen, they are not saying sugar manufacturers. They are saying warehousing for storing sugar. You have to be careful. Are you with me? In examination, if they are saying that you are a sugar manufacturer, don't take them as a specified business. Sugar manufacturers are not specified business. They are only normal business. If you are doing a warehousing business for storage of sugar, that only will be regarded as what? Specified business. Is sugar a agricultural produce? It's a processed product. Sugar cane is the agricultural produce. Sugar is actually a processed product. Are you with me? Are you with me? Moving on to the next one. Setting up and operating a semiconductor wafer fabrication manufacturing unit. So if you are in the business of manufacturing semiconductor, you will be considered as a specified business. And what is next? laying and operating a slurry pipeline for transportation of iron ore. If you are in the business of transportation of iron ore, you'll be considered as a specified business. And moving on to the next one, developing and building a housing project under affordable housing scheme. Affordable housing scheme is something related to studio flats, a normal small flat which is affordable, which is within the limited square feet and all. If you are in that particular business, you will be considered as a specified business. And to the last business, what is that? Indian company in the business of developing and operating and maintaining a infrastructure facility. What do you mean by infrastructure facility? You are talking about Indian serial. You put a smiley due to my Annate watching. Yeah? Okay. After Annate, I decided to be very cautious. Every time I inquire, okay, before I watch a movie, I will definitely wait for the review to come. Not that? Never. I have given something more than this to him. Okay, I have given something more than this to him. There is a dumb movie in Malayalam called Janagan. It's a dumb movie, okay. At that time, it was like 3-4 years before. Not 3-4 years, more than that. I watched that movie. Okay, it's actually acted by a actor called Mohanlal. Okay, it was a dumb movie. I've told him that the movie is little bit lagging, but in climax there is a twist. I referred Shawshank Redemption. Have you seen Shawshank Redemption? You will understand. Okay, just like Shawshank Redemption, in the climax your mind will blow away. I told him, and that guy trusted me. So what happened is the movie was very lagging, and he somehow made him sit. Interval, he texted me, I thought of going out, but I said, no da, climax twist na super irke. So he somehow forcefully sit. At the end, there was nothing. Okay. In the end, it is more dumb. Okay, that's it. And he came out of that and he was like calling me, I didn't pick the call. I've given that to him, okay. So thereafter, I was very cautious. But after 4 or 5 years, he took revenge. I didn't expect that. I expected that within 3-4 months he will say same to me, but I didn't expect after 5 years he took revenge. He watched Annate. I'm actually a very, I normally watch all the Kamal and Rajini movies. I'm actually a great fan of both Kamal and Rajini. So he knows that because I watched this Jailer FDFS then in Kerala. I watched the Shivaji from Tamil Nadu, then Petai from Coimbatore. When you watch a movie from here in Tamil Nadu, it's another vibe. It's another vibe. You will die because water will fall, guilt will fall. After watching the movie, even your mother won't be able to recognize you. Full of color, guilt, everything will be there in your face. But it is like a fantastic, it's like a great experience to watch those movies. So he knows that and he took the revenge. But Annate was too much for me because mudiyadu. So, coming back to the point, friends, so these are the specified businesses you have. And what is the speciality of having a specified business? Friends, tell me. What is the... Hello, forget about Annate. Okay, think about specified business. What is the greatest advantage of having these businesses? You can claim 100% of the capital expenditure as a deduction while computing your total income. Are you with me? So that's what we are about to say. 100% of the capital expenditure incurred during the previous year, wholly and exclusively for the specified business, would be allowed as a deduction from the business income. 100%. So, but what they are saying is, expenditure incurred on acquisition of any land, goodwill or financial instrument would not be eligible for deduction. So 100% capital expenditure excluding these three. Which are the three exclusions? Number one, expenditure for land, no deduction. Then, expenditure for purchasing goodwill, no deduction. Expenditure for purchasing any financial instrument like share, debenture, etc., no deduction. Are you with me? Are you with me? If you are incurring a capital expenditure either for the purchase of either land or a building or land or a goodwill or financial instrument, except these three, you will get a deduction for all other capital expenditures provided you are a specified business. Is that point clear? Is that point clear? But there is one thing. Say for example, I have expended 10 lakh rupees for a building. Imagine I have expended, I am a 4-star hotel and I constructed a building and the cost of building is how much? 10 lakh rupees. Are you all listening? While making payment, what department say? If a single day payment exceeds rupees 10,000, then method of payment should be either account pay check or account pay bank draft or electronic clearance system like RTGS, NEFT, etc. or through prescribed electronic mode. If I am not making the payment in any of these 4 modes, then the amount paid is not allowed as a deduction. Imagine, out of 10 lakh, I paid 2 lakh cash. 2 lakh cash and 8 lakh I paid via account pay check. Then only I can claim 8 lakh as a deduction. That 2 lakh that I've paid in a day, otherwise than by way of prescribed methods, are not allowed as deduction. Are you with me? Are you with me? So if I am making a payment in a single day and the amount of payment exceeding 10,000 rupees, then method of payment is important. What is the method of payment? Either account pay check or account pay bank draft or electronic clearing system or through prescribed electronic modes like Google Pay, debit card, credit card, etc. UPI, that's Google Pay, etc., etc. Are you with me? If I am not making the payment in the prescribed method, then what will happen? That amount that I paid shall not be allowable as a deduction under 35AD. Is that point clear? Say for example, instead of this, I paid 9,90,000 through account pay check. Account pay check and 10,000 in cash. Is that a problem? That is not a problem. Up to 10 I can pay in cash. If I am paying more than 10, entire cash payment shall be disallowed. It's not like out of cash payment I can claim 10. It's not like that. If you are making a payment and the payment is, there is a threshold, and if the threshold exceeds 10,000, entire cash payment shall be fully disallowed. Have you got my point? Have you got my point? All right. So this is how you have to make the payment. Not this is how, this should be the method of payment that you have to make for claiming the deduction. I hope it is clear. Now moving on with the next one. B-star, what blue settai uncle review and decide, sir? Blue settai uncle, who's that blue settai uncle? Review man. Oh, YouTuber. All right, all right. But the problem is their Tamil will be like rocket Tamil. And it's very difficult for me to understand that kind of rocket Tamil. In Chennai, I can manage Tamil because I think people will speak English and Tamil. They don't use that Sen Tamil over here. But certain places, if we go, adukku oru tune irukku. Coimbatore also, it's a little bit mix of Malayalam will come in Coimbatore. But you go to Madurai, Salem and all, they will have a tune. That tune is very difficult to identify. There is a slang and that is very difficult to identify. They don't mix English in between. But Chennai, Coimbatore, it's fine. I can manage. Yes. Yeah. Tirunelveli. Kelvipettirukken. Tirunelveli Alva. Kelvipettirukken. In purchase of machinery 10 lakh in cash, and we claim deduction under 35 as capital expenditure pre or post. In cash, no, you cannot claim. Whether it is pre or post, you cannot claim. You are talking about section 35, scientific research. There, that will come under, there also is a restriction. There is a thing called 40A3, common restriction, that we will study, okay. If you are making cash payment 10 lakh, even under 35, you cannot claim it as a deduction. It will come under the common restriction 40A3. For 35AD, it's a specific restriction. Yes. Then for sugar business, in sugar manufacturing business, they are also warehousing the sugar produced. Will they get this deduction? Yes, provided they maintain separate books of accounts for the manufacturing and separate books of accounts for the warehousing. They will get for warehousing only. And they should be exclusively in warehousing. No, it's not necessary that you should be exclusively in warehousing. You should have separate books of accounts. That's it. For warehousing, if you have, no problem, you can claim the deduction. If you maintain books of accounts together, then everything will be considered as normal business only. Yes. So listen, where were we? We were talking about the payment restriction. Now can you read this? Prior commencement capital expenditure is allowed as deduction in the year of commencement if the same has been capitalized in the books of accounts of the assessee. Unlike section 35, here we don't have any 3-year restriction. Whatever pre-commencement expenditure that you incur in relation to 35 AD is allowed as a deduction in the year of commencement. Only one thing you have to check. What is that one thing? Whether you have capitalized it, you can claim that entire capitalized amount as a deduction. There is no 3-year restriction under 35 AD. All the pre-commencement capital nature expenditure, if you have capitalized it in the year of commencement, you can claim it as a deduction. I hope it is clear. Moving on to the next one, can you read the next note? I want all of you to read the next note along with me. Once assessee has claimed the benefit of 35 AD for a particular year in respect of specified business, he cannot claim the benefit under Chapter 6A under the heading C deductions or 10AA from the same business for the same or any other year and vice versa. For understanding this note, you should know what is this Chapter 6A C heading deduction. Do you know what is Chapter 6A C heading deduction? Do you know what is Chapter 6A C heading deduction? Yeah, Chapter 6A C heading deduction doesn't mean all the Chapter 6A deductions. Are you with me? Chapter 6A C heading deduction doesn't mean all the Chapter 6A deduction. Under Chapter 6A we have 80C, 80D, 80DD, 80DDB, 80G, 80GGA, GGB, GGC, etc. etc. Are you with me? Out of that, for inter, there are only 3 Chapter 6A C heading deductions. There are A heading, B heading and C heading. And C heading for inter is deduction under section 80 JJAA is 1. Deduction under section 80 QQB is another one. And deduction under section 80 RRB is another one. Do you remember what is 80 JJAA deduction? If you are a manufacturer who is subjected to tax audit and you are creating more employment opportunities, then that employee cost, whatever you incur that employee cost, you can claim 30%. Exactly, very good, Ragul. You can claim that 30% of additional employee cost as a deduction. So JJAA is 30% of additional employee cost. You are giving new job opportunities, creating new job opportunities. That salary that you pay to your new employees, you take 30% of that salary as a deduction under 80 JJAA. Then what is 80 QQB? Any idea? Excellent. Deduction for royalty for the book authors. If you are a book author and that book is in the nature of scientific literature, then literary, scientific, etc., architecture, etc., then you can claim a deduction for the royalty income that you have received. So deduction for royalty. Deduction for royalty. Then what is 80 RRB? 80 RRB. If you are a patent owner and you are receiving royalty on patent, QQB is royalty for the book authors and RRB is the royalty for patent owners. If you are getting that, you can claim a deduction, and that deduction for royalty on patent. This is royalty for book authors. 80 QQB deduction is either the royalty income received or 3 lakh. If you are getting royalty as a percentage of the book sold, then 15% of the value of the book sold also will come in the limit. 80 RRB, it will be either rupees 3 lakh or the actual royalty on patent received, whichever is lower. Are you with me? Now what is this chapter 6A reference here? Very simple. Imagine, say you are a sugar warehousing. Okay, you are in the business of sugar warehousing. Are you all with me? Sugar warehousing is a specified business and you have claimed deduction. You have claimed deduction under section 35 AD. You You have claimed deduction under 35 AD. Thereafter, don't come and ask for 80 JJAA deduction for creating new employment opportunity. Why? Because if you are a person who claimed 35 AD from the same business, you cannot claim any of the chapter 6A C heading deduction. Are you with me? Or vice versa. What is vice versa? You have already claimed a chapter 6A C heading deduction. Thereafter, don't come and ask for 35 AD. Either C heading or 35 AD. You will get either one, not both. For a business. Are you with me? Are you with me? Say, there is one more possibility. Say, listen, this is Mr. A. Mr. A having sugar warehousing as well as he have mobile phone manufacturing. He has mobile phone manufacturing. Are you all with me? So, both the companies are under Mr. A. Mr. A is the owner of both the entities. Sugar warehousing is specified business. Yes or no? Mobile phone manufacturing is a normal business. In this you can claim what? 80 JJAA deduction. And from the other business you can claim what? 35 AD deduction as well. So the restriction is not for an assessee. It is for a business. Have you understood this? Have you understood this? The restriction is for a not for an assessee, it is for a business. That means in this year, I can claim 80 JJAA deduction for the mobile phone manufacturing and I can claim 35 AD deduction for the sugar warehousing. For one business, don't claim both. Are you all with me? Are you all with me? Moving on to the second one, there is one more restriction. What is that? 10AA deduction. What is 10AA? Is there any loss in 35 AD? Can we adjust with the business income? Normal business income? No, not possible. You can adjust it only with the specified business income. Specified business loss can be adjusted only with the specified business income. That we will discuss later, okay? Don't worry. Yeah. So tell me, what is 10AA deduction? 10AA deduction. If you have an entity in ZES. What is ZES? Special Economic Zone. In Chennai, we have a ZES. Yes, right? In Chennai, we have a ZES. Where it is? What is the place name? Come again? Thoraipakkam. Yeah, Thoraipakkam, there is a ZES. Yes, I know. In Kerala, Kochi, we have a ZES called, in a place called Kakanad. We have a ZES over there as well. So ZES is a special economic zone. So what income tax department says is, whoever start a unit in ZES, is eligible for a 15-year exemption scheme or a 15-year deduction scheme. But right now it is restricted. You have to start your business before 31st March 2020 or at least before 31st March 2021. That means if I go start a business today in ZES, I'm not eligible for any deduction. But this deduction is there still in the Income Tax Act. So let's understand what is that particular deduction. Listen. So let's understand what is that particular deduction. Listen. Say for example, I have a unit in ZES. Unit means a business in ZES. What department say, if I have a business in ZES, then I can claim deduction for how many years? 15 years. Department say first 5 years. First 5 years, I can claim 100% of my export profit as a deduction. 100% of export profit as a deduction. For the first 5 years, the ZES entity will be an export-oriented entity. Are you with me? Nobody will open an entity in ZES for doing domestic sales. You might be having some domestic sales, that's it. But majority of your sales will be export only. Are you with me? Are you with me? What is the point in opening a unit in ZES? Because the export barriers are very less. Like the customs and other things, export barriers are very less in ZES units. So, if you are operating a unit in ZES, for the first 5 years, how much is your exemption or deduction? 100% of your export profit is fully deductible or fully exempted. For the next 5 years, second set of 5 years, how much? 50% of export profit is exempted. For the third set of 5 years, how much is the exemption? 50% of export profit or amount invested in ZES reinvestment reserve, whichever is lower. Whichever is lower will be your exemption. That simply means from year 1, 2, 3, 4, 5, 100% of the export profit you can claim a deduction. From year 6, 7, 8, 9, 10, you can claim 50% of the export profit as a deduction. From 11, 12, 13, 14, 15, either 50% of the export profit or amount reinvested in ZES reserve. That means it's a special reserve. The amount invested in ZES reserve or 50% of the export profit, whichever is lower, is allowable as a deduction. Are you with me? Now, what is the context here? The point is, say you are a fertilizer manufacturer in ZES. You are what? A fertilizer manufacturer in ZES. Fertilizer manufacturers are specified business. If you are a manufacturer in ZES, you can claim this 10AA deduction, but you will get only one. Either 10AA or 35AD, don't ask for both. Are you with me? Now something similar what we discussed earlier. If I have a mobile phone manufacturer in ZES and a fertilizer manufacturing in outside ZES, then from the fertilizer manufacturing I can claim 35AD, and from the mobile phone manufacturing in ZES I can claim 10AA, no problem. From one business I cannot claim both. Are you all with me? Are you all with me? So let's go back to that particular note and let's understand what is the meaning of that note. Can you read that note again along with me? Once the assessee has claimed the benefit of section 35AD for a particular year in respect of a specified business, he cannot claim the benefit under chapter 6A under the heading C or 10AA from the same business for the same or any other year, and vice versa. What is vice versa? It's your choice. You claim 10AA, don't ask for 35AD. You claim 35AD, don't ask for 10AA. Is that clear? Is that clear? Superb. No, not possible. Not possible. Yes, 10AA and JJA you cannot claim. That is under chapter 6A C heading. That restriction is under C heading. You cannot claim both. Are you all with me? Yes. So, moving on to the next point. Can you read the next point? Fire Muda. Because the topics are that much da. We have to somehow finish the topics, that's why. So, moving on to the next one, friends. Can you read the next note? Any asset in respect of which a deduction is claimed and allowed under section 35AD shall be used only for the specified business for a period of 8 years. Listen, say for example I have two businesses, one specified and one normal. I am buying every capital asset in the name of specified. Then I am transferring that capital asset in the name of normal. I am not selling it, I am only using it for normal. Is that possible? No, not possible. If you want to claim deduction, then you have to use, if you are buying some capital assets for 35AD business, you have to use it for how many years? Minimum 8 years. After 8 years, don't worry about transferring. Because after 8 years, that asset value will be anyways gone. So, till 8 years, there is a lock-in period for the value of the asset. And you have to maintain that asset for the specified business for how many years? 8 years. You have to maintain that particular asset for the specified business for 8 years. You are not supposed to transfer it to any other businesses, or you are not supposed to transfer it outside as well. Are you with me? That is called as lock-in period. Now moving on to note number 1. Can you read note number 1? Loss from specified business can be set off against profit from another business irrespective of whether the latter is eligible for deduction under 35AD. So the point is very simple. We can also interpret it like that. Loss from specified business cannot be adjusted with the income from normal business. You can adjust only it with another specified business. Are you with me? Are you with me? So loss from specified business can be adjusted only with profit from specified business. If you don't have profit from specified business, then what to do? Carry forward. How many year? Indefinite period. You can carry forward it to indefinite or unlimited subsequent year until you have profit from specified business. And one more thing is there. It is not necessary that you have to adjust that particular loss from that respective business itself. It is not necessary. I have one 4-star hotel and I have one fertilizer manufacturing. The loss from the 4-star hotel, I can adjust it with the fertilizer manufacturing. No problem. Are you with me? Are you with me? It is not necessary that I have to adjust that particular loss from 4-star hotel profit itself. It is not necessary like that. Are you all with me? Have you understood what I said? So specified business loss can be set off only with specified business profit, and if you don't have profit, wait. How many years you have to wait? Any years you can wait. Okay, that's it. Now let's solve a small question. It's an easy question only, but that will definitely give you another better idea on this provision. So I'm making you solve this easy question. Why? Because you will get a better understanding over the topics, okay? That's why we are only making you solve easy questions, because we don't have tough questions. It's too early for tough questions. Only after completing Pgbp, I will be able to give you some challenging questions. Just go through this question and give me the answer. It's easy only, okay? It's actually simple only, but provided you correctly read the question, it will be very easy. If you don't read it properly, then definitely this will be tough for you. Read it properly, understand the question, read the question, understand the question, and do the needful, okay? I need the final taxable income. So, being an easy question, let's solve it together. Let's not waste time. Mr. A commenced the operations of business of setting up a warehousing facility for storage of food grains, sugar, and edible oil on 1/4/23. So, they started the business on when? They started the business when? 1st April 2023. He incurred capital expenditure of 80 lakh, 60 lakh and 50 lakh respectively on purchase of land and building during the period, that is from January 23 to March 23, exclusively for the above businesses, and capitalize the same in the books of accounts as on 1st April 2023. So, as you all know, this 80, 60, 50 is actually a pre-commencement expenditure, because that is incurred from January 23 to March 23, and you started your business on April 23. So it is just before the commencement of business. So you tell me, what is the treatment? No treatment, you can capitalize it and claim the deduction. So let's write a note over here. So you have 3 businesses. Which all are the businesses? Warehousing of food grains and warehousing of sugar. It's warehousing of sugar and warehousing of edible oil. First of all, you tell me, out of these 3, which all are specified and which is normal? Warehousing of food grains means agricultural produce, wheat, barley, maize, etc. Then how about warehousing of sugar? That is specifically given under 35 AD. What is this edible oil? Edible oil means coconut oil is an edible oil, sunflower oil is an edible oil. That is not agricultural produce. It's a processed product. It's a normal business only. So this is normal. And the other 2 are specified. In the case of specified, then what you can do? Capitalize the expenditure and claim the deduction. In the case of a normal, what to do? Capitalize and claim depreciation. Are you with me? This is how the treatment is. So what we can do is, we can write the pre-commencement expenditure first. So pre-commencement capital expenditure. How much is the pre-commencement capital expenditure? First one. It is 80 lakhs. So including land 80. So you have to write full, because you have to write the steps, right? So you have to write it in full, including land it is 80. Second one, 80, 60, third one, 50. Now, from that, what they are saying next is, respectively on the purchase of land and building during 23, 20, January 23, March 23, exclusively for the above business and capitalize the same in the books of accounts on 1st April 2023. The cost of land included in the above figure is 50, 40, 30. You have to remove the cost of land. Why? Because you will not get 35 AD as well as you will not get depreciation on the cost of land. So we will remove the cost of land. So cost of land. How about the value of cost of land? Which all are the values? 50, 40, 30. 50, 40, 30. Now you tell me how much is the exclusive expenditure for building? 30, 20, 20. Now what is next in the question? See, during previous year 23-24, he incurred capital expenditure of 20, 15 and 10 respectively for the extension or reconstruction of the building, purchase and used exclusive for the above business. So he have incurred another expenditure, that is 20, 15 and 10 for extension of that particular building. So that is also allowable as deduction. So extension of building. How much is the extension of building? Cost 20, 15 and 10 respectively. So how much is the total cost? 50 lakh, 35 lakh, 30 lakh. This is the total cost. Total cost for building. All right. Now what's next? What is next now? Okay, our question is here itself, right? Yeah. So what is next? Compute the income under Pgbp for assessment year 24-25 and losses to be carried forward, assuming that Mr. A have fulfilled all the conditions for the claim, all the conditions, where it is? The claim of deduction under 35 AD and has not claimed any chapter 6A under the heading C, deduction in respect of certain incomes. The profits from business of setting up a warehousing facility forage of food grains, sugar and edible oil, profits are given. These profits are before claiming deduction under 35 AD and section 32 depreciation. For assessment year 24-25 is 16, 14 and 31. So 16 lakh 41, sorry, 16 lakh, 14 lakhs and 31 lakh is the profit from the activity. So we will write the profits. We'll write the profits before 35 AD and 32, 16, 14 and what is the third one? 31 lakh. Now, from the first business you can claim, first two businesses you can claim 35 AD deduction. How much is 35 AD deduction? First one, 50 lakh. Second one, 35 lakhs. And third one, no 35 AD. Now, in about depreciation under section 32, for the first two businesses you cannot claim depreciation. Why? You have claimed the entire cost as a deduction. Third business you can claim depreciation. How much is the depreciation? 30 lakh into 10%. Since it is building, the rate of depreciation is 10% and it will be 30 lakh into 10%. And can you tell me how much is 30 lakh into 10%? 3 lakhs. And how much will be the loss or profit? First case, loss. How much is the loss? How much is the loss? 34 lakhs. Second case, how much is the loss? 21 lakh. And third case, how much is the loss? Not loss, profit. It will be 28 lakh profit. Can you adjust these two losses with the profits? Can you adjust these two losses with the profits? No. Why? Because specified business loss can be adjusted only with specified business profits, not with the normal business profits. So how much is the total loss? 55 lakhs is the total loss that have to be carried forward to subsequent year. And the taxable profit will be 28 lakh. Are you with me? This is the final answer. Are you all with me? Ragul, you want the question or the answer? How to identify normal business or specified business? Study the list of specified business. Then you will identify. Okay. For me, I missed the deduction depreciation for eligible oil business. Apart from that, everything is correct. Okay. Next time, you will make it right. Don't worry. Done. Great. You want the question again? Yeah, I'll show it to you. Somebody is taking the picture of answers. You got the answers? Yeah, I'll show the question also. This is actually institute study material question. Okay, it's actually an institute study material question. Yeah, so I hope it is clear. Now moving on with the next concept, friends. Moving on with the next concept, where we were discussing 35 AD. Now the next important section. I'm only selected important sections under PGP. Okay. Next important section, in my opinion, is amortization of expenditure incurred under voluntary retirement scheme. So, do you remember voluntary retirement? Voluntary retirement. What is voluntary retirement? Tell me, what was voluntary retirement? Huh? Before the age itself, the employee is retiring from our company. That is said to be what? Voluntary retirement. So when an employee is, retiring voluntarily, we have to pay him what? A compensation. It is called as voluntary retirement compensation. Do you remember that? Do you remember that? So whenever an employee retire voluntarily, we have to give him a voluntary retirement compensation. For the employee, it's an income. For the employer, it's a expense or it's a cost. If it is a cost, then he should be given with a deduction. And that deduction is covered under which section? 35DDA. And the point is what department say, the entire amount that you pay to your employee at the time of voluntary retirement is allowed as a deduction in 5 equal annual installments. Are you with me? Are you all listening? Are you all listening? The entire compensation that you are paying to a employee under voluntary retirement is allowable as a deduction, but not in a way, or not all of a sudden. Rather, what you need to do is, you need to amortize it, or you need to claim it as a deduction in 5 equal annual installment. Is that point clear? So that is this, deduction for such expenditure shall be allowed in 5 equal annual installment. You can cross off this note, because this note is not there as a part of your new syllabus. It's a reorganization, succession point, etc. You can cross off this particular note from your revision handout, okay? Yes. Now, 35DD is such a simple section. Whatever amount you pay, claim it as a reduction in 5 equal annual installment bus. Is that clear? Is that clear? Now, friends, now the second last deduction, we are about to start the second last deduction, that is deduction under 36. Can you read the heading? Section 36, other specified deductions. Before I start other specified deduction, let me give you a statutory warning. Have you seen Kaidi movie? Have you seen Vikram? Have you seen KGF 2? There are certain specialities in these movies. In these 3 movies, there is a common scene. The hero is coming up with an automated machine gun. Periyappa, Muthamma, something like that. In KGF 2, it is like that. And in Vikram, Kamal Hassan is coming up with an automated gun. And in Kaidi, I think, what is his name? Karthi is coming up with a kind of a machine gun. Yes or no? Perima. Okay, whatever it is. Periyappa, Periyamma. Kasa Panama. Okay. So, listen, see, something like that, I am about to start my machine gun. I will continuously fire the deductions. Okay. It is like short, simple deduction. So, I have no plans to pause. I will keep on firing provisions at you. I'm not saying don't sleep. I'm saying don't die. Somehow you have to survive. Are you with me? Are you with me? Are you all ready for the firing? Yes, so let's start the deductions one by one, because we have a lot of deductions. Okay, this is section 36. This much is section 36. Around 1 page of deductions we have. That too small and short. So let's start with the first item under section 36. And what is the first item? I want all of you to properly read that along with me. Okay. So read that first one. Insurance premium paid. And what is that? Insurance premium paid on stock or stores of business or profession is allowed as deduction. You can cross off this paid, okay, because there are 2 paid in one sentence. You can cross off that second paid. Now read that again. Insurance premium paid on stock or stores of a business or profession is allowed as a deduction. What do you mean by stock? Stock in trade. What do you mean by stores? Consumables and stationaries. If you have taken an insurance either on your stock in trade or on the consumables, the premium that you are paying is allowed as a deduction. Are you all with me? If you have taken an insurance either on your stores or on your stock in trade, the premium that you have paid is allowed as a deduction under section 36. Is that point clear, friends? Now, moving on to the next one. What is the second deduction? Can you read the second deduction? Premium paid by employer for the health insurance of employees. Say you are an employer and you have taken a group health insurance for the benefit of employees. In certain company, these employees will get health cards. Maybe if your parents are working in some companies, they might have a health card. What is the advantage of health card? You can go to the hospitals which they have a tie-up. You can go to that hospitals and show that health card. You will get medical treatment for free up to certain levels. Are you with me? For that, your employer might be paying a premium amount for the benefit of that group health insurance. Are you all here? Are you all here? So, if the premium paid by the employer and that premium have to be paid in any mode other than cash. The premium have to be paid in any mode other than cash, that is allowed as a deduction. Are you all with me? So if the employer is paying a premium for the benefit of the health insurance of the employee and the mode of payment is other than cash, it is allowed as a deduction. I hope that point is also clear. So how about premium paid for the stock and stores? What should be the mode of payment? What is the mode of payment for the stock and stores? First item. Can you pay it in cash? You can pay it in cash, but the single day payment should not exceed 10,000. If that exceeds 10,000, that will come under 40A3 common disallowance. Are you with me? If you are paying a premium, insurance premium for the stock and stores, and that insurance premium that you pay in a single day exceeds 10,000, and the payment is in cash or other than prescribed modes, then what will happen? Disallowance under 40A3 will come into the picture and that amount that you paid is not allowed as a deduction. Are you with me? How about health insurance premium? Even if you pay 1 rupee in cash, you will not get the deduction. That's why there is a restriction here itself other than cash. You got it? Understood? Yes. I hope somebody was asking that. Yeah. Insurance paid. Yes, Huma. Got it. Very good. So you keep on asking your doubts like this. Technical doubts I can definitely answer. All right. So moving on to the next one. What is the third one? Read the third one. Bonus and commission. If the employer is paying some kind of a bonus or commission to his employees, that also is allowed as a deduction under section 36. But there is one condition. It is subjected to section 43B. Friends, listen. In Pgbp, how do you compute the taxable profit? In Pgbp, how do you compute the taxable profit? The computation is actually based on the method of accounting followed by the assessee. The computation is actually based on the method of accounting followed by assessee. There are two allowable or recognized method of accounting. Number one, mercantile system. That means on accrual basis you can show. Number two, cash system. Whatever received is your income, whatever paid is your expense. Are you with me? Are you with me? Imagine you are maintaining your books of accounts on mercantile system. 99.99% cases it will be mercantile system only. Imagine you are maintaining your books of accounts in mercantile system. You will, the bonus, say it is payable status. The bonus is in what? Payable status. You will put a payable entry and you will claim it as a deduction. Yes or no? But department say not allowed. For bonus and commission, all those items which are covered under 43B, you have to actually make the payment. Are you with me? Are you with me? For all those items which are covered under 43B that we will discuss today itself, we will discuss 43B. That is the last section that we have in Pgbp. 43B, items under 43B. You will get it as a deduction only on one condition. That what is that one condition? You have to actually make the payment. Then only you will get the deduction. Are you with me? Are you with me? So, even though you have put a payable entry, you cannot claim a deduction under 43B. Sorry, you cannot claim a deduction under 36. Why? Because it is subjected to 43B. This is called as, what do you say? I forgot the interpretation name. This is the problem. I've told you that I'll forget easily. This is called as harmonious construction. Certain words I'll easily forget. I've told you yesterday, I think. Do you remember that? I'll keep on forgetting everything. Come again? Edusdem generis. Yeah. Like that, there is another interpretation called as harmonious construction. Yes, it is called as harmonious construction. What is harmonious construction? 36 is subjected to 43B. 36, income tax department say you claim it as a deduction. When it comes to 43B, they are saying not allowable a deduction unless you actually make the payment. Which is right? Both are right. 36 is subjected to 43B. It is called as harmonious construction. Are you with me? Yes. Yes. Because 43B is a temporary disallowance. You put a payable entry this year and you claim it as a deduction on the payable basis. You don't claim it as a deduction because if it is disallowed due to that payable status and you actually make the payment in the next year, you can claim that particular deduction in the next year on actual payment basis. Got it? It's a temporary disallowance. When you actually make the payment, you can claim the deduction. Excuse me. Come again. We can claim those over 5 period. 5-year period. What? That is DDA. Gajaniya. That Surya movie, right? They avlo illa illada. What they are saying? Short-term memory loss, something like that, right? Then, whatever it is. My bad, sir. I confused it with the preliminary expenses. Okay, no. Preliminary expense I haven't covered. Why? Because never asked in exam. In the history of ICI, they have never asked anything in relation to preliminary expenses. 35D. Never asked. Yeah. Income tax thing I remember. Why? Because every day I'm doing this. Okay, so that I remember. Apart from that, all right. I mean, that doesn't mean I completely forget. That will not come. That will get, I know that, but that will not come. Inge irukku, ana inge varadu. Okay. Yeah, the payment is not done. Yes. If 43B will discuss later. Okay. If payment is not done, but payable entry is done, then we can claim it as a deduction under 36. No. Payment not done, items covered under 43B, you cannot. You just wait for the 43B. Okay. We will cover that in detail under 43B. So, bonus and commission under section 36 is allowed as a deduction subjected to a condition under 43B. And what is that condition? On actual payment basis only you can claim the deduction. Can you read the next one? Interest on borrowed capital. You tell me what you mean by interest on borrowed capital. You have taken a loan for your business or profession. All the interest in relation to that particular loan is allowed as a deduction under section 36. Are you with me? Are you with me? You have taken a loan for the purpose of your business or profession. All the interest that you are paying in relation to that particular loan is allowed as a deduction under section 36. So can you read the other side of this? Deduction of interest is allowed in respect of capital borrowed for the purpose of business or profession. But under that there is a note, and can you read that note? Interest paid on loan for acquiring a capital asset shall be capitalized till such asset was first put to use. Thereafter the same shall be allowed as a deduction under section 36. Are you with me? Interest paid on loan in relation to a acquisition of a capital asset. That proportionate interest until you put to use that particular capital asset have to be capitalized. Only the rest can be allowed as a deduction under section 36. Have you studied borrowing cost in AS? Borrowing cost. Okay, forget about borrowing cost and listen over here. I'll give you an example for a better understanding. And listen. Imagine, say on 1st April 2023, we have purchased an asset for 10 lakh. I have purchased the plant and machinery for 10 lakh. by taking that entire 10 lakh as loan. I took a loan of rupees 10 lakh at an interest of 12%. Are you with me? I purchased an asset on 1st April 2023 and the amount of or the purchase cost of asset is 10 lakh. The 100% I took a loan and the interest of loan is how much? 12%. Say it is like that. Now listen, in this case, what I've done is say I took around say 10 months to complete the installation. Say it's a huge plant and machinery. So I took how many months? 10 months to complete the installation. Took 10 months to complete the installation means put to use is on say 31st or 1st January or 31st January or 1st February will take. 1st February 2024 is the put to use. Are you with me? Are you with me? So the date of put to use is on 1st February 2024. Now you tell me how much is my annual interest? How much is my total interest? 12% on 10 lakh will be 1,20,000. Annual interest will be how much, friends? 1,20,000. Can I claim that entire 1,20,000 as a deduction under section 36? No, I cannot claim that entire 1,20,000 as a deduction under 36. Then what should I do? What should I do is I need to split up that interest from the date of loan till date of put to use. How many months are there? 10 months. So 1,20,000 divided by 12 months into 10 months means how much? 1 lakh. That 1 lakh I have to capitalize along with the cost of acquisition of asset. Purchase cost is 10. I have to capitalize 1 and I have to make it 11 lakh. On the remaining 20,000, I can claim as a deduction under section 36. Are you all here? If situation is like this, only those proportionate interest after put to use, I can claim as a deduction. Until I put to use all the proportionate interest, I have to mandatorily capitalize with the actual cost of the asset. Thereafter on 11 lakh, I can claim what? Depreciation. And what will be the rate of depreciation? What will be the rate of depreciation? It is 7.5 because it's a general normal plant and machinery and the rate of depreciation will be 7.5% on 11 lakh. Are you with me? Why 7.5? Put to use on 1st February, less than 180 days. So normal depreciation is 15, but I can only claim 7.5% as a depreciation. Is that point clear? Is that point clear? Yes. These kinds of things you have to be careful because they may test. They may test these kinds of things by giving some numbers, dates and all. Are you with me? Are you with me? Yes. Yes. AS16, same treatment in AS16 also. Yes. Moving on. So can you read that note again now? I want all of you to read that particular note, including online. Please read it together. Interest paid on So thereafter the same is allowed as a deduction under section 36 subsection 1 clause number 3. I hope that is clear. Sir, now income tax rate have changed. That is not applicable for September as well as your January 2025. Okay. We have to put some using new rates or old rates. This, I think I have told this earlier. You don't have to follow the changes happened yesterday. Okay. Yeah. Moving on. Interest on borrowed capital. Yeah. What is the next item? Can you read the next item? Contributions to Provident Fund and other funds. Listen, yesterday, hope you remember, yesterday or day before yesterday, we have discussed the PF contribution. To a PF, there is employer contribution and employee contribution. Employer contribution is actually a cost for the employer and he should be given with a deduction, and that deduction is covered under section 36. Let's understand what exactly is that particular deduction. Can you read the point? Employer's contribution to employees recognized provident fund, approved superannuation fund or approved gratuity fund are allowed as deduction. How many types of provident funds we have? statutory provident fund, employer's contribution to statutory provident fund is not covered under 36. It is under 37, general deduction. Because here they are only saying RPF. Employer contribution to RPF is covered under 36. Employer contribution to URPF is never allowed as a deduction. It is a disallowance under 40A9. We have a specific disallowance called as 40A9 that we will discuss under the disallowance category. There is no employer contribution to PPF. Are you with me? It is only assessees on contribution to the PPF. Are you with me? So it depends upon the type of contribution. You should decide. You should adjust that in your examination. Are you all here? You should learn a thing in that manner. Because in examination, they will never ask this theory. They will say something. You should be able to identify what is the treatment in IT Act. Are you with me? Are you with me? So, read that again. Employers' contribution to employees' recognized provident fund, approved superannuation fund or approved gratuity fund are allowable as deduction under section 36. Is that clear? Now, can you read the next deduction? I told you this is like I'll continuously fire deductions. This is the one. Because we have to finish up 36 and we can easily do that. I hope you are able to follow what I'm saying. Are you all able to follow what I'm saying? Yes, sir. Now, next one. Can you read the next one? Employer's contribution to the account of employee under pension scheme referred under section 80 CCD. Say that simply means into the pension fund also, one second. All these are 100% deduction only. Yes, 100% deduction only. Whatever amount that you expended, that amount you can claim as a deduction. Yes. So we can say 100%. Now listen. Say, to a pension fund also, how a pension fund works. Very simple. Employer will contribute. Employee also will contribute to a pension fund. Are you with me? It is like RPF only. To a pension fund also, employer and employee will contribute. Normally, it will be equal contribution. Now you imagine, the employer's contribution to the pension fund is actually a cost for the employer. Yes or no? That should be allowed as a deduction. And how much is the deduction? What department say is, employer's contribution to the account of employee under national pension scheme, deduction would be restricted to 10% of the salary of employee in the previous year. You will get a deduction for the pension contribution, but how much is the maximum deduction? How much is the maximum deduction? 10% of the salary. What is the definition for salary here? Basic salary plus DA forms part of the retirement benefit. Excess shall be disallowed under section 40A9. If you are contributing more than 10% of basic plus DA, excess shall be disallowed under section 40A9. Is that point clear? Hello, is that point clear? Yeah, just go through this question number 10 and give me the answer. It's an easy question, okay? Your institute study material question only. Just go through this question Q10 and give me the answer. This is nothing, very easy. Done? Very simple. So X Limited contributes 20% of basic salary to the account of each employee under pension scheme referred under 80 CCD. Dearness allowance is 40% of the basic salary and it forms part of the pay of the employees. Compute the amount of deduction allowable under 36 subsection 1 clause 4A if the basic salary of the employee is aggregating to rupees 10 lakh. Would the disallowance under 40A9 be attracted, and if so, to what extent? You tell me, how much is the basic salary? Basic salary is how much? 10 lakhs. So how much is the actual contribution to the pension fund by the employer? How much is the actual contribution given by the employer? We can say actual contribution of employer is 20% of 10 lakh. That will be 2 lakhs. How much is deductible? Under section 36, only 10% of basic plus DA forms part of the retirement benefit is only allowable as deduction. Basic is 10. How much is DA forms part of the retirement benefit? 40% of the basic. That means 4 lakh. So altogether it is 14 lakh. So you will only get a deduction for 10% into 14 lakh. That will be 1 lakh 40,000. And what will happen to the remaining 60,000? The remaining 60,000 shall be disallowed under section 40A9. This should be the answer. I hope it is clear for you. They are asking 40A9 and deduction. So we have written both disallowance and deduction. I hope it is clear. So moving on with the next one. Moving on with the next deduction that we have is, can you read the next one? Amount received by assessee as contribution from his employees towards their welfare fund to be allowed only if such amount is credited on or before due date. So can you read the second side, the other side? Such contribution from the employee is treated as income of the employer under section 224 clause number 10. 2 subsection 24 clause number 10. Don't read it X. It is Roman numeral 10. Now, subsequently, when such sum is credited by the employer to the employee's account in the relevant fund on or before due date of crediting such contribution prescribed under the relevant act, then deduction is allowed. Imagine, say, think about RPF. Think about what? RPF. To the RPF, both the employer as well as the employee puts a contribution. Are you with me? Are you with me? To the RPF, both the employer as well as the employee puts a contribution. We will make use of an example. Say for example, there is a recognized provident fund and there is employer is there and there is employee. Say the salary of the employee is say 10 lakh. How much is the salary? 10 lakh. Say the employer is deducting 1 lakh from the salary and he will pay only 9 lakh to the employee and he will deduct this 1 lakh and he will make the payment to the RPF. So he will take another 1 lakh from his pocket. We can say out of pocket. And 1 lakh is the deducted amount from the salary. This is from employee's salary. Are you all with me? Are you all with me? So total contribution to the RPF will be how much? 2 lakh. This we have already explained in salary. But one thing, from the perspective of employer, this 1 lakh from his pocket is a deduction under section 36 that we have already discussed. Yes or no? Yes or no? His out of pocket contribution to that particular RPF is allowable as a deduction under section 36. Now imagine he is deducting an amount from the employee. He is deducting an amount of how much? 1 lakh rupees from his employee. Yes or no? Income tax department say whenever you deduct a contribution from that employee's salary, that deducted amount is deemed to be your income. We will consider that deducted 1 lakh as the employer's income. Thereafter, if you correctly within due date you make the payment to the RPF, you can claim that entire 1 lakh as a deduction. The impact is nil. But whenever you deduct it, we will treat it as your income. Whose income? Employer's income. And when you correctly make the payment, if you correctly make the payment only, we will allow you it as a deduction. Why there is a provision like this? Otherwise, what will happen? Employer will deduct and keep it for himself, because every businessman will have a liquidity issue. Working capital management is actually a skill. If you are not properly following that, you will definitely have a working capital issue will be there. Yes or no? Yes or no? Every businessman will definitely have that working capital issue. So if you are deducting it and not making the correct payment, that will be an income forever. If you miss the due date, which due date? As per the relevant act. If it is PF, it is PF Act. In PF Act, you have to pay it within 15 days of closure of a month. Say this today, If I'm deducting it, I have to make the payment before 15th of next month. Are you with me? Are you with me? So the point is very simple. I'll repeat that again. When the employer deducts employee's contribution to the provident fund or any labor welfare fund, that amount deducted by the employer shall be treated as income of the employer. After that, the employer is supposed to make the payment to the RPF or whatever the fund it is within due date under the relevant act, whatever the act it is under. Under the relevant act, the employer is supposed to make the payment. If he makes the payment like that, he can claim that deduction. So at the time of cutting the salary, income, when you actually make the payment, it is allowed as deduction, provided you are actually making the payment on or before due date of the respective or the relevant act. Is that clear? Is that clear? No, not allowed as deduction. After due date, if you make the payment, you don't get it as a deduction. Then don't think that the employer will not make the payment because he have to pay the penalty and interest according to the PF Act. This is only under Income Tax Act. Income Tax Act also is giving him a hit. Okay, he will get a lot of hits from PF Act, like penalty, interest and there in the PF Act. Yeah. Sir, I didn't get that. Thame right. FIR, what are you saying like? Okay, whatever it is. You ask it again, VV, I didn't get. Okay. Taxed for employer if not paid on time. Ah, yes. Oh, that's what you meant. Even you, after 1 week, you check that chat. You yourself will not understand that, okay? Yeah. So, coming back to the point, friends. Coming back to the point. We were discussing about what? That employee's contribution to the PF. When the employer deduct that, that will become his income. And when he makes the payment after that, that can be claimed as a deduction. Now, moving on to the next one. What is the next one? Bad debts. What is bad debt? Complete silence. What is bad debt? What is bad debt? Bad debt means you have done a credit sale. Okay, your buyer is supposed to make you a payment. He will be dash in your books of accounts. There is a technical name for him. You have done a credit sale. Your buyer is supposed to make you a payment. Your buyer will be dash in your books of accounts. Debtors. Your buyer will be debtors in your books of accounts. Are you all with me? When you have done that credit sale, that is a sale. That will come in your P&L. If you are maintaining books of accounts in mercantile system. If cash system, don't worry. Are you with me? You have shown it as a part of your sales and you have paid the taxes. In the next year only you came to know that the debtor is not going to make you the payment. He escaped. He shifted to Singapore. Now you cannot chase him like Singham. If you are Singham, you will chase him. Okay, you will hunt him down. You will wait for him to leave the country. You will not do anything until he leaves the country. Once he left the country, you will chase him down. Australia, Africa, wherever it is, you go and hunt him down. I'm actually a great fan of Surya, except for Singham series. I watch every J Beam and the other one. There is another movie, Surarai Potra, wonderful movies. It's a gem of class movies it is. Except for Singham. In Singham there is a scene, he will come like a tiger, not lion. Singham not lion. He's come with a lion and he will hit the villain and the villain will bounce. Just like Britley bouncer, that villain will bounce and, I mean, again, except Singham and that Rolex character and all, super it is. Coming back to the point, forget about Singham. Think about bad debts. Okay, 24 also good movie. Yes, I love 24 also. Yo, that watch movie, right? Ah, yes. So, bad debts, what they are saying is, to claim bad debts as a deduction there, you have to satisfy certain condition. You have to satisfy what? Certain conditions to claim bad debts as what? A deduction. Which are the conditions? Number one, the debts or loans should be in respect of business which was carried on by the assessee during the relevant previous year. That means the debts we are talking about should be connected to your business. Then only you claim that bad as a deduction from your business. Are you with me? Are you with me? Yes, point number two. The debt should have been taken into account in computing the income of the assessee. I've told you, you have done a credit sale and that sale is there in your P&L account and you shown it as your income. thereafter only you understood that that person is not going to make you the payment. So you are actually reversing it. Are you with me? Bad debts allowed as a deduction is just like a reversal entry of the income that you have already shown in your P&L account. Are you all here? Because in income tax, there is nothing called a reversal entry. Either it is income or expense. So the income that you have already shown, now you reverse it by claiming it as a deduction. Then what is point number 3? It should be actually written off in the books of accounts of the assessee. You have to actually write off by simply putting a provision. Don't come and ask for a deduction. What's the difference between provision and actual writing off? Provision means you will write provision for bad and doubtful debts. I don't know whether he will become debtor. I mean, he will become bad, but I'm for certain period of time when I'm calling him, he is not attending the calls. So I have a hint right now. I have a doubt. That's why I'm putting it as a provision, not allowable as a deduction. Once it is sure, you write it off from your books of accounts and you claim it as a deduction. Then what is the last one? Bad debt of discontinued business is not allowed as a deduction even though the assessee has any other business continued. Once a business is discontinued, then all the bad debts in relation to that business is also gone. Don't claim that bad debts as a deduction from your another businesses and all. It's not possible. Are you all with me? Are you all with me? Now let me ask you one simple doubt. What if I got that bad debt, say for example, in 2021, I have done a credit sale. In 2021, I have done a credit sale. In 2022, that become bad. That person called me and he said that I'm not going to make you the payment. So I've written it as bad debt and claimed a deduction. In 2023, he came back. Okay, he came back and he paid all the money. He went to some saint and all, and he became a new person and he came back and he paid that entire money. Then what should be the treatment? Year of sale, it should be your income in the P&L and that will come as a taxable profit. Year of bad debt, you claim it as your deduction under 36. Year of recovery, you show it as your income again. Are you with me? It is called as what? Recovery of bad debts. That's what department say. Don't show in book. Oh, don't show in book. Okay, then I think I have to, what do you say? I have to make you attend some of the sessions of some of the gods, okay? There are actually a lot of gods available everywhere in India. Do you know that? Everywhere in India there are a lot of gods. Not God. God is original God. There are gods. God, G-O-D is the original God. We will say G-A-A-D. God. What is God? You don't know what is God? Okay. Say tomorrow I am wearing a white dress. Okay, tomorrow I am wearing a white dress. Or forget about me. Imagine, where is your exam center in Chennai? I'll tell you the most profitable business in India. Where is the exam center in Chennai? I don't know, which is the major exam center in Chennai? Women's college. Okay, women's college, don't worry. Say women's college. In front of the women's college, just before the exam, first day of exam, you do one thing. You place a white sheet. Okay, white sheet with a stone. Just like that PK movie. You place a white sheet with a stone. Put some candles, agarbatis or whatever you have. Okay. Then you put around 200 rupees. That too in coins. Either coins or notes. You put it like that. Then you send someone to pray in front of that. Okay. You send someone, like he should look like a student. You should send someone to pray. And tell him to put 50 rupees or 100 rupees. Small amount only. Tell him to put 50 rupees or 100 rupees and say, God, give me exemption for, which is the first exam? Accountancy. God, give me exemption for accountancy. Some people will say, one fool is there, he is actually praying to that stone, okay. People will say like that only. When the exam gets over, you tell that same person to come from the classroom and say, thank you God, I'm sure that I will get exemption, I will never forget you. Then again tell him to put 100 rupees. Then those students who have written exam and went wrong will come, I think tomorrow onwards, I too have to put some money. Yes, they will put. Okay, they will put. And tomorrow send another person, like this, he is going over there and putting more money and say, God, again do this. 2-3 days, it will pick up. On the third day, you see, students, others also, who have no idea what is that, will come and put money. Okay, my cost is only 50 rupees. But what I'm supposed to get is an exemption. Let me take a chance. Let me check your chance. They will put definitely. Definitely yes. This will happen. This is the most profitable thing because you have no cost. You pay something to that boy who acted like a student. Are you with me? Are you with me? But the original God someday will pull your collar. The original God will definitely come. Day, Ennada, what are you doing? That God will definitely come and pull your collar. And this is one of the most profitable business that you can run in India. Nityananda is a best example. Come again? He started a country. That is another level. Yes. Yeah. So, Sadhuranga Vete, there is a movie like that. Okay. No, his tax rhyme, his new tax rhyme, no taxa. Okay, whatever it is. So, imagine a situation where you're getting back this money. Okay, once you have claimed it as bad debt and you're getting that particular money, then when you get back that particular money, you show it as your income again. Are you all with me? Are you all with me? So that is all about the bad debts. Now moving on. Expenses on family planning. We will complete 36 and 37 before the lunch break itself. Yes. Okay, I'll create a scenario. I understood what you said. I'll create a scenario like that. Don't worry. Say, what he says is like, imagine 10 lakh was the bad debts. 10 lakh was the bad debts. It's not a section, okay. It's actually a, what you can say, it's a logical thing, okay. It's not a section again. Imagine 10 lakh is your bad debts. Are you all with me? 10 lakh is your bad debts, and in books of accounts, say you claimed only 7 lakh as bad. 10 lakh is your debts, not bad debts. 10 lakh is your debts, and in books of accounts, you've claimed only 7 lakh as bad. So that means, and you claimed it as a deduction under 36. You claimed it as a deduction under section 36. Are you with me? If you are claiming only 7 as bad, then what is your expectation? What is your expectation now? The debtor will pay you 3. He is supposed to pay you 10. But he told me that I don't have 10 lakh money, but I will pay you 3. So you are expecting 3 lakh from that person. You might have shown this entire 10 as income. But in the next year, say this is in year 1. Year 2, he told me that he will not pay 7. So you said okay, and you have written off 7. Now you are expecting how much? 3. But in year 3, he is coming and paying you 1 lakh as full and final settlement. As full and final settlement. Are you with me? In year 3, he is coming to you and paying only how much? Only 1 lakh as full and final settlement. You tell me what to do. You are expecting 3 now, but you are getting only 1. Again claim that 2 lakh as what? Bad debt. Why 2 lakh as bad debt? There is no treatment for that 1 lakh. Why? Out of 10, you got only 1. Already that 10 you shown as income. You got only what? 1. Are you with me? Are you all listening? Out of that entire 10, you got only how much? 1 lakh. In year 2, you claimed only 7. That means you are expecting 3. But in year 3, you got only ultimately 1. Out of that entire 10, you got only 1. Already in year 2, you claimed 7. Now you can claim 2 more as a deduction, because out of 10 lakh, your total loss is 9. You claimed only 7 in year 2. Are you all with me? For that 1 that you got, there is no tax impact. Is that clear? Is that clear? Say instead of this, in year 2, you have shown that entire 10 lakh as bad. You have shown that entire 10 lakh as a bad and claimed deduction. Then what will happen? And you are receiving 1 lakh. Then what will happen? That 1 lakh have to be your deemed income. Are you all here? Is that point clear? So this is called as full and final settlement scenarios. You need to compute it accordingly. Have you understood what I said? Yes. Come again? Then Okay. You ask the question, yeah. Ask the question. What is the question? Mm-hmm. Okay. See, your original debt was 1,50,000. Your assessing officer allowed, you claimed 1,50,000 as, how much is the original debt? Not given in the question. Can you show me that question? Okay, so you're saying 1,50,000 is the bad debt that you have claimed. Okay, but the assessing officer only have given you 1 lakh. So there is an expectation of 50,000. You should receive 50, but you received 1,20,000. That's what you're saying. If you receive 1,20,000, out of that 1,20,000, you deduct 50. The 70 will be your income. Yes. No? I mean, that's what your doubt is. What to do with that 70? 70. Because out of 1,50,000, your expectation is full will become bad debt. But your assessing officer only given 1 lakh. Now, ultimately, due to the force of assessing officer, your expectation is 50,000 that you will get. But you got 120. If you get 120, out of that 120, anyways 50, you know that you will receive. So out of that 120, you deduct that 50. Then the remaining 70, you have already claimed as bad. That 70 will become your deemed income. That should be the treatment. Yes. If I've claimed everything as bad and I got something from that which I've claimed, then that will become my income. Got it? This is, I think, almost the same with a different figure. That's it. This is the scenario. It's called as full and final settlement scenarios. Yes. Moving on. So we were discussing about the bad debts. Don't worry, you don't have to write it because I've given a note. I've given actually a note for the full and final settlement. Can you read this note? If on final settlement, the amount recovered in respect of any debt where deduction had already been allowed falls short of the difference between the debt due and the amount of debt allowed, then the deficiency can be claimed as a deduction from the income of the PY in which the ultimate recovery out of the debt is made. Ultimate recovery means as full and final settlement. Yes. Moving on to the next one, friends. We were discussing about the bad debts. Now, let's compute the other things. What is the next thing? Can you read the next thing? Expenses on family planning by a company. Listen. What do you mean by family planning? Because the major problem that we are facing in India is the population. To control the population, say an employer, being a company, is taking some initiative, conduct a program or do something to promote the family planning culture among their employees, then that is actually a cost for the employer. And that cost have nothing to do with their business. But still you are doing a good thing. You are supporting the country in a way. So you do one thing, you claim it as a deduction under 36. But for claiming deduction under 36, the assessee have to be, assessee have to be a company assessee. For all other deduction which we have discussed right now, there is nothing that the assessee have to be a company and all. The assessee can be any assessee. But to claim family planning expenditure as a deduction, you have to be a company. Are you all with me? Are you all with me? Yes, for claiming this family planning deduction, you have to be a company. It's mandatory. So, listen. So, first of all, friends, we can split this into two. We can split this family planning expenditures into two. Family planning expenditure by company into two. Number one, capital nature family planning expenditure. And there is revenue nature family planning expenditure. Say for example, there is a company and that company have installed a machinery. Just like our Lace and Coke vending machine, they have installed a machinery where you will get the pills and other medicines. Just like condoms or something, they will disperse it. If you swipe your employee card, you will get the pills and other things from that particular plant and machinery. That cost of the plant and machinery will be a capital expenditure. Are you all listening? The cost of plant and machinery will be a capital expenditure. That cost you can claim as a deduction under section 36 in 5 equal annual installment. If you're incurring a capital nature family planning expenditure to promote family planning among your employees, you can claim that cost as a deduction in 5 equal family planning expenditure. Are you all with me? Number 2, see, you require the machine as well as the medicine. To fill the medicine, the cost that you have to incur will be a revenue nature expenditure, because you have to fill the pills and all. For that expenditure that you are incurring will be in the revenue nature because you have to fill it regularly. So if you are incurring that, the revenue nature expenditure is allowed as a deduction under 36 in that year itself. You don't have to claim it in 5 equal annual installment and all. You can straight away claim it as a deduction. Are you all here? So the family planning expenditure by a company can be divided into 2. Number 1, capital nature, and number 2, revenue nature. And the capital nature expenditure is allowed as a deduction in 5 equal annual installment. Revenue nature expenditure is allowed as a deduction in that respective year itself. And what is the expenditure? It should be a company, and that expenditure should be an expenditure to promote family planning among their employees. Are you all with me? Have you understood what I said? Have you understood what I said? Yes, sir. Excellent. This is capital and revenue. Now imagine a situation where you don't have adequate profit to claim that 1/5 of your capital expenditure. Say you don't have adequate profit to claim that 1/5 of capital expenditure. You tell me what to do. Carry forward it to unlimited subsequent year. The treatment is same as that of unabsorbed depreciation. You carry forward it to the unlimited subsequent year. Only what? Only the capital portion. What about the revenue portion? That will form part of the normal business loss. And ultimately it will go up to 8 years only. The capital nature family planning expenditure, that 1/5, if you are not able to adjust it with your current year profit, you carry forward it to how many years? How many years? Unlimited subsequent years. Is that point clear? Is that point clear? All right. That is under section 36. So moving on with the last 2 deductions under 36. We have 2 more deductions under 36. Can you read the next deduction? Deduction of security transaction tax paid. Simply means, what is security transaction tax? It is not income tax. It is but a direct tax. It's a direct tax. You have to directly pay it to the CG. So you tell me, when you have to pay STT? Come again? Whenever you are buying or selling securities from a recognized stock exchange, you have to pay a small percentage. It made to around 2%, not 0.2%. Okay. In the last budget, they have raised it. You have to pay a small percent, like 0.2%, as what? STT. On what value? On the transaction value. Both the buyer have to pay and the seller have to pay. Are you with me? Whenever you are purchasing or selling securities through a RSE. What is RSE? Recognized stock exchange. You have to suffer security transaction tax. Are you all listening? If you are paying security transaction tax, now the question is, can you claim that as a deduction? The answer is yes, but subject to one condition. What is that condition? Your business income should be from purchase and sale of securities. Your main business profit should be from the transaction of purchase and sale of securities. That means if you are a full-time trader, you can claim the STT paid as a deduction. Say I am a chartered accountant. I am investing in some listed share only for an investment purpose. Can I claim that STT paid as a deduction? No, I cannot claim. If my business income is from purchase and sale of security, I can claim that entire STT paid as a deduction. Are you all with me? Is that point clear? Similarly, there is a tax called CTT, that is called as commodity transaction tax. Whenever you are purchasing a commodity from RSE, what is RSE? Recognized stock exchange. What is commodity? Crude, gold, platinum, silver, then currencies. These are commodities. Whenever you are buying commodities from a recognized stock exchange or through a recognized stock exchange, you have to pay commodity transaction tax. Now the question is, can you claim commodity transaction tax paid as a deduction? The answer is yes, but only when if your business income is from purchase and sale of commodity, then you can claim the CTT paid as a deduction. Otherwise, you cannot claim CTT paid as a deduction. Is that clear? So STT and CTT treatment is almost similar. STT paid is allowed as a deduction, subject to one condition. Business profit should be from purchase and sale of securities. CTT paid, it is allowed as a deduction, subject to a condition that your business income should be from purchase and sale of commodities. Is that clear? Is that clear? Yes, shall I complete 37 also? Or do you want a break right now? Shall I complete 37? Yes, great. So that our deductions are over. Then in the afternoon session, we can freshly start with the disallowances. Okay. There will be some more theory, disallowances, but disallowances is not that fun as deduction. It's a little bit dry again. Okay. I mean, I should tell you the truth, it is a little bit dry, but one disallowance, sure, there will be. See, these things which you have discussed, you go check the past exam question papers and you go check the September exam question paper when you are writing it, okay? When you are writing it only, you will be able to see the September exam question paper, okay? Now, these things which we are discussing in this 4-day session, trust me on this, it will definitely come. Because all the core parts I have selected. That's why I don't want to select. See, when the Case Academy team called me, they told me that to cover certain topics within this 3 days or 4 days team. So initially I was thought of taking Pgbp and capital gain only. Then I thought covering Pgbp and capital gain only will be like, it will be fun for 4 days. But rather than the fun, when you write the exam, you should get a benefit. Okay, you should write the exam, you should get a benefit. Whether it is free or paid, whatever it is, whether it is a free session or paid session, whoever attends, invest their time should get a benefit. So I thought of selecting the core topics. We have selected all the core topics from the 5 heads. This will definitely come. I'm not saying whatever we covered will only come, but whatever we covered will definitely come, that's for sure. That too for at least minimum more than 20 marks they will ask. More than 22, because we have taken all the core topics. We have taken all the core topics. You're not taking only selected portion, you covered all the topics. And no, I've only taken selected topics. But that is the truth here. I can say that I've covered everything, okay, don't worry at all. No, it's not like that. I've selected topics only, but the topics which I left based on the research, that they normally don't ask these topics. Like 35D, they're never asked. Okay, sale of scientific research asset, under 35, there is another topic, never asked. So there are certain things normally institute don't ask. But you have to study it in exam. Why? Because we cannot say that they will never ask in future. We can only say about the past. Are you with me? Are you with me? So only based on that selection, this is what I believe. Definitely the questions more than 20, up to 30 marks you can expect. 30 will be very high, but still I can say that. Up to 30 marks you can expect from the topics that we are covering. Definitely examination question will come, that's for sure. So moving on friends with the residuary expense, and that is the last deduction that we have. And what is the speciality with 37? Tell me, what is the speciality with 37? See, deductions started from 30. And we are about to finish it, and the last session is 37. What's the speciality from 30 to 36? Specified. What are you about to claim that have been clearly mentioned? Say for example 30, building related for cost. Rent, rates and taxes, insurance, current repair. 31, plant and machinery related to cost. Current repair, insurance. 32, depreciation. 35, scientific research. 35, DDA, voluntary retirement. 35, AD, deduction for specified business. 36, insurance premium for stock and stores. Second one, insurance premium paid for the health insurance. Third one, bonus or commission. Likewise, everything have been specifically provided. Are you with me? But when it comes to 37, don't expect that, because 37, what department say? Based on the conditions, if an expenditure satisfies this 8 condition, then you can claim it as a deduction. Otherwise, don't claim it as a deduction. If an expenditure satisfies this 8 condition, you can claim it as a deduction. Otherwise, please don't come and ask for deduction. This is what 37. It's general. Because income tax department is not able to predict all the expenses of a business. Why? Because there are lot different types of businesses out there. Are you with me? So they're saying if an expenditure satisfies all these 8 conditions, you can claim it as a deduction under 37. So can you read the heading, like the first sentence? Any revenue expenditure which is not specifically provided in any provision discussed earlier, that means from 30 to 36 of the Act, and fulfills the following conditions shall be allowed as a deduction under this section. Let's understand which all are the 8 conditions, and I'll definitely leave you for a break after that. So can you read the first one? The expenditure should not be of nature described in section 30 to 36. Why? If it is covered under 30 to 36, then why you are dragging it to 37? You could have claimed it under 30 to 36 itself. Are you with me? This also means don't take double deduction. One expenditure deductible under 30 to 36, done. Don't even think about 37. Second one. It should have been incurred by the assessee in the accounting year. It should have been incurred by assessee in the relevant accounting year. Then only you can claim it as a deduction under 37. Then, what is condition number 3? It should be in respect of business carried on by the assessee, the profits of which are being computed and assessed. Say for example, I have a textile business and I have fertilizer manufacturing. Can I mix up my expenditure? No. For a respective business, whatever the expenditure is, you have to claim from that respective business itself. Are you with me? I have 3-4 business, always categorize and claim it accordingly. You have to always maintain separate computation for each type of business. Don't mix it up. Are you with me? Are you with me? Then what is point number 4? It must have been incurred after the business was set up. Don't come and ask for the pre-commencement expenditures under 37. Whatever the expenditure that is incurred after the business was set up is only allowed as a deduction under 37. And what is the next one? It should not be of the nature of any personal expense of the assessee. Don't come and ask for your personal expenses. 37, no personal expenses are covered. Always disallowed. You cannot claim any of your personal expenses as a deduction under 37. What is condition number 6? It should have been laid out or expended wholly and exclusively for the purpose of such business. What is wholly and exclusively? Think about me. To come and teach, I should have dress. So the dress cost is actually my business expenditure. To come and teach, I should have food. So all the food that I'm having is my professional expenses. To come and teach, I should have a house. So all the house that I'm staying with my family is a business expenditure. To come and teach, I should sleep. So all the bed, cuttle, pillow, etc. is my business expenditure. Can I say like this? Can I say like this? No, I cannot. Why? If an expenditure is exclusively incurred for my business or profession, it's okay. Otherwise, not okay. Say I have undergone an open heart surgery. Okay, and I'm saying that only after open heart surgery I will be able to teach. Can I claim that open heart surgery cost as a business expenditure? No. Why? Because I'm doing open heart surgery for my life. If I'm alive, I can teach. So which is the more predominant, or that is actually predominantly for your life only. It has some connection with your business, we are not denying it, but it should be exclusively for your business or profession. Are you with me? Otherwise, every personal expense they will say it is a business expense. Are you all with me? Are you all with me? Even I can say, my son's education expense, he is the future MD of my company. For the future MD, I am investing. Yes or no? Otherwise, everybody will start claiming every expenses by stating that it has an indirect connection. It's not personal expense. It's my fourth son is the future MD of my company. So I have to invest in his education. I cannot claim like that. That's what they are saying. Wholly and exclusively for the purpose of business only, I can claim as a deduction. Then what is item number 7? It should not be of nature of capital expenditure. Don't come and ask for any capital expenditure. You will not get it as a deduction. All the capital expenditure, what should be the treatment? What should be the treatment of capital expenditure? Capitalize and charge depreciation. Don't come and ask for a deduction under 37. And what is the last one? An expenditure should not have been incurred by the assessee for any purpose which is an offense or prohibited by law. What does that mean? All the legal penalty that you pay to the government, you cannot claim as a deduction. Listen. There are 2-3 things. Say for example, I am a goods transporter. I got a consignment. I have to immediately deliver certain goods from Chennai to Coimbatore. I think you require minimum 9 hours to go by road. 7 to 8 hours. So I completed my journey in 5 hours. It is 200 per hour. I was speeding at 200, even faster than Vande Bharat. Okay, I'm even faster than Vande Bharat. I was like speeding like anything. The Tamil Nadu Motor Vehicle Department penalized me for overspeeding. They normally have this camera and all, right? I think they will come up with that interceptor camera in the highways. They may. Okay, say they come up with them. Come again? Yeah, whatever it is. So they come up with some interceptor camera and they penalize me. So you tell me, is this penalty my business expenditure? In a way, it is yes. Why? Because my client clearly told me that I have to immediately deliver this thing. And he is paying something extra also for that immediate delivery. Then we can say that immediate delivery is my business requirement. But I cannot claim it as a deduction. Why? Because it's a penalty for violation of law. We will not get it as a deduction. You violate any law, you will not get it as a deduction. Are you with me? Are you with me? But there is one thing. This institute will easily deceive you with one adjustment. Say for example, you and me entered into a contract. According to the contract, I am supposed to supply 10 bottles of water. I am supposed to supply what? 10 bottles of water to you by tomorrow. I am supposed to supply how much bottles? 10 bottles by tomorrow. If I am not supplying it by tomorrow, I am supposed to pay you extra 1,000. I am supposed to pay you what? Extra 1,000 as penalty. Are you with me? We can say it is a penalty or a damage that we have inserted in a contract between two persons. Now I was not able to, or I am not able to deliver it tomorrow, and day after tomorrow you charge 1,000 rupees from me. Day after tomorrow you came to me and charged that 1,000 rupees from me. You tell me, can I claim that 1,000 as my business expenditure? Can I claim that 1,000 as my business expenditure? The answer is yes. Why? It is not violation of any act, and it is actually not paid to the central government for violating any act. It is only a contractual penalty that is paid from one person to another person. Are you with me? Contractual penalties are definitely deductible, no doubt. If it is a penalty on violation of any act, don't say that it is a violation of contract act. It is a violation of contract, not contract act. In contract act, they are only saying that you can write damages. That's it. Are you with me? Another thing. How about GST interest? Forget about GST interest. What about GST? Can you claim GST paid as a deduction under 37? Can you claim GST paid as a deduction under 37? The answer is subject to a condition. What is the condition? If you are not claiming input tax credit, you can claim the GST paid as a deduction. If you are claiming input tax credit, then GST is not going from your pocket. You are claiming a credit. Then you cannot claim it as a deduction. Is that clear? Is that clear? Another example. How about GST interest? How about GST interest? It is allowable as a deduction. Why? It is not it is compensatory in nature, not penal in nature. GST interest for the delayed payment, I can claim it as a deduction. It is what? Compensatory, not penalty. How about GST late filing fee? I cannot claim because that is actually a penalty. Late filing fee means penalty. Interest is not penalty, it is compensatory. I can claim it as a deduction. Have you understood what I said? Have you understood what I said? Then, other examples under 37. Employee salary, power, fuel, electricity, then traveling expenses, stationery expenses, printing charges, legal charges, audit fee. Everything will come under 37. Are you all with me? Sir, can consumer paying GST, can he claim it on income tax? You can claim, but that payment should be something related to your business. Okay, say for me, I'm having food in the evening from a hotel and they charge me GST. Can I claim that GST as a deduction from my professional income? No, not possible. Because that food I'm having has no connection with my business or profession. That is only for my personal consumption. You got it? So by that I can say section 37 is completely over, and we can say the deductions are also completely over. Friends, we were discussing about the deductions. Okay, in the morning session we were discussing about deductions. Now we will start with the disallowances. What do you mean by disallowance? What do you mean by disallowance? Certain payments are not allowed as deduction. Certain payments, even though it is deductible from 30 to 37, when you check it, it will be in the character of a deduction, but you cannot claim it as a deduction. That is called as what? Disallowances. So we'll discuss the first disallowance. That is section, can you read the section? Section 40A1 and section 40A1A. That is disallowance for default in TDS, where the sum is payable to non-resident or outside India or resident. We are about to discuss two sections together. Number 1, 40A1. Number 2, 40A1A. We will discuss these two together. So before discussing these two, what do you mean by TDS? Before discussing these two sections, tell me what do you mean by TDS? Tax deducted at source. TDS simply means tax deducted at source. Now listen. See, in tax deduction at source, let's understand how exactly the transactions happen and what all are the impact that you have to consider. Shh, keep quiet and listen. Say for example, we will take an example, say there is a KS Academy. We will take KS Academy as an example. Say KSA is there and there is a person called Mr. JK. Say KS Academy is making a payment of rupees, KS Academy is making a payment of rupees, say 10 lakhs. Say JK is the auditor of KS Academy. JK is the auditor of KS Academy, and KS Academy is making a payment of how much? 10 lakh rupees to Mr. JK. Okay. When KS Academy is supposed to make the payment, then you have to deduct what? KS Academy have to deduct TDS. Say the rate of TDS is at 10%. And how much will be the TDS then? 1 lakh rupees will be the TDS. Are you all with me? Mr. JK will only get how much? 9 lakh rupees in his hands. And this 1 lakh rupee will be paid by KS Academy to the government. This KS Academy have to pay this 1 lakh rupees to the credit of central government by calling it as TDS. Are you all with me? Now, JK, when he files his return of income, how much will be his total income in his return of income? How much will be the total income of Mr. JK? That have to be shown. Say, assume that JK does not have any other income. Our assumption is JK does not have any other income. Then you tell me how much is the total income? It is 10 lakhs. Very good. It should be 10 lakh. By applying the old slab rate, do you remember the old slab rate? Up to 2,50,000 nil, basic exemption limit. Then from 2,50,000 to 5 lakh, 5%. 5 to 10, 20%. 10 above, 30%. By applying that slab rate, can you tell me how much will be the basic tax plus cess? Including cess I want. That is only basic tax. Including cess, how much will be the tax liability? So 1,17,000 will be the tax liability. The tax liability will be 1,17,000 including cess. Okay. So up to 2 nil, 2.5 to 5, 5% means 12,500. 5 to 10, 5 lakhs into 20% means 1 lakh. 1 lakh 12,500 plus 4% cess. That will be 1,17,000. From this 1,17,000, Mr. JK can claim what? TDS. Credit for TDS that he have already suffered. And Mr. JK is supposed to pay the remaining 17,000 only as the net tax payable. Are you with me? Are you with me? So this is what happens in the transaction of TDS. Now, here the KS Academy, in this transaction, KS Academy can be called as what? Deductor. Deductor. So, As you all know, it is the responsibility of the deductor to deduct the TDS and make that payment to the credit of central government. If they are not making the payment to the central government, then what will happen? You tell me. In this case, negative balance. What is negative balance? So you tell me, what will happen to KS Academy if they are not deducting the TDS correctly? Then they say for KS Academy, this 10 lakh is actually an expense. Yes or no? For KS Academy, this 10 lakh is actually an expenditure. If KS Academy is not deducting TDS correctly, then they will have to face a disallowance either under section 40A1 or under section 40A1A. Are you with me? If JK is non-resident, then disallowance will be under 40A1. If disallowance is under, if JK is resident, then disallowance will be under 40A1A. Are you with me? Are you with me? If disallowance, if payee, that means if JK is a NR, then disallowance will be under section 40A1. And if payee is a resident, then disallowance will be under section 40A1A. This is what we are about to discuss right now. So whoever makes a payment, if they have make any default, then that person is normally called as assessee in default. That means deductor, if they make any default, then the deductor is normally called as assessee in default. The assessee in default, for the assessee in default, there can be two types of disallowance. Depends upon the status of payee. Now that's what we are about to discuss. So let's discuss case number 1. Can you read case number 1? If interest, royalty, what is FTS? What do you mean by FTS? Fees for technical service. Like managerial consultancy services are called as what? FTS. What is the full form? Come on, I want all of you to respond. What is the full form? Fees for technical services. If interest, royalty, fees for technical services or other sum excluding salary payable to non-resident and TDS has not been deducted in the PY, then 100% of that expense shall be fully disallowed. Are you with me? Are you with me? Yes, if you are a person paying either interest, royalty, FTS or other sum excluding salary, because for salary there is a separate provision, okay? Salary there is a separate provision. Excluding salary, if you are making a payment to a non-resident, then TDS has not been correctly deducted. You haven't deducted TDS. Then you tell me what is the consequence? What will be the consequence? That entire payment of rupees 10 lakh in our example paid by KS Academy to non-resident JK shall be fully disallowed. KS Academy cannot claim that 10 lakh as a deduction. If they want to claim 10 lakh as a deduction, they have to correctly deduct TDS. Are you with me? One more thing is there. After deduction, they have to make that particular payment to the credit of central government. So what is that second point? After deduction, if TDS, after deduction of TDS, default in remitting payment to the central government on or before due date of filing return of income, then also 100% of the expense shall be disallowed. Are you all with me? Now listen, KS Academy correctly deducted 1 lakh. If they have deducted 1 lakh, then they have one more responsibility. What is the second responsibility? They have to make the payment. By what date? Due date of filing, return. To escape from disallowances, they have to minimum, normally TDS have to be paid by 7th of next month. Normal paying date is 7th of next month. But what department say is, if you are deducting it correctly, you have to make the payment by minimum, which day? Return filing due date. On or before return filing due date, you have to make the payment. Now can you tell me, KS Academy being a company, what will be the due date for return filing? 31st October 2024 will be the due date of filing return for a company. For companies and those who are subjected to audit, they must file their returns on 31st October of assessment year. See, this 31st October 2025 have written based on an assumption that the PY is 23-24. Now, For a non-audit, normal person, when is the due date of filing return? Normal person, 31st July 2024 for a non-audit person. Now, if you are subjected to transfer pricing audit, there is a thing called transfer pricing audit, TP audit, 92E audit report is there. If you are subjected to transfer pricing audit, then 30th November of 2024. These are the three due dates for filing return. Are you with me? Are you with me? So the point right now I'm discussing is, if KS Academy while making payment, if they haven't deducted the TDS in correct manner, there will be a disallowance of 100%. And after deduction, if they are not making the payment to the credit of central government also, there will be a disallowance. Once deduction is done, then they have time till return filing due date to make the payment. Are you with me? Are you with me? And the funniest fact is, this is a temporary disallowance. What do you mean by temporary disallowance? This is actually a temporary disallowance. And can you tell me what is temporary disallowance? Once there is a default, there will be 100% 10 lakh shall be disallowed. Are you with me? If there is a default, that means either you haven't deducted TDS, or after deduction you haven't made the payment, there will be an entire 10 lakhs will be fully disallowed. But once in future, if you have rectified that default, rectified in a sense, in future you have deducted and correctly made the payment, you can claim that 10 lakhs in future as a deduction. So temporary disallowance simply means once there is a default, there will be disallowance. Once the default is rectified, there won't be any disallowance. In future year, you can claim that 10 lakh as a deduction. Is that point clear? Is that point clear? KL say deduct 50,000 only as TDS and out of 1 lakh, sir. Then proportionate amount. Okay, in one invoice they have to deduct fully, otherwise proportionate amount will be disallowance. Due date 31st, okay. Once TDS expenses will be allowed, yeah. So for that year only, or when TDS is made or allowance is disallowed. So whenever you are defaulting, that defaulted year there will be disallowance. When you are rectifying, in the rectifying year you can claim it as a deduction. Okay, yeah. So moving on with the next one, friends. So can you read this chart again? I want all of you to read this along with me. Interest, royalty, fees for technical services, other sum, excluding salary, payable to whom? Payable to non-resident. That means your payee should be non-resident. And number one, TDS has not been deducted in the PY. Then how much will be the disallowance? 100% of expense shall be the disallowance. And what is the second case? After deduction of TDS, default in remitting payment to central government on or before due date of filing return, 100% expense shall be disallowed. Is that point clear? Similarly, if any sum payable to a resident, any sum including salary, we can say any sum means everything, that includes salary as well. If KS Academy, that means in the example, if JK is a resident and TDS has not been deducted, then how much will be the disallowance? If JK is a resident and TDS has not been deducted by KS Academy, then what will be the disallowance of KS Academy? 30% of 10 lakh shall be the disallowance. Are you with me? So if the pay is NR, then disallowance will be 100%. If the pay is R means resident, then the disallowance will be 30% of expense. Or we can say 70% you can claim as a deduction, 30% gone. Is that clear? Is that clear? Now, how about after deduction of TDS, default in remitting payment to the central government on or before due date of filing return, then 100% of that expense shall be disallowed. Once deduction is there and there is a default in making the payment to the credit of central government, then that entire payment shall be then also 30% shall be disallowed. Not entire, then also 30% shall be disallowed because the payee is resident here. Are you with me? So these are actually similar. Only small differences are there. First difference, payee NR in the first case, payee NR in the second case. That means payee NR in the first case means under section 40A1, and how much is disallowance? 100%. Pay resident in second case means under section 40A 1A, how much is the disallowance? 30%. And in first case, excluding salary. Second case, everything, including salary. Both are temporary disallowance. What do you mean by temporary? In the second case, if once there is a default, there will be 30% disallowance. In future, if you have rectified it correctly, you can claim that 30% back as a deduction. Are you with me? In future, if you have rectified that particular default, you can claim that entire amount as a deduction. No problem. Are you all with me? Now, can you read that note? There is a note under this. Can you read that note? Where tax has been deducted in subsequent year or has been deducted in the PY but paid after due date of filing return, then such sum shall be allowed as deduction in computing income of the PY in which such tax has been paid. So the point is, once you have rectified that default, in the year of rectification, you can claim that disallowance as a deduction. Are you with me? Is that point clear? Are you all sleeping? Okay, thank God no came. I thought everything you have predetermined answer. Yes, sir. Yes, sir. All right. So, very good. Moving on, friends. This was the disallowance for TDS. That is tax deducted at source. Being payee, being NR or resident. Moving on to the next one. Can you read the second disallowance heading? You all said you had lunch. Yes or no? If you had lunch, then you should have that energy. Are you with me? Yes, because, see, your examination is between 2 to 5. Why the examination is between 2 to 5? To make you sleep, huh? No, it's just a time. Okay, it's just a time. I mean, in recording, I cannot comment on the examination time and all. I don't know why they have put it from 2 to 5. During our times also, it was from 2 to 5. Okay. Yeah. So, sir, when capital gain chapter started? After Pgbp. Yes. So, listen. See, your examination time is from 2 to 5. So, this should be the time that most of the energy have to come out on this time. Are you with me? You should be more energetic in 2 to 5. Between 2 to 5, you have to be like fire. Ayyo, ennada idu. Are you all here? I understood. You understood. But you have to implement it also. Okay. Okay, Ragul. After eating feels like heaven a day. After results, it will feel like heaven. After eating, the results comes in, that is a kind of an electrifying moment. When the results comes in and say, congratulations. That will be a kind of an electrifying moment. You all want to enjoy that, right? Yes, sir. You all want to enjoy that? Yes, sir. For that, there's a pain. And that pain is this. One of the pain is this. You have to sit and watch all the boarding lectures. Okay, I know it's dry, but you don't have a choice. Yes. So we will discuss the next one. And can you read the next heading? Sir, when you complete Pgbp, I mean, I have no such plans, like there is no predetermined plan for that. Today we will complete Pgbp and we will start capital gains, okay? That's for sure. When question papers say, see, students sleep, sir, reduce the competition. Okay. Oh, you are talking about the time. Okay. Sir, sing one song and we will get energy. Then don't get energized. You sleep. You sleep, Shakti. I have to take revision. Now I have to sing. Then I have to dance. If I give you a chance, you tell me to go and write examination for you. Okay. So, you are making me doing a lot of things. Okay. So, listen, friends. Listen. Rangan Chetava. Demone. So, section 40, clause number A, subclause number 2. What is that? Income tax not deductible. Very simple. The income tax that you pay, can you claim it as an expenditure? No, it's your obligation. That's what departments say. The income tax, surcharge, cess, interest, etc. that you pay in relation to the IT Act is your obligation, not a deductible expenditure. Are you all with me? Indian income tax, surcharge, cess, interest under 234A, B, C, penalty, whatever that you pay in relation to the IT Act 1961, fully disallowed. You cannot claim it as an expenditure. Are you all here? Is that point clear? Now friends, there is another interesting thing. Hope you remember, if you are making a payment that is salary to non-resident, say there is no TDS, or there is TDS but you haven't made the payment to the central government, then I've told you it is not under 40A1. There is a separate section. Do you remember that? Say, listen, this one. Excluding salary we have written here. If you are making a payment to a non-resident and there is no TDS, or there is TDS but after deduction you haven't made the payment, if it is salary it is not covered under 40A1 disallowance. Why? Because you have a separate section, and let's read that particular section right now. So can you read the section number? Section 40, clause number A, subclause number 3, disallowance of salary payable. Any sum which is chargeable under the head salary, if payable outside India or to a non-resident, and if tax has not been paid thereon, nor deducted therefrom, under Chapter 17B. Chapter 17B means TDS chapter. Chapter 17B is in income tax, it is the TDS. Okay, simply it means if salary, you are making salary payment to an NR employee, either you haven't deducted the TDS, or you have deducted the TDS but you haven't remitted the payment to the credit of central government, then how much will be the disallowance? How much will be the disallowance? Pura 100% will be the disallowance, but there is one problem. There is one difference. It is a disallowance for ever. What's disallowance for ever? Once there is a default, disallowance will come. Later on, whether you rectify or not rectify, we don't care. We will not give you deduction. Are you with me? That's why it's a permanent disallowance. Yes, that's a perfect word. It's a permanent disallowance. It is not a temporary disallowance. That's why they have kept the salary alone as a separate section. Are you with me? So if a person is paying salary to a NR, either there is a default in deducting TDS, or deducted but there is a default in making the payment, then you tell me what will happen? That 100% of that salary paid by KS Academy shall be a disallowance forever. Is that okay? Is that okay? Yes, superb. It will be a disallowance forever. That's why we have kept it under a separate section. Now, moving on to the next disallowance, we will complete the disallowance. So, what if Pgbp income earned in outside India and I pay a tax in that income received in India? For this case also, we can't deduct foreign tax. We can't deduct foreign tax. I didn't get you, Alinavas. For foreign tax, why should you deduct TDS in India? Actually, I didn't get your question, okay? Yes. So moving on to the next one that we have already completed. Do you remember 40B? Yesterday we have discussed if a partnership firm is paying either interest on capital or remuneration to working partner, then there's a ceiling limit. How much is the ceiling limit for interest on capital? 12%. How much is the ceiling limit for remuneration? Depends upon the book profit. Up to 3 lakh book profit, rupees 1,50,000, or 90% up to 3 lakh, or 60% for the balance. First one, whichever is higher, and second one, 60% for the balance. Hope you remember you have solved a question also. And we have improvised the question and have make you solve the total income of partner as well. Do you remember that? Yes. Okay. No. Foreign tax you are paying, you will get a foreign tax credit here under section 90, 90A, 91. 3 sections are here. We call it as relief under DTAA. Come again? He asked again. Okay. Yeah. So I earn Pgbp in foreign. Okay. I paid tax for that in that country. Okay. Now that income I remitted to India. Under section 5, the income is taxable. Okay. Now, then. Then what's your question? Whether I'll get a deduction for that foreign tax paid in India. That's what your question? For that case also we can't deduct foreign tax. Yes. You are asking whether that foreign tax paid even now Also, I cannot claim that tax. That means foreign tax. For that, there is a thing called relief under section 90. It is called as bilateral relief. 90A, bilateral relief with specified association. 91, unilateral relief subjected to condition. Have you understood anything? Nothing. That's why I kept remain silent. It's called as double taxation avoidance agreement, will be covered under final. Don't worry, Avinivas. Clear inter. Then we will discuss that in final, okay? There is a chapter called DTAA, double taxation avoidance agreement, that is there in final. Okay, yes. Remuneration to partner, actual remuneration paid or remuneration. Yeah, don't worry, yes. Remuneration to partner, actual remuneration paid or remuneration as per section 40B, VEL, sir. Oh, whichever is lower. Yes, yes. If your actual amount is more than the ceiling limit, then you will get the ceiling. Okay. If your actual amount is less than the ceiling, then actual amount. So we can say whichever is less. Are you all with me? Yes, sir. Yeah, we have already completed 40B. So we are moving on to 40A2, 40A3, 43B, done. Okay. Let's understand what is 40A2. Can you read the heading? Section 40A, subsection 2. It is a section. 40A is the section number. A is not clause number. Are you with me? Yes, section 40A, subsection number 2. That's how you have to read it. If instead of capital A, if you have written small a, then that's wrong. It's a blunder. Sections are case sensitive. Have you understood what I said? Instead of 40 capital A, if you have written 40 small letter a, that's actually a blunder. It's better not to write the section number. If you're not clear about a section number, don't write. Okay, and don't unnecessarily quote case laws and all. Certain students are there, simply they bluff. KP Kulkarni versus income tax department, Punjab, Haryana bench. They used to write like this, especially in final and all. Don't think that they are what fools. Okay. If that case law is not a cited case law, case cited or not, it's very simple. If there is that case law is there in the syllabus, then only they will give you mark. Otherwise, they will simply cross it off by stating it as blunder. Institute will never tolerate blunder. And don't test their patience. Certain students, due to the frustration, they will write in a way that it is like they will write the answer in a way that they tease ICAI, they tease the examiner. Don't do that. Because for examiner, it's very simple. They can simply cross off your answer. Okay, it's our requirement that to clear the exam, not there. Are you with me? And please don't write anything that discloses your religion, your name, your place, etc. Please don't write anything related to that. If you're taking an example, then place X, place Y, more than enough. Don't disclose your name, your religion, your caste, the area where you are from, don't disclose it in paper. Are you with me? I'm not saying that if you disclose that will be a problem, but why should we take chance? We don't know. Because even though we call them as ICAI, it is actually people. Okay, different people have different opinions. Okay, so please don't take any chances. And don't write any religious symbols and all. Don't write any religious symbols like Om or cross or that, Allah and all, don't write. Why? Because we don't know who is going to value your paper. And certain students will write all of them. Because we don't know who is available at that time. Whoever is available, come and save me, okay? I don't care whether it is Jesus Christ, whether it is Shiva, whether it is Krishna, whether it is Allah. All are welcome. Give me exemption. Don't write such things in your paper. It is actually completely prohibited. There are certain do's and don'ts. And don't use 14-digit calculators. It is actually not permissible, but I don't know whether it is that strict here. 14-digit calculators are not permissible. They will restrict. And scientific calculators are also not permissible. Laptop, you go with a laptop, You go with a laptop and write the exam, okay? Yes. So, listen friends, coming back to the theory, that is section 40A2, that is excess payment made to the relatives and associates. So, we will take a simple example for that, okay? Here, what's your name? Third one. Hari. Say Hari have a company. Hari runs a company and Hari's wife is the chief accountant. Hari's wife is the chief accountant, not cheese. Sorry, slip of tongue. Chief accountant. Yeah. Hari's wife is the chief accountant. And she's getting a salary of rupees 1 lakh. She's getting a salary of how much? Rupees 1 lakh per month. The normal accountant salary in that particular area, say only 20,000. The normal accountant salary is how much? Only 20,000. And Hari pays what? 1 lakh rupees to his wife. Are you with me? Are you with me? Hari paid 1 lakh to an accountant. Why? Because that accountant is his wife. If it is some other's wife, then what would have happened? Don't say 2 lakhs, okay? Don't say 2 lakhs. If it was some other's wife, then what would have been the salary? 20,000 only. Are you with me? So department, what they do is, department always check whether you are making an excessive payment to your relatives or associates. If you are making excessive payments to your relatives and associates, they have the right to disallow the excessive portion. It is an anti-avoidance measure. Are you with me? If department AO feels that you are making excessive payments to your relatives or associates, then what will happen? That excess portion shall be disallowed. Only that excess portion. That means 1 lakh salary paid, market value is only 20, then how much will be the disallowed? 80,000 only will be disallowed. Are you all with me? Are you all with me? Yes. Come again. For his wife, come again. Full amount. Yes. For her, it is gain for department. In her hands, she is liable to pay tax for that entire 1 lakh. Okay, she cannot deduct that 80. Disallowance is only for the payer. Recipient, full amount will be taxable. He liked that girl. He can pay 3 lakh. Is that a kind of a marriage matrimony or something? Huh? Okay. You like that girl. You like a girl, you pay 3 lakh. All right. So, listen. Okay. Come back to that particular point. Okay. Now listen. See, what is the first sentence? The assessee incurs any expenditure and payee is a specified person. Then AO may disallow excessive or unreasonable portion of such payment. In examination, they will definitely give you the market salary. But one thing that you have to identify is whether that person, that payee is your relative or associate. For that, you have to study this definition. What's the definition? Assessee and related person. And for an individual, who is related person? Relatives. Relative means spouse, brother, sister, or any lineal ascendant or descendant of that individual. Who's ascendant? Father, grandfather. Who's descendant? Son or daughter or grandson or granddaughter. Ascendant or descendant. Now, what is next? For a company, who is the relative? Directors and its relatives. Director's relative. Company does not have any relative, okay? The director and his relatives are the associates. Then, for a firm or a LLP, partners and its relative. HUF, AOP, BOI, members and its relative. And finally, what is the one? Any person or their relative as above have a substantial interest in any other person. That simply means, say, KS Academy. For KS Academy, its director will be a relative. If you make excessive payment to director, then what will happen? Excess portion shall be disallowed for the KS Academy. Are you with me? Say KS Academy's director have substantial interest in SBI. Imagine KS Academy's director have substantial interest in SBI. Are you all with me? And KS Academy is making an excessive payment to SBI. Then that also will be a disallowance under section 40A2. That is the last point. Any person or their relatives as above have substantial interest in any other person. That means either KS Academy directly have substantial interest in SBI or KS Academy's director have a substantial interest in SBI. In all the cases, they will be considered a disallowance under section 40A2. Is that point clear? Is that point clear? Now, substantial interest means 20% or more share capital if it is related to a company. If it is related to partnership firm, then 20% or more profit sharing ratio. This is how you have to value the substantial interest. Is that point clear, friends? Is that point clear? So 40A2 is all about if you are making excessive payments to your relatives or associates, that excess portion shall be disallowed under section 40A2. Moving on to the next disallowance. We have two more pending disallowance. No, not two more, sorry. 1, 2, 3, 4 more pending disallowance before we finish off. So the next is actually section, read the section, section 40A3 or 3A. That is payment exceeding 10,000. Read it again, read the heading again. Payment exceeding 10,000. Simply means, read the first sentence, while paying an expenditure covered under section 30 to 37, amount exceeds 10,000 in a single day and method of payment otherwise than by way of account pay check, account pay bank draft, ECS or prescribed electronic mode, then what is the consequence? 100% of that expenditure shall be disallowed. Are you all with me? Simple example, I have paid salary to one of my employee in a day and that amount is 30,000 and I paid that salary in cash or a cash check or a simple crossed check. Fully disallowed. Account pay cross check and simple crossing is actually different. Are you all with me? I hope you all have studied negotiable instruments. You had, Noah, you had negotiable instruments in your old syllabus. Now only it has been removed. Oh, your May attempt was your first attempt. Okay. So you, May attempt is under new syllabus for inter, right? Okay. Then fine. No problem. There are different types of crossing. Okay. Simple crossing means you put two lines. Simple crossing means what? You put two lines in the border of a check, like this. Any person with that check can encash it. That's it. Are you with me? Are you with me? Any person can encash it through his account. If you put two lines and written account payee, and in the pay orders you have written Mr. A, then what will happen? Only Mr. A, that through only his account he can encash that check. That is called as account payee crossed check. Are you with me? Or account pay check. Are you all here? Account to account transfer, but you have to write a person's name. Then only it will become an account pay cross check. Otherwise, any person can encash it through his account. Are you all with me? So, the point here is you have to make a payment either by account pay check or account pay bank draft or electronic clearance system or through prescribed electronic modes. Then no problem. If you are making any expenditure which is allowable as a deduction under 30 to 37 in any mode other than these four, then what will happen? 100% of that payment shall be fully disallowed. I hope it is clear. Now, there are certain notes under this. Can you read note number 1? This limit of 10,000 has been raised to 35,000 in case the payment is made to transport operator. What do you mean by this? Say your pay is a goods transporter. Your pay is what? A goods transporter. Then you can make a payment of up to 35,000 in any mode. It's according to your wish. You can make a payment of up to 35,000 rupees in any mode, provided the pay have to be a goods transporter. Are you all with me? Yes, then, what is note number 2? Can you read note number 2? Prescribed electronic mode means debit card, credit card, net banking, IMPS, UPI, RTGS, NEFT, beam payment, Aadhaar payment. These are the prescribed electronic modes. You can make the payment through prescribed electronic modes. There is absolutely no problem. Are you all with me? So, tell me friends, if I am making a payment otherwise than by way of either account pay check or account pay bank draft or ACS or through prescribed electronic mode, what will happen? What is the conclusion? The payment that I have made, if exceeding 10,000 in a day, then that entire payment shall be fully disallowed. Are you with me? Are you with me? subjected to the exceptions that we are about to discuss. Are you all here? So disallowance under section 40A3 is subjected to rule 6DD. And what is that? Exceptions to section 40A3 or 3A. Very simple. If your transaction is covered under any of the things which we are about to discuss, then 40A3 not applicable. If your transaction comes under any of the things which we are about to discuss, then section 40A3 is not applicable. That's what called as exception to section 40A3. Are you all with me? What is transaction number 1? Can you read the first item under that? Payment made to RBI, LIC, bank or a cooperative bank or agricultural credit society. If the payee is any of those persons, no worries, you can make a payment according to your wish in any mode you want. Are you all here? Are you all here? If the payee is either RBI, LIC, bank or a cooperative bank or agricultural credit society, you can make the payment in any mode, any amount, no problem. 40A3 will not be applicable. What is point number 2? Payment to government. You are making a payment to government. No worries. Nothing shall be disallowed. Because government does everything for the betterment of the people in India. Whether it is state government or central government. Do you have any objection? Let me pan the camera. Okay, do you have any objection? State government of Tamil Nadu is doing everything for the betterment of what? You are not saying anything. Let me pan the camera, okay. For the betterment of people in Tamil Nadu. Oh, you don't believe. It is like that only, okay. And central government of India is doing everything for what? Let me tell you. There is a guy, they are saying some Tamil Nadu government is corruption government. Dey, Kalai, Mudinjadu. Okay. I don't know. But I think every government is doing their part, okay. Every government, we cannot say that every government is what? Central government also. Budget only for Andhra and Bihar, not other states. Come on, I don't believe. Yeah, you guys can say anything in chat. Okay, there is no problem. I have 10 employees, 9,000 per month each. I pay salary to every employee single day, no problem. 10 employees, 9,000 per month, right? No problem, you can make the cash payment. Absolutely no problem. In one single day, one person, you are making a payment. If that exceeds 10 only, there will be a problem. Okay. Yes, 1-to-1 for an expenditure. But if a salary of an employee is 30,000, you are paying 10,000 today, 10,000 tomorrow, and 10,000 day after tomorrow, then one thing I want to tell you is assessing officer also is eating rice. If you make the payment like that, he will simply come and pull your corner. That payment should be justifiable. Okay, the payment that you are making, if it is an industry standard, then it's okay. Say for example, daily workers. You are paying daily salary, no problem, acceptable. Yes. Moving on to the next point. Okay, Sarji, understood. What is this pen? Okay, whatever it is. Yeah. Noted, okay. Tax, your loss is your loss and your gain is our gain. It is something like that only, okay. Nirmala ji only said that. So it is like if you have a loss, that you have to suffer. If you have a gain, then you have to pay the taxes. Of course, everywhere it is like that. Come again? Government is a kind of a silent partner. Yes. I have no objection in that. You have to pay the taxes. No worries. Enough of discussion, okay. Enough of discussion. In aggregate, one person. Pen represents Karunanidhi. I don't even know the spelling of Karunanidhi. Okay. Instead of saying Karunanidhi, you are showing me pen. What should I say? Yeah. So in aggregate, one person should not. Yes. Not in aggregate. In a day. In aggregate, if that exceeds 10 also, there will be problem. Otherwise, no problem. Different day, if it is an industry standard, then you can make. Yeah. Okay. Forget about Karunanidhi, Stalin. Then, who is the opposition leader? Come again? Palanichami. Okay. So, forget about these people. Okay. EPS. EPS. Okay, OPS, NPS, KPS, forget about everything. Think about what? Not Udayanidhi Stalin, okay. Think about 6DD. I think Udayanidhi Stalin is sports minister. He's an actor also, right? He's that in Mammannan, right? Okay. Why my name in between that? Oh, you want to forget about me also? Okay. All right. Now, listen. Son of Tamil Nadu CM. Son of Tamil Nadu CM is Udayanidhi Stalin. That I know. Okay, that I know. Yes. So, he is also a minister right now. Oh, sports. Your area MLA. Okay. And the Togudi other? Chepok. Oh, Namma cricket stadium. And the Chepok. Chepok Terim. Okay. Yes. So coming back to the point. Sir, you see more. Okay, seaman. Whatever it is. Seaman. What is seaman? Like Shaktiman, Superman. Many movies. Super. What is seaman? Party leader. Forget about Seaman, Superman, Shaktiman. Think about 6DD, okay. Think about 6DD. I thought it is kind of a superhero, maybe like. Okay. His name is Seaman. Huh? Seaman. Okay. Yeah. So coming back to the point. Listen, you are making any payment to a government. You are making any payment to government. No problem. You can make payment in any method. What's the third one? Read. Payment made by letter of credit. That means through bank guarantees. If you are making a payment, that's actually happening through bank only. No problem, you can make a payment. Then, direct transfer through bank. Instead of this mobile phone RTGS and all, you can go directly to the bank and do the direct RTGS. No problem, covered under 6TD. Then, book adjustment in a bank. You directly go to a bank. Fill that yellow slip, white slip, green slip, whatever the slip is. You can transfer the month. Okay, you can transfer the amount. So, bill of exchange payable through a bank. That is also covered under Rule 6DD. So, can you read that again? Payment made by letter of credit, direct transfer through bank, book adjustment in a bank, bill of exchange payable through a bank. Everything is covered under 6DD. What is next? Payment made by way of book adjustment between persons. You are supposed to pay me 1 lakh. I am supposed to pay you 1 lakh. Should I give you 1 lakh and take it back? No, we can mutually cross off our liability. That is also a discharge of payment. That is also not done by way of account pay check, account pay bank draft, ECS, prescribed electronic board, no problem. If it is a mutual crossing off of liability, then it is covered under Rule 6DD. Are you with me? Are you with me? Moving on to the next point. Can you read the next point? That is actually very important out of this. Payment made to original producer for the purchase of agricultural, forest, fish, poultry, dairy, meat, livestock, hides, skin, flowers, honey products. Say for example, take fish as an example. Are you all with me? One second. Row slip up to 20, yellow slip up to 50. Oh my God, which bank it is? Yeah. So listen, say fish is your raw material. Fish is your raw material. You are making fish pickles or something, and fish is your raw material. Fish pickle. Okay. You don't want fish pickle, then we will make mango pickle. And then mango will be your raw material. So we'll take fish itself. You are directly buying fish from a fisherman. You are directly buying what? Fish from a fisherman. Are you with me? When you are directly buying fish from a fisherman and you are making a payment, no problem. You can make any amount of payment in any mode. Absolutely no problem. Are you all with me? Similarly, if you are buying agricultural produce, you can directly give money to the agriculturist. No problem. Like forest produce, directly you can give money to the tribal people. Like fish, poultry, dairy, meat, livestock, hides, skin, flower products, honey products. If you are directly making payment to the original grower, producer, etc., then you can make the payment in any mode. For example, I'm buying fish from the fisherman, any mode. I'm buying fish from a shop, then what will happen? Prescribed mode I have to follow. Are you with me? Are you with me? So that's why we are saying payment to the original producer. Producer means the original person. You cannot produce fish. Oh, you are multi-talented. You can produce fish. Not possible. Nobody can produce fish. In relation to fish, it will be fisherman. Are you with me? Producer means the person takes care of that. That's it. Yeah. Now, barter system also accepted in Rule 60D? Yes. Yes. Barter system is also accepted. It's considered as a mutual crossing of liability only. Rather than payment, you are distributing goods. Perfectly fine. Then, moving on to the next one. Payment to a... What's happening? It's going, coming, going, coming. One second. Yeah. Payment made to a cottage industry for the produce made without the aid of power. What do you mean by cottage industry? Kudisi Vyavasayam. Kudisai Vyavasayam. Yeah, something like that. From the regular class only they taught me this. Kudisai Vyavasayam. Kudisai Tolila, whatever it is. Kudisai Vyavasayam means agriculture, right? Okay, okay. Kudisai Tolil. So Kudisai Tolil means you have a small shed which is nearby your home. Are you with me? And you are manufacturing products in that small shed without the aid of power. Your house may have a current connection, but you are not manufacturing anything by making use of that power. Who is drawing over there? Okay. So, listen, you are making a payment. You are buying your products from a cottage industry who are making that product without the aid of power. You can make payment in any mode. That means if the payee is a cottage industry whom are actually not using electricity to generate products or to manufacture products, you can make the payment in any mode. Are you with me? Yes, are you with me? Yes, moving on to the next one. Payment made and the payee's place is not served by bank. Your supplier is residing in a place where there is no banking service. No problem, you can make the payment in any mode. Now, moving on to the next one. Payment made to an employee or his hire in relation to retirement or similar benefit, provided such payment does not exceed 50,000. Say one of my employees getting retired today. I'm making a payment of 50,000. Say for example, paying gratuity or paying some provident fund or something, I'm making a payment in relation to the retirement. And how much is the amount? 50,000. No problem, I can make up to 50, not more than 50. Are you with me? Let's read that point again. Payment made to an employee or his hire in relation to retirement or similar benefit. On account of death, if the employer is paying a compensation to the legal hire, that is also covered under 60D. Up to 50,000 you can make payment in cash. It is not necessary that you have to make payment in cash. It's an option given to you. You can make the payment in bank, no problem also. Are you with me? It's always better to make the payments in bank because in future you can avoid litigations. If you pay cash, then what will happen? That person will accept the money. After some time, if there is some kind of potty or something happening between them, then what will they do? That person will say, he have paid, he didn't make me the payment, and all will happen. So it is always make the payment in bank. Through the bank will be the better when it comes to business related payments. Now, moving on to the next one. Can you read the next one? Payment of salary to an employee who is temporarily posted to any other place or in a ship for 15 days or more other than his normal place of duty, and TDS has been deducted while payment of salary. Simply means, say for example, you are one of my employee. Here, what's your name? Hari. Hari is, everybody is Hari. Okay, Hari is one of my employee in Chennai. Are you with me? Are you with me? Yes, sir. Hari is one of my employee in Chennai who's actually working with my head office in Chennai. I told him to go serve for me in Jammu and Kashmir. So I am sending him to where? Jammu and Kashmir. He have to work in J&K for 2 months. It's a temporary posting for more than 15 days. What is temporary posting? Kind of a deputation. You have to finish that project and come back. Are you with me? during the posting itself, I have mentioned that you have to be there for 2 months, 3 months, 4 months, whatever it is. So I posted him for how many months? 2 months. It is more than 15 days. He had posted an employee in any other place other than his normal place of duty. I can make the salary payment in cash, because it will be very difficult for Hari to open a bank account in Jammu and Kashmir. Are you with me? So what I told my branch in JK to pay the salary in cash. The only one thing that you have to be careful is you have to deduct the TDS. You deduct TDS and paying cash salary, no problem. But it have to be a temporary posting. If you are posted there forever, then you have to open a bank account over there. Are you with me? Are you with me? Yes, now what if Hari already have a bank account in Jammu and Kashmir? Then this exception is not applicable. If your employee already have a bank account in that particular place, then you have to make the payment only by way of prescribed modes. Are you all with me? Yes, so read that point again. Payment of salary to an employee who is temporarily posted to any place, any other place or ship for 15 days or more. Hello, read. Other than his normal place of duty, and TDS has been deducted while payment of salary. Correctly, TDS has been deducted at the time of paying salary. In that case, department say, don't worry, you will get the protection of rule 6DD. And what is the next point? Payment to an agent who is required to make the payment in cash for the purchasing goods or services on behalf of such person. When the principal gives money to agent, no problem. The principal in his books of accounts, he can show cash payments to agent. And the agent is required to distribute that money to different people. Absolutely no problem. The principal can pay money to his agent. Are you with me? But the agent in his books of accounts have to make sure that 10,000 exceeding payment have to be only by way of prescribed modes. You can hand over money to your agent. No problem. For that, there won't be any disallowance. Are you with me? And the last point, can you read the last point? Payer in the business of money exchange and payment made for purchasing foreign currency and traveler's check. What does that mean? You are a money exchanger. Okay, the foreigner will come and definitely pay you dollar. And you have to pay him cash. Think about from the perspective of money exchanger. You are buying dollar by paying cash. Is that permissible? Yes, that's your business. You can't give an account pay check to a foreigner and tell him to open a bank account in SBI. A foreigner is coming, he don't have rupee, and he is giving you a dollar, and you are giving him a account pay check and telling him to open a bank account in SBI and to encash it. It will take at least, if it is SBI, it will take at least 6 months. Okay, if some other bank, then it will take maybe 2, 3, 4 months, it will get over. But SBI at times, certain branches, very careful, yes. But right now, I think earlier it was like that. Right now, I think they are doing good. But earlier, it was like, my God, unbelievable. So, moving on to the next point, friends. 6DD. What is the speciality of 6DD? Array, what is the speciality of rule 6DD? Exceptions to section 40A3 or 40A3A. That means you can make the payment. No problem, there won't be any disallowances if you are covered under rule 6DD. I hope it is clear. Sir, if we purchase from original producer for cash, then that cash amount also not exceed 10,000. No. You are making payment to an original producer like fish, poultry, dairy, etc. You can make payment up to any amount. There won't be any disallowance. Okay. Tirisala Devi. Yes. I'm not sure whether I pronounce your name right. Devi. I hope you got my point, Devi. Yeah, moving on. Moving on to the next point, friends. What is the next point? Section 40A7, that is disallowance of provision for gratuity. Imagine, I'm starting a company today. You all are my employees. I have around 100 plus employees are there. I know that someday over the other, you all will retire. Yes or no? Yes or no? Yes, otherwise, you have to be Indian Tata. I mean, at the age of 100 and all, you will be like fire. Okay. If you are not Indian Tata, then after the age of 60, your body will weaken. You have to retire. Are you with me? Are you with me? So, I know that someday or the other, you all will retire and I have to pay you the gratuity. And I've created a provision in my books of accounts. Provision for gratuity payment. Are you with me? If I create such a provision, that full provision shall be fully disallowed. No employer is supposed to raise a provision and claim it as a deduction. If you want to raise a provision, you do it. But we will not give you a deduction. Are you with me? Are you with me? Creating a provision for gratuity always shall be a disallowance. But listen, say instead of creating a provision, I have actually paid a gratuity payment. Say one of you retired. Okay, this Hari retired. Today he retired and I paid him gratuity. Then that gratuity that I've actually paid, I can claim it as a deduction. Actual gratuity payments are always allowed as deduction. By putting a provision, you are not supposed to claim any deduction. Are you all listening? Are you all listening or sleeping inside? Are you all listening or sleeping inside? You are not listening. Not listening. Listening but not sleeping. All right. Yeah. So, no. Listening, sir. Okay, very good, Shakti. Anda Shakti na appaditha irukku. Okay. Yes. Adi enna burning heart Okay, Shakti man. Who you are? Mia. You are Shakti man. Yes. Shakti man. Is that have any other? That I know da. Shaktiman, my favorite, okay. That Shaktiman, Shaktiman, that Shaktiman, right? And our first Indian superhero. After that, Chitti Robo. And then, I think it's Ravan. These are the three. Come again? Chota Bhima. Chota Bhima, it's cartoon, right? Yeah. Yes, Krish. Yes, there is a comedy piece, Krish. Yes. All right. So, asking something, beam, okay, whether it is beam, karna, whatever it is. Payment of salary to the employee who is not temporarily posted in a place, has already have a bank account in his name there. Is that allowed to be paid in cash? No. It have to be temporary posting. Then only you will get the protection of 60. Philips Tatava. Adi yaru. What about provision for tax, provision for bad debt? Provision for bad debt disallowed. Provision for tax disallowed. Minnal Murali is there. Jackie Chana. Okay. If I ask you some answer, everybody is dead. If I ask you something like Superman or something, you will come up. Provision for tax and provision for bad debt, everything is disallowed. Okay. Yes. Now, coming back to the point, friends. Entertainment. Okay. Moye. Kalli Raniya. Who is that? Kalli Rani. No, all the provisions are not disallowed. All the provisions are not disallowed because we have a thing called ICDS. ICDS 9 is there. That is provisions. If a provision meets the criteria under ICDS, you can claim it as a deduction. You don't have to study that all. Sir, whether all provisions are disallowed? No. If a provision meets criteria under ICDS 9, you can claim it as a deduction. Yes, moving on. Listen. So, if I actually pay you gratuity, that is allowed as a deduction. Or rather, I can do one more thing. I can maintain an approved gratuity fund. In an institution called LIC or any other public financial institution, I can maintain an approved gratuity fund. What is the advantage of maintaining an approved gratuity fund? I can give yearly payments to the approved gratuity fund, and that gratuity fund will take care of the gratuity liability of my employee at the time of retirement, so that there won't be any liquidity issue for me. Are you with me? Thambi, is he sleeping? Thambi, Minnal Murali, Inge irukano, okay. Anga minnal panna venda. All right. So the point is, listen. if you are a person actually paying gratuity to your employees, that actual payment is always allowed as a deduction. Or instead of actually paying it, you maintain an approved gratuity fund, then the payment to an approved gratuity fund is also allowed as deduction. Instead of these two, you simply put a provision that is never allowed as a deduction. Are you with me? So actual payment of sum to approved gratuity fund subjected to 43B. That means you have to actually make the payment. Or employee on at the time of retirement, death, termination of service, etc. You are actually making the payment to the employee. These are allowed as deduction. Are you all with me? So putting provision is disallowed. Actual payment of gratuity or payment to an approved gratuity fund, both are allowed as deduction. I hope it is clear. AGF contribution at the we get deduction. Approved gratuity fund contribution, yes, you will get it as a deduction. Yes. Now, moving on to the next one. 40A9 we have already covered. What is 40A9? Any payment made by a person as an employer to any trust fund, company, AOP, BOI, etc., which is unapproved, shall not be allowed as deduction. Are you with me? Best example, any contribution to URPF. What is URPF? Unrecognized Provident Fund. You are making a contribution, never allowed as deduction. And one more thing will come under 40A9. What is that one more thing? Excess contribution over and about 10% of basic salary plus DA to a pension fund. Do you remember? I think today only we have solved a question also in that. Do you remember that? Two things are there under 40A9. One, any payment made by the employer to any unapproved funds. Number two, excess contribution to NPS. Excess means over and about 10% of basic salary plus DA. Very good. Moving on to the last item under disallowance. Thereafter we will solve a problem. Okay. Yes. NPS 10% exceed disallowed in 40A9. Yes. Yes, Ragul. That's right. Very good. So, who is this temporary guy? He's keep on asking temporary posting. What is the problem? If he is temporarily posted and also has bank account too, sorry sir, little confused. Don't worry, Niranjani. Keep on asking, okay. If you are a person who is temporarily posted in a place and you have a bank account, then you are not covered under 60D. You have to make the you have to make the salary payment through either account pay check or account pay bank draft or ECS or prescribed electronic mode. Got my point? You should not have a bank account in that place. Yes. Don't worry. Jokes apart, okay. I will say temporary guy and all. It's just a joke. That's it. All good. So, 43B is the last disallowance section that we have to discuss. After that, we have a problem. Okay. Break? No problem we have. It's only 3:45. Okay. So, it's very early for a break. Right now, we will solve the problem, finish PGBP, then break. After that, we'll start capital gains. And if possible, we'll try to complete capital gains. Why? Because there is a small problem. Tomorrow, I have to leave you early. Tomorrow, because I'm flying back to my hometown, so if I take up to 6:30, I'll miss my flight. So tomorrow, I'll be leaving you around 5:15, 5:30, in between that. Okay. So today, we will try to, come again? 1 p.m. Then I will leave you at 9 a.m. then. Then I'll leave you at 8:35 a.m. All right. So tomorrow I'll be leaving you a little bit early. So today I'll try to finish up capital gains also if possible. Okay. We'll rush through capital gains because capital gains, this is nothing. We'll rush through capital gains and I'll make you solve some questions also. Thereafter tomorrow our main target is 115 BAC. All the things which we have learned through these 3 days, I'll flip the dosha. Tomorrow is like a flipping dosha day. Okay. So, yes. 43B, that is the last disallowance that we have to deduct. And can you read the heading? Certain deductions to be made only on actual payment basis. Very simple. See, 43B says, irrespective of, could you teach how to present an exam? Yes. I can give you an input on how to present and the tips, how to prepare, everything I can tell you, okay? That tomorrow, just before we leave, I will give you how to prepare direct tax and how to present direct tax, I can help you. Actually, there are certain methods used by me in my CA final and I think it's very effective. I still believe it is very effective. There are certain smarter ways to study direct tax, definitely I can help you. Question paper, if it is possible. I will give you September 2024 question paper. Da. Okay, let me complete it. Day after tomorrow, I will be completing September 2024 question paper. Day. He is asking from some question paper, okay. So don't worry. You can make use of, thanks sir, we get, okay. I'll give you question paper and you will get 80 plus, okay. We will pass, okay. Don't expect question paper. Mass, you believed, my God. My God, today, okay. All right. So, listen. See, the following expenses are allowed as a deduction only if it's a revision for me or you are. Read. The following expenses are allowed as deduction only if payment is made on or before due date for furnishing return of income. Don't read it as ROI. It is return of income. Very simple. Irrespective of the method of accounting that you follow. The following items, if you want to claim it as a deduction, you have to actually make the payment. You have to actually make the payment. When at least on or before due date of filing your return in that respective year. Are you with me? What if you are not making the payment on or before due date of filing return? There will be a disallowance, and that disallowance will be a temporary disallowance that you can add over here. Okay, I forgot to add that point. That will be a temporary disallowance. Why temporary disallowance? What is temporary disallowance? Once you actually make the payment in the next year, you can claim these items as a deduction. Something related to the TDS. Something related to the TDS disallowance. Here, if it is disallowed in a year and you have made the payment in the next year, definitely you can claim that as a deduction in the next year. Are you with me? Now. Which is the first item covered under 43B? Can you read the first item? Read that again. Tax, duty, cess or similar fees. For example, rates and taxes in relation to a building is actually a municipal tax. If you want to claim it as a deduction, you have to actually make the payment. And can you read the second one? What is that? Employees' contribution to SPF, RPF, gratuity or other welfare fund. Employer is, if he is making his out-of-pocket contribution to either RPF or SPF or gratuity fund, you have to actually make the payment to the respective fund to claim it as a deduction. If it is payable, you cannot claim it as a deduction. We are talking about right, employer, okay, you correct the spelling. Employers. Put an R in between. It's employer's contribution, not employee. Correct it. Employer's contribution to SPF, RPF, gratuity and other welfare fund. Can you read the third one? To the employees. That we have already said. Bonus or commission is allowed as a deduction only on actual payment basis. What is item number 4? Interest on loan to scheduled bank or cooperative bank. What is item number 5? Interest on loan from deposit taking NBFC or systematically important non-deposit taking NBFC. What is point number 6? Interest on loan from public financial institution, state financial corporation or state industrial investment corporation. This 4, 5, 6 actually similar. 4, 5 and 6 is all about interest on loan. Only difference is from where you take the loan. Say for example, KS Academy took a loan from a scheduled bank or a cooperative bank. Interest on loan is allowed as a deduction under 36, but it is subjected to 43B. You have to actually make the payment. Are you all with me? Yes, sir. And point number 5, KS Academy have taken a loan from NBFC. You study it as NBFC. Okay. Then they can claim that interest as a deduction only if you actually make the interest payment. That's it. And what is point number 6? KS Academy have taken a loan from public financial institution or state financial corporation or state industrial investment corporation. You can claim the deduction only on actual payment basis. That's it. When you have to make the payment, either in the PY or at least before due date of filing your return. If you are not making the payment, 100% disallowance. And when you actually make the payment in the subsequent year, in that year, you can claim a deduction. Is that clear? Is that clear? Then what is the seventh item? Payment in nature of earned leave of employee. What is earned leave? That leave encashment, do you remember leave encashment? For an employer, that leave encashment is actually a cost. If he wants to claim it as a deduction, you have to actually make the payment to the employee. Then only you can claim the deduction. What is point number 8? Payment made to Indian Railway for the use of railway asset. If you are planning to use railway asset, please make the payment. Because the railway is under pathetic situation, okay? You have to actually make the payment, then only we will give you deduction. It's not passenger, it's for the goods. Passenger, even if you prepay the amount, you will not get the ticket. Yes or no? Especially in seasonal time and all, if even you prepaid, you will be in waiting list 500. It will be like that. For the goods, you will get a credit, but you have to actually make the payment to claim that transportation cost as a deduction. Are you all with me? Is that point clear till now? Now let me give you a question. Based on whatever we have discussed from yesterday, from 28 to 43B, you have to make use of it and you have to give me the answer. It's a fantastic question. So, take your question sheet. Take your question sheet that I've shared with you. And question number 8. It's a fantastic question. Go through that question and give me the answer. I cannot display that question in one page because it is actually a lengthy question, okay? In that question, listen friends, they are asking you to compute the profits and gains of Mr. Shivam under presumptive taxation under 44 AD and profits and gains as per normal provisions of the Act. You compute profits and gains as per the normal provisions. Presumptive taxation, I myself will do. Are you with me? Forget about presumptive taxation. Only compute the business profits. Let's solve it together. So listen, it's again an institute study material question. After finishing capital gain and IFOS very small portion, I'll make you solve some passes and questions that have Pgbp adjustment, okay? So we have some study material question as well as I have some good questions where they have tested for 14 marks and all that we will solve tomorrow. So right now for the time being, let's start with Mr. Shivam. A retail trader of Kochi gives the following trading and profit and loss account for the year ended 31st March 2024. So we will start with the P&L account. So Pgbp net profit as per P&L account. Can you help me? How much is the net profit as per P&L account? How much is the net profit as per P&L account? 50,000. So friends, please keep quiet and listen. So what is the first adjustment? It was found that some stocks were omitted to be included in both opening stock and closing stock, the values of which are given. So they have omitted some opening stock. Omitted means you have to add 9,000. Yes or no? You tell me, you don't have to redraft that P&L account. First of all, don't redraft the P&L account and waste time. When you add 9,000 to the opening stock, what will happen to the profit? When you add 9,000 to the opening stock, what will happen to your profit? Your profit will be reduced. Are you with me? Because opening stock is a debit item, and when you add that opening stock, your profit will get down. Your profit will come down. Are you with me? Are you with me? The balancing figure is profit. You add 9,000, upar, 9,000 will go from niche. Are you with me? So you have to deduct opening stock adjustment. How much is the omitted amount? 9,000. That you have to reduce. Then there is a omission for the closing stock. How much closing stock is omitted? 18,000. That means closing stock have to be increased 18. If you increase credit item, then your profit will go up. Are you with me? If you increase credit item, or it's just like, imagine it is just like a sale. If there is an 18,000 sale, then your profit will go up. Similarly, if there is an increase in the closing stock, your profit will go up. And how much is that closing stock omission? 18,000. So add closing stock adjustment 18,000. It is not necessary that you have to less everything in one side and add thereafter. It's not like that. You can follow the adjustment chronology, no problem. Are you with me? But always put a bracket for the deductions. Otherwise, you will go wrong when you compute the total income. For the examiner, it's okay. You will go wrong when you compute the total income. Are you all here? So actually, ICI is like not that strict when they value your answer sheets. It is normally like that. They are not that liberal too. Not that liberal too. They are just okay. There are a lot of rumors happening around in the industry that ICI will simply deduct the mark. No. They will not simply deduct the mark. That is for sure. Are you with me? Those are just rumors. That's it. Or just gossips. That's it. They will never simply deduct a mark. There will be something that you are missing. That's why they deduct your mark. Are you with me? And there is actually a thing called grace mark. They provide grace mark up to 3 to 5. They normally put grace marks to 3 to 5. Yes, there is. Yes, there is grace marks. I have seen that. Personally, I've seen that. They put grace marks normally because the mark they put inside the paper and the total mark is different. Total mark will be more rather than they put. When you take that verified, answer, verified copy of the answer keys, you can see that. In certain papers, I've seen that. That's what I'm saying. And there is actually a press conference done by one of the central council member who is actually a member of your examination committee also. That person have openly admitted that also. 3 to 5 marks may normally give us grace. Are you with me? So, I'm not saying that they will simply deduct the marks. Then one thing also I can tell you, no examination is 100% fair. It's a reality. No examination is 100% fair. It's a reality. Whether it is ICI, whether it is ICSI, whether it is IAS, NEET, we have a lot of other problems. Whether it is NEET, whether it is dirty, whatever it is. NEET is dirty right now, okay? NEET has become something, something is happening, rumoring around NEET, so let it be there. So the point is, no examination is 100% fair. So what you can do is, don't give them a chance to reduce your marks. You do everything that is required to get more marks. Are you with me? Are you with me? Write every working note, write everything properly. You follow a proper manner, definitely you will get marks. Definitely you will get marks. Are you all with me? Are you all with me? Moving on to the next point, friends. So, where were we? Salary includes 10,000 paid to its brother, which is unreasonable to the extent of 2,000. What is this unreasonable to the extent of 2,000? There will be a disallowance under section 40A2, excessive payments to brother. Are you with me? So here brother is your relative and you have made 2,000 excessive. So what to do? That 2,000 have to be added back. That entire 10,000 has been deducted. So you need to add back 2,000 to the net profit. Are you with me? So disallowance under section 40A2. Under section 40A2. In exams you have to write it in full, okay? You have to write disallowance rupees 2,000 which is paid to brother under section 40A2. This is, I solve, since I'm so lazy, I will not write it in full. But in exams, you have to write it in full. So 2,000, you have to add back. Then what's next? While the whole amount of printing and stationery was paid in cash in one-time payment. Is that a problem? Printing and stationery 23,200 paid in cash. Is that a problem? Yes. 40A3 will come into the picture. If you are making a payment over and above 10,000 in a single day to a person otherwise than by way of prescribed method, then what will happen? You tell me. That entire payment that you've made shall be a disallowance. So 23,200 have to be disallowed under section 40A3. So 23,200 you have to add back. Then what's next? Depreciation provided in the P&L account is 1,05,000 based on the following information. So there is depreciation provided in the books of accounts, that is 1,05,000, that is based on the following information. Opening balance of plant and machinery is how much? 4 lakh 20. That is the written down value as on 31st March 2023 minus depreciation for the PY 22-23. It is 4 lakh 20. That is the opening WDV. So we'll write a working note for the depreciation. Okay. So opening WDV is how much? 4 lakh 20,000. 23 or 20? 20. 4 lakh 20 is the opening WDV. Now, a new plan falling under the same block of depreciation was bought on 1/7/2023 for 70,000. So you bought another new plan. So there is an addition, which is more than 180 days, not less than, more than 180 days. And how much is the addition? 70,000 is the addition. So total will be 4 lakh 90,000. Now how much is the sales value? Sales value is how much? Sales value, 2 old plant and machineries were sold and the value is 50,000. So you have to delete that. Now you tell me, do you have to compute capital gain here? Do you have to compute capital gain? No. Why no? Because the sale value does not exceed the block value. Are you with me? The sale value here, it is not exceeding the block value. Hence you don't have to compute the capital gain. You can simply write 4 lakh 40 and you can charge depreciation on that 4 lakh 40 at what rate? 15% rate, because the addition also is more than 180. So how much is 15% of 4 lakh 40? 66,000. Now let me ask you one doubt. Can you claim additional depreciation? Can you claim additional depreciation? Answer is no. Why? He's a trader, not a manufacturer. So no ways he cannot claim any, no ways he can't claim any additional depreciation. Tell me he cannot claim any additional depreciation and the value will be 66,000. But what is the depreciation that you have charged in the P&L account? What is the depreciation that you have charged in the P&L? 1 lakh 5,000. So how much is excess? You have claimed 1 lakh 5,000 in P&L. Actual depreciation is only 66,000. Is the actual depreciation. How much is excess? 39,000 is excess. You tell me what to do with the excess. Add back that excess. You have to add back that depreciation excess. So excess depreciation. Yeah. So where were we? Excess depreciation is how much? 39,000. You have to add back. Are you all with me? Now what is next? What is next? It is rent and rate includes GST liability 3,400 paid on 7/4/2024. Tell me, are they claiming input tax credit? Come again? Okay, their sales turnover is more than 20 lakhs. But they can do business without taking GST, right? They have to legally. But there can be a case where they, without GST also, they can do the business illegally. Okay. Not mentioned. So what to do? Not mentioned, that I know. Okay, what to do? See, there is no need of any assumption. They are not taking input tax credit. Why? Because the GST amount came as a part of the P&L. The GST is actually routed through the P&L. If GST is getting routed through the P&L, that means they might have GST registration. But for that particular commodity, they are not taking any input tax credit, because there are goods where you cannot claim input tax credit, just like a car and all. If you are in the business of driving school or something, you can take, otherwise not. Hope you know GST law. Okay, yeah. So the point here, what we have to assume is, there is no assumption, because they have routed that GST through the P&L account, and that simply means they are not claiming input tax credit. If they are claiming input tax credit, then the GST paid will become an asset, current asset. They will not route it through P&L account. Yes or no? If GST you are taking input tax credit, it will become your current asset. If you are not taking GST, if not taking input tax credit, then the GST paid will be an expenditure. It will come under the debit side of the P&L. Here they are putting it under rates and taxes. Where is rates and taxes? There are some rates and taxes. Yeah. Rates and taxes, they are putting it under P&L debit side. So the assumption is, not the assumption, the closest facts from the question is, they are not taking input tax credit for that particular purchase. We don't know what type of purchase it is. Are you with me? So you can deduct, because it is actually paid also. It is actually paid on or before due date of filing your return, because In the April, they have made the payment. Are you with me? April is before all the due dates, whether it is 31st July, whether it is 31st October, whether it is 30th November, April is before all the dates. So you can claim it as a deduction. Claim as deduction. But in this question, you don't have to do anything. Why? Already that GST is there as a part of rates and taxes. Already that GST is there as a part of rates and taxes. And hence they have already deducted it. It is deductible also. And hence you only have to write a note. What is that note? GST paid, allowed as a deduction, already debited to the P&L account, and hence no further adjustment required. GST debited in the P&L account, allowed as a deduction, or GST paid, allowed as a deduction. Since it is debited in the P&L account, no further adjustment required. Is that clear? That is also right. That is also right. But in that case also, whether they are adjusting it under deferred tax also, that GST will not directly come to the P&L. It may have an impact through the deferred tax account. That's it. They will not directly debit it in the P&L account. If they are... Yes. Yes, that is also a possibility. Or you can create that as a GST paid, as a current asset also. Then whenever there you are collecting it from your customer, you can cross it off. Your liability, you are creating an asset. Say for example, you are purchasing something. At that time you create a current asset, like a GST paid, all right, or GST or input tax credit account. Then when you are collecting it from your customer through the sales, you have to create the liability and you can cross off that asset and liability. That is the normal treatment if you are claiming input tax credit. You will never put it as a part of a P&L account. Imagine you are not claiming input tax credit, then it will form part of the purchase itself. The purchase cost includes GST also. If you are not claiming ITC. I'm talking about accounting entry. Don't ask me which section this is. Okay. Yep. So I hope that point is clear for you. Always go for the nearest assumption. Okay. Always go for the, in the exam, if the question says they are not taking input tax credit, then it is clear. There is no scope of any assumption. If they are saying they are taking input tax credit also, it is clear. They are not mentioning anything. Always go for the nearest assumption available. Yeah. So don't do anything. Yes. Excellent. So let's move on. What is next? Other expenses include 2,000 paid as donation to public charitable trust. It's actually a deductible item under 80G, but the question is asking us to compute what? Pgbp profit. So you don't have to do anything. You have to disallow it because you have already claimed it under general expenses. While computing business profit, it is not allowed as a deduction. It is allowed as a deduction from your GTI, gross total income, under 80G. So for the time being, you can add it back. So add back donation to trust. Yeah, trust. And how much is the donation? 2,000, right? You have to add it back. Yes, under 80G there are 4 categories. Category 1 without any ceiling limit, 100% deduction. Category 2 without any ceiling limit, 50% deduction. Category 3, 100% deduction subjected to ceiling limit, that is 10% of your adjusted total income. Category 4, 50% subject to ceiling limit, that is 10% of adjusted total income. In YouTube, I have done a revision lectures for chapter 6A. You can actually check that, okay? In YouTube, I have done a revision lecture for the chapter 6A, and you can actually check it off. It's actually old, but still relevant. It's actually old. I think I've done it last year or something, but it's actually relevant because there is no much amendments. There is no amendments at all under chapter 6A. Only a new addition, that is 80CCH, subsection 2. There are no changes for the existing provision in chapter 6A that you can actually refer, because I'm not planning to cover chapter 6A. I want TDS amendment. TDS amendment, there is only one section, that is 194BA. YouTube name, my name, CA Jose Kurian, you can search. All right, so where were we? That public charitable trust. Now you have to have a analysis on your P&L account. Opening stock is there, no problem. Purchase is there, no problem. Gross profit is there, no problem. Salary is there, no problem. Rent and rates already adjusted. Interest on loan, no problem. Depreciation already adjusted. Printing and stationery already adjusted. Postage and telegram, no problem. Loss on sale of shares, there is a problem. What is the problem? Under capital gain, not under PGBP. Are you with me? So what you need to do is, you need to add back loss on sale of shares. It is 8,100 and it should be under capital gains. They are not asking us to compute the total income, but still let's write it. Loss is 8,100. And there is one more problem. This loss can be set off only against income under capital gains, because capital gains head loss cannot be adjusted with any other head of income. So we don't have to do anything. You can simply carry forward it to the next year. How many years you can carry forward capital gains head loss? 8 years. Which is the section? Section 74. Under section 74, it is the set off and carry forward of loss from the head capital gains. Are you with me? Are you with me? Then, what is next? Other general expenses, okay. Net profit we have taken. Sales is there. Closing stocks is there. Gross profit brought down is there. Income from UTI, what to do? Under IFOS, it should come under IFOS like dividend. So what to do? You need to less it under PGBP. UTI, what is UTI? Unit Trust of India. How much is income? 2,400. And you would add it under IFOS. $2,400. Bus. Can you help me with the PGBP profit? 1,30,900 is the income from PGBP, and you have capital gains loss 8,100 and IFOS 2,400. Click a picture or something if you want this. You have one more thing, not yet over. Question is not over. We have to compute the presumptive taxation. Even though we didn't study presumptive taxation, I'll solve it here, okay? Yeah. So tell me, what is presumptive taxation? What is presumptive taxation? There is a section called 44AD, presumptive taxation. What is presumptive taxation? See, normally you have to compute your income like this. That means from the income you have to deduct all the expenses. If disallowance is there, you have to adjust that also. But there is one more provision that say an assessee can declare a percentage of his turnover as what? Profit. Assessee can declare a percentage of his. Are you all listening? Or are you guys thinking about the break? So listen, assessee can declare a percentage of his total turnover as his deemed profit. That provision is said to be what? Presumptive provision. So under section 44AD, you tell me how much is the turnover of this guy? Out of this, which is turnover? Which is turnover? Sales. That is 1 crore 12 lakh 11,500. So we will write down that 1 crore 12 lakh 11,500 is his total sales. 44AD says 8%. And they are also saying if the gross receipts are received either by way of account pay check, that means you are receiving money under either account pay check or account pay bank draft or ECS or through prescribed electronic modes, then what you can do, instead of 8%, you show only 6%. So in this question, under the notes or somewhere they are saying, assume that the whole of the turnover received by account pay check or ECS. So what you can do, you can declare only 6%. And how much is 6% of this? 67 lakh. 6 lakh 72,690. Now you tell me which is better. Show the original profit. That is better because that is only 1,30,900. If you go for presumptive taxation, your income is 6 times high. It is income, okay. Even though the heading is presumptive taxation, it is presumptive income. On this income, you have to apply the rate of tax to compute the tax liability. Are you all with me? Great. This is the final answer. So you have to say 1,30,900 is a better option.
To purchase recorded lectures and textbooks, visit our website www.cajoskurian.com.